Good morning. Good morning, everyone. So let me give one more minute for others to join because some have just joined through the wrong link. So let me wait for them. So inform your friends, those who are sitting for September exams, that we have started our mapping sessions so they can join because we have a session throughout the day. So we have to discuss certain things. Okay. So quickly pass the message to them as well, and then we'll continue. So before I'm continuing, how many of y'all did the mock paper? So I'm ready. Drop a message. Those who did and those who didn't. Rimas, did you do the paper? And Malik, I did. You did. I saw your papers. Yeah, for a reason only I'm asking, because you have to try that paper. It is not to just to estimate what is your exact level, but you need to understand what is your progress and determination. Okay, let's continue. Now today what I wanted to discuss with you is some critical parts. So before I move into the critical parts, let's understand what is this taxation. Okay. So when it comes to taxation, guys, how I need to prepare for the exams is really important. First, we'll understand what we need to do at home, what are we going to discuss here, and how these things needs to be reflected, and how to improve my answering skills. How to improve my answering skills. How to read the questions. Sometimes, now I observe certain friends of y'all, or it might be you as well. You all have read the question, you know the concept, but you have choose the wrong option because you have not fully involved in understanding the theoretical aspects, because you're not giving prominence to that. You study at the class, you revise it on time. It's okay, but still there are certain concepts that you need to go through. It is really important. So when we are preparing for the taxation paper, it is really important to understand what are the areas that we have in the taxation. So as a candidate, I should know about the income tax. So when I say income tax, technically this income tax is classified into different parts. It's more than 50% of your sales, correct? So this income tax will be an area where you have to score around. There will be a 15 marker for you. That's an obvious question. There will be definitely a 15 marker for you. And another 5 to 10 marks. Another 5 to 10 marks. Okay. There, where it will be tested in your section A. Will be tested in your section A. Now, when it comes to section B, section B are mostly will be a 10 marker. So section B is your 10 marker questions. But how examiner is going to come after you? Sometimes it's possible to come out one of the income tax topic as well, particularly your chargeable gains, your CGT, or capital gain taxes. So he can come after this from an individual's perspective. So these topics lies under income tax. Okay. So then also you need to understand, to evaluate your income tax, you have your property income, correct? So that is your chapter 3 if you have studied with me. So this property income, you need to understand what are the rules behind these residential properties, accommodations, and everything. Letting. So you need to know what is your PRR, private resident reliefs, how to use these private resident reliefs, what are the conditions behind it. Now these are theoretical points. So first of all, you need to absorb this understanding. That is important. It's not something that you directly jump into the question and then you try to find out your answer and you are not getting anything. Okay, you understood, you're not getting anything. What you need to do right away, you need to understand, where should I go back to my theories? You need to do your investigation before you come to me, because once you read that topic, you will get an extra mileage. With that knowledge, now you need to retry that question. Okay, you read the question. Sometimes while reading the question, you would have misunderstood the part. Okay, so it is critically important to determine what are the rules which are hidden inside this property income. Then you need to focus on your employment income. So when it comes to the employment income, I told you technically. Now this is focused on your chapter 3. This is where you need to give your reference. Now this will be focused in your chapter 4, chapter 5, and if I'm not correct, the national insurance contributions, that will be chapter number 9. I'm not bit sure. Just check the content now. Okay, go through my tips. Now all these are your theoretical areas that you need to be sound. You need to understand what are your national insurance contributions, how to calculate your class 1, how to calculate your class 1A, then how to calculate your class 4, what is the percentage. Now those information will be provided in the fact sheet. Let me take you all through the fact sheet in a while. What sort of information is provided for us in our exams? But before that, you need to understand, okay, so these are the areas which might be tested for me through employment income. So if you have done the mock paper I have sent, you would have received a question from this particular part. So if you were not sound in this part, obviously that area would have been a little bit difficult area for you. Okay, next what I wanted to also highlight. So you spoke about the property income, you spoke about the employment income, then you got your trading income. Now all these are for the individuals. For whom? Individuals. So first, you also should have some sort of a common sense when we are trying to answer our question. First of all, take a deep breath. Read the question in that perspective. Now, tax paper is something that you have to really read and get the point from the question. Get the point from the question. That's where you have to look for. Okay, what is this requirement? Let's do the practical part of it today with me when I'm practicing the questions. But I'm giving you the approach now, so you are going to master your mind. Okay, then when it comes to trading income, now see, all these incomes are, take me. So I'm an individual. So what are the ways I can make money? Correct? The incomes that I'm earning, if it is more than the thresholds, government will come after me. The tax authority is going to come after me. Now this is the basic idea. So you have to make sure your understandings in a frequency where, okay, an individual is making an income through property. What are the rules that I need to know? Adhere. Then an individual is making his income through employment. What are the factors he would be involved with? Now we need to shed lights on all these topics which I mentioned to you. Then when it comes to trading income, You have to understand the trading income. They will be asking you to determine your taxable trading profits. Okay, taxable trading profits. What are your taxable trading profits? So to find out it, you need to have the knowledge of what? What are your allowable expenses? What are your disallowable expenses? Correct. So this is your theory now. So you need to practice questions around it. So if you take an organization, since you are finance students, you prepare your P&L. That's what we are going to check here. So when you are checking your P&L, you can't tax an individual based on the accounting profits he is making. I need to convert these accounting profits or these trading profits to taxable profits. So when you're determining your taxable profits, there are certain expenses which is allowed for you to reduce from your profits. There are certain expenses which is not allowed for you to reduce from your profits. Okay. Then I'm giving you an overall comprehensive idea. Okay, I'm giving you a comprehensive idea. We'll go through these things individually later through questions. So today what my plan for you all is to take you all through a mock question. We are going to go through some section A questions, some section C questions to understand where are we standing, which means it covers 100% of your syllabus, but not completely, I would say, but certain aspects will be discussed. So we are going to cover that shade today. But before that, let's make the overall plan. So after I'm making the overall plan, I will tell you what is your study plan for the next couple of weeks, what you need to do. Okay. So when it comes to this trading income now, you found your taxable trading profits. And another special important point that you need to understand when it comes to trading income, we don't use accounting depreciation as our depreciation to reduce or as an allowable expenses. Now, depreciation and amortization is not an allowable expenses to the organization. Instead, you need to determine your capital allowances. Now, this is not your theoretical class, but I'm just giving you the debrief since we have discussed things in deeply. Now, you need to understand how capital allowances is working for individuals. Now, that is a critical aspect because we learn the capital allowances for companies as well. So, you have to be really careful to make your judgments, to make your decisions, how capital allowances are calculated for individuals and how capital allowances are determined to companies separately. So you need to back up your knowledge there. Then you need to also back up. What if the business is making a loss, a trading loss? Okay, yet again, this is another comparative topic. Why do I say so? Because this topic is also discussed in companies as well as this topic is discussed for individuals. Now, for companies, you have separate rulings. For individuals, we have separate rulings. So we have to evaluate, okay, what are the conditions to relieve losses for companies? What are the conditions that we need to be aware of in order to relieve your losses for individuals? So that is a critical aspect that you need to determine. Okay. Then, so you discussed about the taxable profits, you discussed about the capital allowances, you discussed about the trading loss. Also, we need to be aware of your for individuals, capital gain taxes, the rules. So when it comes to capital gain taxes, we had 4 parts to discuss. how to utilize your loss reliefs for capital gain taxes, how to determine on your chattels and wasting assets, and the basics of capital gain taxes. And also you determine the other parts of the calculations. So you need to make sure to brush up your knowledge in this particular part. So what I'm trying to say at this point, now see, all these sections, all these parts are tested under your income tax. So your income tax will carry out questions from right and left from these areas. So in an examination point, examiner can't come through all these topics in one paper. When it comes to a part which is tested in section C will not be reflected in section A. So he is going to be picky. But we don't know how he is going to attack us. So we have to make sure all our defense system is working. So I need to make sure my theoretical understanding from this part of the section is really brilliant. So that is one of your homework that you need to address yourself. That is really important. Okay. So then coming back, once you understood about the income tax, let me also bring up things to corporation tax. Now it will be a quick discussion. So next part is your corporation tax. So under corporation tax, you need to understand how companies are taxed. How companies are taxed. How to find their taxable total profits or tax adjusted trading profits. They can also call it as tax adjusted trading profits. So how to determine the chargeable gains here. How to relieve the losses for companies, and what are group of companies. Now that is also important when it comes to companies. You learned about the group principles, the group of companies, the rules behind those things you need to evaluate, and also the capital allowances for the companies, because companies also make profits. They will also have assets to generate income, so they will have depreciation. Wherever there is depreciation, you need to make sure you calculate capital allowances. So your capital allowances is an important working. It's an important chapter. It's an important area. Those are the areas which will be obviously tested in your paper. So you will go across a part of those calculations that can be appear anywhere. Now in this paper, let me tell you something. So some students think, okay, I'm targeting section C, income tax and companies. So income tax, there are several sections to check. So examiner can come through different angles. In the previous exam session, he was asking for a loss for some students. So this time it doesn't mean that he will not ask you a loss relief for individuals. I'm talking about this. He can also come through employment income area, which is, I'm doubting that that would be a 115 marker this time. But now don't be biased to what I said. So that is one. It is a 50-50 chance. It might be there, it might not be there. So now don't focus on those chapters and prepare yourself. But I'm saying that give equal importance for that particular part. So all these particular parts, or sometimes they can give you a mix. And he can ask you, okay, so you are a self-employed person. If you are a self-employed person, if you are paying your income tax, is cheaper, or if you convert your business to a company and pay taxes through a company, is cheaper. So now you need to bring your comparison points. You need to construct your answer to determine if you are running as a company, what is the tax that you need to pay, and if you are running as an individual, how much is the tax that you need to bear. So you need to compare and give solutions. Now this is an outcome. He will bridge this. So this is how we need to prepare for exams. Okay. So I'll tell you the better way to do those things after giving you some analysis of what we are going to look after. Then the next important perspective I would also like to say, value added tax. Now the value added tax. So sorry, I couldn't mention the marks for corporation tax. Let me finish that and come back to value added tax. So this will be an obvious 15 mark again. This will be an obvious 15 mark. So we got 15 here, you got 15 here. So technically you are scoring 30 marks. And yet again, I would say there will be areas they can test another 5 to 10 marks from your section A, sometimes in section B. Okay? So they can come out of this. Now see, if you are really confident in these topics, so if I budget around 20 marks here and 20 marks here, 40% of your paper is covered. 40% of your paper is covered. But this 40% will give you equivalent opportunity to understand the rest of the paper up from 50 to 60%. I'll tell you how does that works in a while. Okay, we'll do some questions. So today we are going to practice some questions. So you're going to do a mock paper with me. So when we are practicing this mock paper, you will understand what sort of an area that I'm discussing about. Now VAT. Now value added tax questions, more often than not, it's very famous 10 marks. And in section A and section B, you can guess 2 to 4 marks, which means technically you can get 2 questions from this part. Okay, so VAT is mostly coming or falling into section B, but it doesn't mean that in section C 10 marker they can't test. So there in the section C there is another 10 marker also. So but if you observe your past papers, he would have come after VAT and inheritance tax. I'll discuss both of these together. Mostly it is reflecting in section B along with the CGT, the capital gain tax. So when it comes to capital gain taxes, this CGT for companies and the individuals, the rulings are different. So this will be a 10 mark. This also will be a 10 mark. So I have to make sure I know about income tax, corporation tax, value added taxation, and inheritance tax. So what you need to do now? So technically you would say, sir, I need to study the entire syllabus. Yes, 100% of your syllabus is tested. So now, how my exams is on 2nd of September. When are you sitting for the exams? You are sitting for the exams on 2nd of September. Okay. So first of all, I'll give a plan for the full-time students. So the full-time students are the students who are not going for. So if you are a full-time student, now there is a separate principle. I don't know who is an early starter. Some students used to start things early. Some students used to start things late. But I'm not going to give you your time, but I'll give you the way that you need to practice your questions. So generally what I used to do during morning hours, I mostly used to do my section C type of questions. Okay. So sometimes you can do this in your afternoon hours as well. But how are we going to practice this? So every day you need to mix your questions from income tax. You need to definitely do an income tax question. You need to definitely practice a corporation tax question. You need to discuss a question on value tax, inheritance tax, and capital gain taxes. Every day until you go for exam, I'm talking for full-time students, you need to practice at least one question a day. So when I say practice one questions a day, this will be a mix of section A, B, and C. So for instance, let's assume I'm discussing a 15 marker, or I'm practicing a 15 marker today. So which means I'm not going to do any section A for this particular topic. So I might do section A for corporation tax. Then section B, you obviously it's going to be VAT, capital gain taxes, and inheritance taxes most of the time. So that are multiple task questions. So when you answer, you choose a question. So all the rules needs to be circulated every day. It needs to be a cycle. So the part-time students, you need to make sure at least to complete your these 5 sections every 2 days. Every 2 days. For an instance, let's assume if I'm starting to study around 7:30. So if I'm going to bed around 11:30, so you got 8:30, 9:30, 10:30, 11:30. 4 hours. Let's assume there is a dinner break also. So 3 hours. You got 3 hours. During this 3 hour, so your entire paper, you need to answer within 3 hours and 15 minutes. So you are having 3 hours in your bank to practice minimum 3 parts of your syllabus. So it can be any part of your paper. You can choose an income tax, you can choose a VAT, you can choose capital gain taxes. Don't just target one part of the question or one part of the taxes and go for your exams, meaning that if you know income tax and corporation tax, so those are the 2 types of taxes which will be massively tested, because they cover both together around 80% of your syllabus. So don't know, most of the students, what they do is when they do last minute preparation, they used to focus only on these 2 concepts, and where they lose some easy marks in VAT, inheritance tax, and capital gain tax parts. So this have to be a habit for you from today. So this needs to be a habit. So then what happens next week, like when you start practicing this, now you will start to evaluate each and every question will teach you a particular part of the conditions. For an instance, if I take a question from income tax, so that income tax can be asking you the requirements over property income. So now you're going to go through the questions and the principles and the rules that you're supposed to remember for property income. I asked you all to prepare your study note or your short note. If you have, it's an easy look. If not, now what you have to do, once you answer this question, you reflect your answers. So check your answers. How is it? You don't want to match 100%, what the suggested answers say, but look whether you have arrived at the respective principles, of that particular question's requirement. Right. One, then you have to go and make sure throughout next week, I'm talking about throughout your next week, this is the way that you need to discuss. You need to discuss your theory plus questions, because, and then we have to approach for mock papers to boost our confidence, because this next whole week you're going to practice all these questions, so which means you're going to brush up your knowledge from income tax, you're going to brush up your knowledge from corporation tax, value added tax, and inheritance tax. So your mind is getting set for to answer questions from any area, and you have a fearless approach to the mock paper. The mock paper that you attended before the marathon session, right after your theoretical classes, it just to test your position, how much you have grabbed from your theoretical marks. Now, most of you all have scored less than 60%, except. So, it's not a bad mark. So, don't, some students have scored around 24 marks, to 30 marks, 38 marks. Okay, but don't lose your confidence there. It is not the point to lose your confidence. As I told you in the theory session, my attention to understand where Malik is standing, which area Amra need to pressure, so which area Shape needs to pressure, which area Rimas needs to pressure, or Yusuf. So what you have to do now, you have to have this approach. So this study plan is a must, guys. This is a must, because when I meet you next time, not tomorrow, I'm saying next week, next Saturday, I'm going to ask you areas from a different angle. Okay, so if you have done all these things, now you are going to make yourself busy for next whole week. Make sure no functions. Try to avoid funerals, unnecessary. I mean, if distance funerals means, it's okay, but if you can quickly make it, fine. Apart from that, you don't have anything to make. Say bye to lazy. You're paid a big amount of money for your exam paper. I don't want any of my students to fail this paper. Why do I say? Because you need to put this hard work. If you invest your time on this, the higher probability is to be on the safer side. You got it? So I would love to make sure I'm crossing the border. Otherwise, you need to repeat this again. That's a biggest pain and a headache. Trust me, it's a biggest pain and a headache. And you will obviously forget 60 to 70% by the when the results come. Okay. And the next thing, since you all are sitting in September, it's fine. Now in December and March, after March, the syllabus will change, particularly for taxes, because the tax rates will change. So can we do the, can we do the entire exam? You mean in the marathon session to do the entire exam kit? It's not possible. Exam kit is, that's what I say. No, I'll tell you this comment. I would have told you in the theory sessions as well. You don't want to kill the entire exam kit to pass. If you have your cycle like that, if you choose questions from all the parts, so your mind is going to understand what you need to know for the exams. The question is given for you to test your understanding. How much now the next important fact which no one understands is the literature of the examiner. The way he is asking you the question. So to understand that particular point to your mind, you need to do the question. So you need to practice section A, section B, section C. So we will discuss this entire paper. I'll come after through important points. And I forgot to say something. Administration part of taxation. It can be for inheritance tax, it can be for VAT, it can be for corporation tax, and it can be for income tax and capital gain taxes. I need to be aware by when I need to submit my tax returns, by when I need to make the payment. The payment dates are different, the submission dates are different, penalties are different, interests are different. Now there will be questions from this area. Don't skip this part. And there are some easy questions, and these questions sometimes it's a bit tricky when it comes to section A, because in section A, if you go wrong in choosing two options, your one option is correct and the other option is wrong, most of y'all got the first one correct and the second one wrong, 0 marks. Because section A, B, and in the section C, the 10 marker is marked by whom? Computer. In the section C, the 40 marks I told you about income tax and corporation tax, that is marked by your exam. So he will have the score. So make sure you're showing your workings to section C. Even though you have workings for section A and B, not necessary, not essential. We don't require your. That's why I didn't ask your workings for that. But some students have submitted their workings. I didn't even look at it. I didn't even look at it. Okay. So no worries. I will be practicing pre-mock paper with you. And for tomorrow, I will be using the practice platform to bring some specimen paper questions and we'll discuss it. Now today, I wanted to discuss the mock paper that I did with you. It's a good mock paper. It's a very good paper, I would say. And now let's see how is our answer. Now you can take out your answers, okay, and keep it there. I marked your section A, B, and some of your section C marks. I didn't release your marks because you might be thinking, why didn't I give your marks? I told you 2 minutes back, everyone scored less than 60. Okay, so there are marks within 20, there are marks within 40, there are marks within 60. Now don't put yourself that, okay, I'm being literally bad. Am I in a position to face my exams? No. If you have, I told you, right, if you have scored 30 and above, brilliant. Okay, so almost everyone is above 30, which means we can work and get through the line. Now, you will have 3 hours in your examination. First of all, let's try to understand how we are going to utilize this 3 hours. Rimas, you asked me a question. Did I completely answer your question, or like you wanted to say something else? Quickly, let me know. Okay. Now we have 3 hours in. So, Kai, were you able to completely answer the whole entire part? 85% of the students completed the whole paper, or at least tried to answer. That 15% could not. But trust me, that 15% who did not answer scored more. Who did not complete the, now that's the evaluation of results I'm giving. Okay? But it is better to answer 100%. That's the best thing. But I'm trying to say is about the quality, the planning you did for the paper. Sometimes you might have not finished your questions. Now there can be certain questions which is really not going into your head. Don't stay there. Come to that question at last. That's a technique. Particularly the questions at section A, B, you got an option to choose. So don't make all the options. Now I'm telling this, the questions which is highly doubtful and you are not really hitting your head to get the answer. It's not coming to your head. So rather than wasting 5 to 10 minutes there, you can utilize that 5 to 10 minutes in another question. Now you can't do this for the first time in your final paper. So which means you need to practice more mock papers now. Correct? So now today I will not, I'll give it tomorrow because tomorrow also we have the marathon session. So the next week I'll ask you to do a paper which is in your specimen, okay, in the ACCA thing. So you can go and try that paper with the time. They also, the time is reflected, so you can do the questions on a time. So then you can see your progress there. And you can utilize your skills before you, for an instance, let's say you got stuck somewhere, then you need to understand, you need to navigate it to the next screen, the next question. Don't stay there. So prepare your mind for that as well. So we have to be really smart to attack and kill this paper in that. Now all these setup and the things, still I didn't do any questions. I'm making my plan. I'm setting up the tone for you. This tone you need to practice. That's important, not only answering the questions, right? So section A, section B, and section C, all the questions are must for us. There is no question that we can leave. So which means I need to answer 100%. So another next important thing that you need to understand, if you are missing something here, don't waste your time. Move to the next questions and make sure you're flagging this question and you answer the rest. And finally, let's assume there is only 2 more minutes to end your exam. It's not a paper that you're writing. Obviously, it will freeze your time. Make sure you quickly jump into this flag. Choose an option. At least blindly you're getting a mark. Okay. So make sure you are providing an answer to section A and section B. All the questions needs to be marked. Don't leave unattempted. Please don't do that. Now, without knowing, even if you get 2 marks, will you say no? All right. So if you're struggling and if it is not, I'm saying that this is the last point. So don't have this point to your first as a first preference. This needs to be your last preference. So the plan needs to be your section A and section B, we have to answer 100%. You can't tell me, so I missed 2 questions in section A, 2 questions in section B. You can never tell me because you got an option to choose. Section C is separate. Okay. And then the next part of the discussion is where to start. So should I start from section C? Should I start from section A and go in an order? Or how? I would say it depends on you. So how you're going to do that? First of all, the next mock that you're going to practice, do from section C and C. The mock after that you're going to practice, you need to do from the normal order. Then you can find which method is suitable for you. Now, I can't tell this method is suitable to Yusuf. This method is suitable to Kaif. I can't tell that. Correct? You need to understand this is my point. This is my skills. This is my confidence. So that part of the practice is on your hand. Note down that point, practice that point. So guys, I can sit here and tell you and instruct you. I can't like make sure, pull you and push you. I don't like to do that. You make sure you mark these things and make sure you follow the things that the study plan I gave you. Do that. For part-time students, within 2 days, you need to answer a whole area. You need to cover all the ones. Full-time students, every day you need to come. So there are so much of questions. Let's assume you're practicing 5 questions a day. Or you can practice more than that. Okay? I'm telling that you can practice more than that. Because section A, B, and C, a mix-up only you're going to answer here. You're not going to answer completely. So minimum if you answer 5 from all, so 2 weeks, 14 days are 14 into 5 is how much? 70. You know, I'm very weak in maths. Okay, so it's 70. Roughly 70 questions is covering 100% of it. I'm saying the minimum. Okay, that's a minimum margin. So that's how we need to plan. Okay, clear? And I think I need to answer one or two persons' queries. Most of them I answered. Sorry if I'm delaying. Ping me today also because I was quite a bit busy running up and down. Most probably I will answer tomorrow night. Okay. After 7:08, I'll start answering your queries. So drop a message by Monday if I did not attend your queries. Okay, fine. Then, should I explain you the mark allocations for this? So section C, you got 15. So 2 marks is how much? It will give you 30 marks here. Correct? Here you get 15 questions, 2 marks, another 30 here. Correct? Section 3, there are another 3 parts, one 10 marker and two 15 markers. So 30, 60, 90 with this 10, 100. That is the style of your exam. Okay, fine. Now, let me start practicing the questions. Before practicing this question, let's quickly cross-check what sort of information is provided to us in the exam. So our mind knows these are the headings. I'm not going to deeply discuss these things because these things are given in your exams. So from income tax, they will give you the tax rates, what you need to calculate. And they are talking about the personal allowances. So you should know what is this transferable amount. What is the transferable amount? Who can transfer? And what is the condition for that? Who can tell me? It is transferable between couples. Very good. Can brothers transfer? No. It needs to be partners. Either you are married or a civil partner. You got it? So what are you going to transfer here? What are you going to transfer? Your personal allowance. The person who is not utilizing his personal allowance completely can transfer the unused amount to the other person, but how much he needs to transfer? 1,260. That's the whole amount, not maximum. The whole amount you need to transfer. So the next question is, sir, can I transfer only 1,000 and retain 200? No, you can't. Be very firm with the decision. You can't. You need to change entire 1,260 to the partner. By that, you are getting a tax benefit of 252. How did I say 252? Because on 1,260, you need to calculate at 20%. So why are you saying 20%? Why can't it be 40%? Can it be 40%? It can never be 40%. Why it can be never be 40%? Because you can transfer this allowance only between basic rate taxpayers. So I'm 100% confident that it is going to be 20%. So 1,260 is 20% is going to be 252 pounds. That is the benefit the other taxpayer who is having more taxable income is going to receive as a result of this transferring the unused personal allowances. Unless otherwise, in all the other occasions, it can be any part of your income taxes. You can't move because personal allowance is not flexible. It's a fixed, a stagnant amount. Got it? Because some students have doubts in this. If you have doubts, if you are a student who is in that crowd, please make sure you ask me this question again. Then, you know the rule behind this income limit of 100,000. What's the rule behind this income limit of 100,000? If my taxable income, so not your total income, it is your total taxable income. If it is exceeding beyond this point, you should know what you need to do. If it is below this point, you are receiving the 100% personal allowance. If it is above this point, it is going to be tapered. Tapered means it's going to be restricted. Up to which level? 125 and 140. To this point, it is going to be shrink. Now, when I say this, you should know the method to calculate that. You got it? That is important. Your first question is that. We'll do the first MCQ with this way. Then, the residency test. What is this residency test? When it comes to this residency status, so first of all, you need to understand the automatic test. There are three tests that you need to understand. So are you qualifying as a tax resident in UK? This can be a question. So you need to understand this 16-day rule and all the other rules. You don't want to remember, but you need to remember something else. What are those? Ties. So what are ties? What are the types of tie we have? We have family tie, work tie. Then now you need to answer. This is not theory. This is revision. Country tie. What are the next other one? Only one is there. Only 4 ties, right? 4 or 5 ties. Now see, are we lacking? Is it an area to look? So don't know. Some students said, okay, the ties is given in the fact sheet, so I can remember. You come here, you don't know anything, to be honest, because you don't know the ties. Now you need to make sure you input those ties and we practice these questions. MCQs. Now these parts will be obviously section A. This will be coming to your section A. That's why it is really useful. Section C, he can test, but he has not tested so far. He can test. He can ask, should this person really needs to submit his income tax return? So to that level, he will not test you in the skills level paper. That's later. Okay. But I'm saying this will be an obvious area. So first we need to check the automatic test, then non-UK resident test, second automatic UK resident, and then we have to go through this. Am I right, sir? Yes, you're absolutely correct, Premas. So there are 3 areas that you need to check. First, you need to check, are you automatically being the resident of the country? And then the second thing is, are you being or not being a resident of the country? Then you apply for this. So make sure you're having a summary, or else I'll provide you a summary by tomorrow, because I want you all to go through the work ties today. Okay? Because none of y'all answered me, so I'm not going to repeat that. I want you all to go through that part. We are going to get 2 marks there. I will not waste my 2 marks there. Okay? Because this is provided, no information is given. More information given means I need to make sure to profit out of it. Fine. Next they're talking about the child benefit. Okay. What is this child benefit income tax charge? Who can explain this to me? What is this child benefit income tax charge? What is this? Now see, through the fact sheet itself, I'm trying to recover your areas. What is child benefit income tax charge? Amra? Child benefit. Okay. No. For a couple only this will be given. Otherwise you don't know for whom a child is given birth is that. So a child benefit is given to whoever raises the child. Okay. Now this benefit is given by the HMRC to you. They gives you the benefit already. But when it comes to the point of taxation, we need to understand my total taxable income. What type of a taxpayer am I? To decide that, if my income is less than 60,000, The benefit I received from HMRC, I don't want to pay them back. I can keep the 100% benefit with me. I can enjoy. So in the exam points, if examiner is asking you this question, unless it's a section A, if it is a section C part, he can come in under income tax, he can test this. You have to mention this particular income taxpayer's total income is less than 60,000. So therefore there won't be any child benefit charge paid. So leave a comment. It's important. It will give you a mark. Did you understand that point? Now this is a situation if your income is less than 60,000. So 60,000 means whatever the benefit you gave, I'm not going to give you back. I'm going to keep it myself. The second situation, if my income, so listen to me very carefully, if my income is falling between 60,000 to 80,000, between these two limits, 60,000 to 80,000, every 200, I need to get the percentage. Then from the child benefit amount, now for an instance, let's assume if my income is 70,000, so this is an increase of how much from 60,000? From 60,000, it's an increase of 10,000. So 10,000 means every 200, what is the percentage? So I need to pay back 50%, correct? Let's assume I'm receiving a child benefit of 3,000 pounds. So this is a benefit I have received. Who gave this? HMRC. Can I enjoy this 3,000? No. I need to pay 50% of this, which is 1,500 needs to be paid back to the tax authority. Okay, from your, after calculating your income tax liability, this 1,500 also needs to be added. It will increase your liability. Did you understand that? How to determine that? So every 200 that you receive after 60,000, you get the percentage. From that percentage, you need to pay back. You need to pay back. Then, if it is above, now third situation is where, if it is above 80,000, if your position is above 80,000, completely the entire 3,000 I need to pay. Did you understand that? If you lock this point in your mind, you can answer any questions from this. These are the three situations. You need to lock all these understandings. Then it's the computational technique. Correct? Clear? Now, car benefit percentage is given. So I know that for first 51 to 54 grams, it is 15%. Beyond that limit, 16%. Now, where I should use it? That's the next question. What is this car benefit percentage? Now, you know the percentage, but on which occasion examiner can come after you? Where you need to check? Who can answer that question? Very good. For employees, for individuals, if I am working for an organization, if I am employed, I will receive fuel or car benefits. I will receive car. So when a car is provided, how it is being taxed? That benefit is taxed. How it is being taxed? So for an instance, let's assume my company is providing me a car which is 20,000 pounds. The value of the car is how much? 20,000. Now this car can be an electric car, can be a petrol car, or it can be a diesel engine. Correct? Am I correct? Because the rules going to differ based on these fuel modes. Because electronic vehicle have separate miles and ranges, electric range to determine. Okay, so the petrol vehicle has separate percentage to calculate. Diesel have a same way like petrol to calculate, but there are two things you need to understand. If it is meeting the standard, you don't want to pay the surcharge. If it is not meeting the standard, you need to pay a surcharge of what percentage? 4%. However, the overall percentage that you need to be, the maximum percentage that you're going to be is 37%. Now, what is this percentage I'm discussing? That is the amount of tax that you need to pay. From this 20,000, 37 is how much? That's a maximum limit I can pay. So I need to find based on my carbon emission. Now, if I'm emitting 100 grams of carbon, if my car is emitting 100 grams of carbon and it is a petrol powered engine, okay, so for the first 55 grams I know it is 16%. So the next 45 grams I need to charge how much? Because out of this 100 I know 55 is 16%. For this 45 I need to divide this by 5 multiplied by 1%. So this will be 9%. So 16 plus 9, 25%. So my car's value is 20,000. So 20,000, 25% is the taxable benefit. The benefit that you received, how much is taxable? So 25% of 20,000 is going to be 5,000. Did you understand that? Now let's assume if this is a diesel powered engine, the same percentage, diesel powered engine, the same percentage, and it is not meeting the standard. So for this 25%, I will add another 4%, that is the surcharge. So you need to calculate 29% because that is emitting more carbon. That is emitting more carbon. Did you understand that? If it is meeting the standard, you don't want to take that 4%, the same as that you calculated. However, this is an annual figure. Make sure to read the dates. These are the areas we might forget. Check the dates, to which period it belongs to, because for individuals, you calculate your taxes based on the tax year. So my company might be giving me the car from December. Let's assume on 31st of December they gave, which means January, February, March, 3 months I need to make the taxable benefit payments. You got it? Did you understand that? Is that clear? Because don't calculate now, this 5,000 is for 12 months. How much is for 3 months is what you need to consider. So be very careful when you read your question. So look for dates. It's an important area. Understood about the child benefit and the car benefit percentages. Apart from this, if company is providing fuel, what's the benefit you are getting? The base figure to calculate the fuel is 27,800. So that's a flat figure that they are giving. On this 27,800, you have to utilize the percentage. Then the company van benefits. So they are giving, if the scalar charge is 3,960 and the fuel benefit is 757. This is for the van. For van, they have given the fixed amounts. These are the benefits. Then there is no benefit if your car is producing zero emissions. Firstly, if you are emitting zero emissions, no carbon, so I don't want to tax you. Then individual savings account, ISA. In your savings account, maximum you can retain. It can be a total of your total shares. Okay, any savings that you're having needs to be a maximum of 20,000. Up to 20,000, 0% tax is charged. Above 20,000, the amount will be considered as the taxable income. You got it? Those incomes will be considered as your taxable income. When you're computing your income tax statement, you need to include that. Under which income it will fall? Is it property income? No. You have to understand. Is the income coming from property? No. Is it an income coming from employment? No. Is it an income coming from trading? No. It's other income, non-savings income. Under non-savings income, you need to include the investment income is this much. You got it? Right. Then rent a room relief for individuals. Okay, this is coming for individuals. Will it apply for companies? No. For companies, rent a room relief is not eligible. But for individuals, it is eligible. What is this rent a room relief story? I'm revising all your taxation points. Right. Now, how to utilize this? How to understand this part? So let me also quickly recap with you. Let me know if I'm wrong. Okay? Now you need to test. You're my lecturer. You need to test me whether if I'm disclosing this information correctly. Rent a room relief means, for instance, let's assume I'm living in a big house. So I have 5 rooms in my home. 3 rooms occupied by me. 2 rooms is unoccupied. So what I'm trying to do, I'm putting into Airbnb or some other PPIM or whatever the platforms that you have. Renting a room. So when the tourists comes or the local people who travels can stay, can accommodate themselves. So as a result of providing this accommodation, I'm falling into this property income, correct? I'm generating an income through my property. You got the point now? Okay, I'm giving my room for an outsider and I'm economically getting benefit because I'm getting an amount from them. Now, is this income that you're receiving is taxable or not? It is taxable. It is a taxable. However, they're giving a relief up to 7,500. Okay. Now, this position, understand this very carefully. You have to be very smart here because this part of the question can be a little tricky here. This rent a room relief is given only if you elect. The word examiner is using is elect. Only if I have elected for a rent a room relief, then only I can utilize. So examiner can come through a question where he can ask me, is it beneficial for me to go for a rent a room relief allowance or not? It is your choice. Now I'll tell you the best way to utilize it. If your allowable expenses is more than 7,500, remember this point. If your allowable expenses, if your allowable expense is more than 7,500, correct? What are allowable expenses? The maintenance, the cost which is directly attributable to my room, the electricity and stuff like that. I need to make sure the room is properly given to that particular person, the tenant or whoever comes in. Okay, so the cost which are allowable, if it is more than 7,500, if you're paying more than 7,500 pounds, don't elect for relief. What did I say? Don't. It is not best. Because if I elect for relief, your maximum allowance, for an example, let's assume you are making an income of 50,000. So if you are relieving it, only 7,500 is reduced. So rest of the 42,500 is taxed. Whereas your actual loss, now this is elected, no, actual allowable expenses, let's assume 20,000. This is your actual allowable losses. If this 20,000 means technically this needs to be reduced by 20,000. So your taxable income is going to be 30,000. So which point is best? Going for the election is best or not going for the election is best? Not going for the election is best. So this is an area where examiner can test you. So you need to advise him in this situation, his allowable expenses in order to reduce from his rent income or the property income is more than the relief. So it is not advisable to elect for the relief. So it is not advisable to elect for the relief. If it is lower than 7,500, that's where you need to get this right. Don't just blindly relief means not always it's you're not supposed to get it. Now here you got options, you got flexibility, you have to choose what is best for you. You need to think, how can I save my money from being taxed? So you have to try to reduce your point. That's the point you need to prove. Clear? Did you understand the rental home relief? Another important point. The pension scheme limits. What is this pension scheme limits? Who can give me the theoretical part? Where did we discuss this pension scheme limits? Under which topic? Employment. Yeah, not wrong. Employment, yeah. National insurance contributions. Okay, fine. So which class then? I discussed this in two places. Particularly, we did the calculations in one place, which is your chapter number 2. Towards the end of your chapter number 2, this is what we discussed. Okay. But what is the concept behind this pension scheme limit? What's the concept? What's the concept, guys? Anyone? Not enough. Not enough. We need to put more hard work. From the residency status, I'm checking. Child benefit, important areas. All these are taxable, examinable points. So I need to know the reflection. Primas, I'll come to your point, okay? Give me a moment. I need to know the reflection point. What you have understood and what you have not. So you have to brush up these areas. That's why I asked you to do that question. So that you are always trying to know what is happening around, rather than being biased to one part of your taxation. Okay. So I'm confused with 3750 rule in rent room relief. 3750. No, at the moment I discussed you only 7500. 3750 is separate. I'll discuss it separately. Don't confuse them. Okay, it's a good point. Drop me a text on that. I'll separately discuss it. So today I'm just going to go the overall, just brushing your areas. What you need to check. How you need to check. I'm just checking your pulse. Okay. Are you aware about this? Are you aware about this? So I'm giving you some indications. You need to take points. Oh, I'm not confident in this area. I'm not confident in this area. Make sure, revise it. Make sure, revise it. Is you guys sitting for exams this month? I did not see your name in the bookings. Oh, okay. September. Okay, fine. So, others. Now I'll come back to this pension limits. Okay. Now, what is this pension limits? Now, this pension scheme. Now, listen to me very carefully. There are two types of pension schemes. What are those two types of pension schemes? Personal pension scheme, occupational pension scheme. Occupational pension scheme means your employer, which is your company, is contributing your pension money from your salary. It is directly deducted and paid. Deducted and paid. So this is not applying to that. This is applying to your class 4, correct? Your personal pension contribution. Okay. Now what happens when you transfer this money to the personal pension contributions? What's the benefit you receive, guys? What's the benefit you receive? Your tax bands are increasing. Correct, absolutely correct. Okay, so people who are earning more income, you transfer. Now this is the logic behind this. Now for an example, let's assume I'm making 200,000 pounds in UK. How much I'm making? 200,000 pounds for the particular period. Think that the entire 200,000 is a taxable income after relieving everything. Now from that 200,000, I am contributing 90,000 to my personal pension contribution. So if I am contributing to the personal pension contribution, is it taxable? It is not taxable. It is not taxable because I'm going to hide taxes now. I'm transferring to my pension scheme where I will collect after the maturity. So which means I'm legally hiding from taxes. Correct? Can you avoid taxes legally? Yes. Now the point is my taxable income is going to be 110. But the way that you are going to calculate is you show your total income as 200,000 still, and you are increasing the tax bands. Now how much I charged? 90,000. Is the tax bands is increased by 90,000? No, you need to gross it up. And you remember that calculation point. So 90,000 needs to be grossed by 20%. Because 90,000 is 80%, what is 100% is what you need to calculate. By that amount, your basic rate band will push or increase or expand. It's the elastic you're getting. Or from the higher rate band, my income will be extended. Which means technically at 200,000, generally if you assume me, I am an additional rate taxpayer. I'm not going to pay any income on additional rate as a result of I'm transferring the money to the pensions. Correct? Did you understand that? Since I'm transferring the money to the pension scheme, I'm going to get the benefit of enjoying being a higher rate taxpayer. You got it? Did you understand that? Okay. Now, HMRC is a bit focused on this situation. So where individuals started, now technically if you see, I am not receiving, now if you are not receiving an income today, the income that you are supposed to receive today, if it is received after 50 years, is it worth it? Inflation will kill the results, no? Correct? So now we need to check from HMRC's point of view. We need to consider things from HMRC's point of view as well. Now HMRC is locking this situation. So the maximum amount without any additional benefit charged, for instance, let's assume for 23-24 tax period and 24-25 tax period, it is going to be 60,000. So I contributed 90,000 here. Up to 60,000, no taxes. The additional 30,000 I contributed to the pension schemes will be taxed. I did a question on that. If you go to my income tax chapter 2, okay, go through this topic, I did a question on that. Okay, how that part of the tax is included. So let's assume my gross percentage itself 90,000 for our discussion purpose. I'm giving up to 60,000. My bands will anyway increase by 90. That's not an issue. Don't think that the bands won't be increased. Only up to 60%. No. 60,000, no. Whatever the amount you contribute, your tax bands will increase. I hope everyone is getting what I'm trying to say. Okay, if you're not getting this, which means you are not good in your theory, or you have not revised your theory well. Now, this is not a point that I can go back to the whole theory, but I'm giving you the overall view of it, the understanding. Okay. So, did you understand up to this point? Any questions, cross questions before? Okay. So by 90,000, your tax bands will increase from 37,700 at 90, from 125, 140 at 90. That is as usual. However, after calculating your tax liabilities, now your taxable allowance for personal pension contributions, if you are falling in 21-22 period, 22-23 period, the limit is 40,000. So maximum you can contribute is 40,000. Any contributions more than 40,000 will be taxed. So since I will fall into additional rate category, let's assume if I have invested during 2021 and 21, 22 or 23, 24 period, let's assume I'm investing around 70,000. So I'm contributing more, how much? 30,000. This 30,000 will be taxed at, if you are a higher rate taxpayer, at 40%. Obviously, you won't be basic, but if you're, because basic means you're not going to contribute to the pension scheme so much, no, you don't have money to contribute. So examiner won't give you a question like, you got it. So be very smart there. So he can't give a question, and don't ask me that question also. So what happens to a basic rate? Basic rate, if you have additional money only, you're going to contribute. No? You're going to save money if you have more money. Otherwise, how can you save money? Okay. So he's trying to escape from additional rate to higher rate, because additional rate means from 125, 140, everything will be taxed at 45%. A 5% increase is there. So I'm trying to I'm trying to save my money there. You got it? Now, that's how a taxpayer should think. You can play like that. But now they came up with some rules. Okay, you can play still, but the maximum limit is 40,000. But if you invest 70,000, no harm. You can invest. It's your money. End of the day, government is going to benefit because those money is reinvested again by the HMRC. But still, this 30,000 will be taxed now at the high rate percentage, which is 40%. Okay. Then the next part, the annual allowance. In 23, 24 and 24, 25, this they have little bit increased this amount. It's not 40 anymore. It is 60. Okay. So up to 60,000 of your contribution, if I have made 50,000 for the period, not taxed. I can be without tax, no additional taxes. But if it is more than 60,000, the additional point is going to be taxed. Okay. Not only that. Now that is one part of your understanding. The other way that the examiner can come, he can give you the unused figures. That also a question I did in the theory class. So now in 21, 22 period, 22, 23 period, there will be some unused amounts. For example, your maximum is 40,000. It doesn't mean that necessarily you invest 40,000 pounds. I might invest only 20,000 pounds in 21, 22 period, which means there is a gap of 20,000 I can still enjoy. So the next year, for an example, let's assume you are coming to the 22, 23 period. Now the maximum you can go 14. If I invest 60,000, the 20,000 needs to be taxed. But if it has been an unused amount, which I had in the previous year I was investing only 20,000. The unused amount 20,000 I can use this. So which means my 60,000 is not taxed here. So this is a bit flexible here. So he can give you a question in that concept. I practiced an activity in the theory session. So make sure you're doing that activity and you are reflecting your understanding. Clear? Okay. Up to this part of the point, did you understand? Sorry. Now, what is this income limit of 260,000? I will come to the minimum allowance later. What is this income limit of 260,000? I'm sorry, I didn't see your question. So if the limit exceeded, should be pension income. I will limit to the question. No. Amna, what you need to do, it's a good question. It's a very good question. What she's asking, so if the limit is exceeded, how should I reflect that answer in my computation? You will calculate your income tax liability, no, 37,700 this much, 45, so 125, 170 this much. You calculate that. Once you calculate the total tax liability figure, include another point, additional tax charge. Additional tax charge. Then you include the amount. Okay. What amount you need to include? The increased tax amount, the exceeded limit. For example, 50,000 means 50,000 into the percentage and you charge the tax. I have asked you all to leave a comment section. In your comment section, keep it as a best practice. Now, even if you didn't mention that, you're not going to, I mean, examiner will not reduce your marks. So, to all my students, I'm asking them to leave a comment. It will save you, but you can leave a comment only in section C. But in section A and B, you can't leave a comment. Correct? If it is section C, leave a comment. Section B, I don't want to leave a comment. You calculate that figure and give your answer. You got it? That's where you need to use it. It's a good question. Good question. And the limit is the gross value. Yes, you need to take the gross value. Limit is the gross value. So I hope I answered your questions. And it's a good question. When you have questions like that, please ask me. Remas also asks, should it be added to the tax liability? Of course, right? It's an additional taxes you pay means it increases your liability. You need to add it. If you're deducting it, you don't want to calculate that. It is not a relief, it's an additional tax liability. You should add it. Correct. You should add it. So is it not added to income? It is not your income. The pension contributions you are making, is it an income? That income will be matured when you are after your retirement, after 55 years or 60 years, it depends on the age in that particular country. Let's assume 60 years. After 6 years, I will take out all my pension money. I'm not going to work. My main income is pension income. Now the pension income is taxed. You got it? That's why it's going to be taxed. So till then, no. It is not added as an income, because the concept here is you're using that particular amount that you're contributing to the pension scheme to increase your tax band, to elastic your tax band. Correct? So you are not going to include, which means you're duplicating it. You're not technically getting a benefit. You including the taxable income, including the tax rate bands, no benefit is received. You end up paying more taxes. So you do a question practically. Now sometimes I used to do some questions in that way when I'm doing some hypothetical questions to myself. What happens if this is the situation? What happens if this is the situation? So it gives you more vision and clarity on that area. Okay, fine. Now the thing that I'm practicing with you in today's session is the way we need to practice every day when you are doing a question. How I need to think, how I know. Did you all do a check like this ever before? Taking your tax rates, allowances, why these things are given? What are these figures? Without knowing this, can you go and use this guide? But only so certain areas you will go, tax rates are given, no, and you'll go there and you use it. Trust me, certain questions, answers is given in this particular part. If you know how to read this guide, it is helpful for you to get the final answer. So then you should understand how to use this guide. That's why this fact sheet is given. Don't just leave it blind and keep everything stuck in your mind. I will not stop things like that. Only important things I will store and I will refer to the guide because I know that the guide is there. If you don't know how to use the guide in your final exams, and if it's the first time you're doing, you will obviously waste your time. That's why you're wasting your time. These are the time killing situations. In vain, no. Because exam, guys, I know it's pressure. You can't score 100 out of 100. Even if I sit, I'm telling you, it's very rare that I can score 100 out of 100. Because there can be a question which is challenging to me as well. But I need to make sure how much I can make. How best I can do my questions. You got it? So for that, you need to do the practice from home. You can't be an ordinary person. Trust me, in my previous exam session, I told you 15 students sat. 14 got through. Reason they practiced it. They approached that pattern. I need you all to do that. Okay. But the next important fact is that now if you don't practice this, it's very hard. And there was one good student, I don't want to name, brilliant in the class. Personally, I had an assumption she will get through. But score was 35. Not even 40s. You got it? Totally disappointed. I just had a conversation. What happened? Because I need to ask. Because I'm responsible. Trust me, even if you are failed, I'm going to be with you for the next attempt and get you through somehow this paper. I don't want to just leave you all in dark. Okay. So the responses which received from her end was, I could not practice whatever you told. I should have done that. Now that is too late to give a response. So why am I saying this? With some experience only I'm saying that. So I don't want you guys to fall into that category. Okay, right. So annual adjusted income 360,000. Okay, deemed to be 10,000. That is correct. So should we deduct the entire pension and charge the tax on exceeded amount? Okay. To answer Malik's question, I'll quickly answer and come to the next part of my discussion. So when it comes to the taxation part of this additional taxes, I'm contributing 90,000. 60,000 is the limit. 30,000 you take. Only 30,000 you need to consider. 30,000, determine the tax percentage and charge as taxes. You don't want to mention that 60,000. You can leave a comment. This income is above 60,000 and it is exceeded by 30,000. So additional tax is charged. Examiner knows that. So that's why he's checking that point. He already knows that. You don't want to give more reference to them. And then next. Okay. It's very simple. Be very simple, because when examiner is asking you some questions, he already know the root of it. In the skills level paper, you don't go and explain, this is how it is coming. Don't waste your time there. No marks. Leaving, that's why I introduced the system called comment. Mention the comment even if your answer is wrong. Okay, in section C, okay, this person has something. He can give you a credit. Let's assume it's 49. The chief invigilator, the chief person who is going to having the review, he can catch that point. So none of the students will have comment section in their answer platform. Trust me. Because I don't know by other lecturers, they are letting them know to include as a note or something, but I leave a comment section next to it so that it is attracting the examiner. He can give you a mark. Yeah, he is a capable student. So getting 50 is a pass moment at the end of the day. I'm not letting you to charge 50. I'm saying that now when you get this principle, this is how you can win a prize. Got it? Now there was one of my other students. So 6 students scored 80 in the last examination session. 88 was the highest. 86, 84, 82, 80. All are my students. But it's a matter of getting the highest ones. Getting down the principles down. We can do it. Let's practice. Okay? We need to practice more. If you don't practice, guys, no, this marathon session is not enough. This is a point I'm just trying to highlight the things that you are missing to do. Now you need to make sure this is encountered from tomorrow. Then it's easy. Only for 2 weeks you are going to suffer. After that, it's a big relief. Okay, fine. Then there was another question. Rima's. Okay, I'll come to Rima's point while I'm explaining this. Okay. Well, now what is the understanding of this 260,000? If my total income is 260,000, then you can utilize your personal allowances up to 60,000. You got it? The maximum limit they will grant me is how much? 60,000. So they will give us 60,000. However, if my income is increasing beyond this point, they will restrict my allowances. How to restrict? Now, you know the rule behind personal allowance, right? If my income is increasing by, let's assume if your income is 110,000, Increase is 10,000, half of that is 5,000. From 12,570, you remove 5,000. So which means the balance is the amount that you are eligible to utilize as an allowance. Likewise, the same mechanism is applied here. So let's assume my income is 300,000. Will I get an allowance of 60,000? Will I get an allowance of 60,000? No, I will not get an allowance of 60,000. I will not get an allowance of 60,000. Then how much I'm getting? What is the increase from 260? The increase is 40,000. Half of that, 20,000. So the maximum limit from the 60,000, it needs to be reduced by 20,000. So my personal allowance, the maximum limit is 40,000 when my income is 300,000. I'll ask you a point. Now, if I have contributed 60,000 to my pension scheme, is it taxable or not? Okay, let me rephrase this. My total income is 300,000 pounds. Total income is how much? 300,000 pounds. Everyone be with me. So I'm getting 300,000 pounds. For this 300,000 pounds, my maximum pension limit is how much? 40,000. Generally, up to 260,000, your limit is 60,000. Like your personal allowance. Up to 100,000, 12,570. After 100,000, it is going to reduce. So here what happens to the pension? The same mechanism. You get the 260 and it is going to reduce. It's going to be tapered. What do you mean by tapered? It's going to be restricted, reduced. Okay. So how this is reduced? You take the increase. What's increase? From 260, my income is now 300. So the change is 40,000. So by half of 40,000 is 20,000. By 20,000, my allowance which is granted is going to be reduced. Okay. So which means the maximum contribution I can make to my pension scheme without charging any additional tax is 40,000. Now my question I asked you, if I invest 60,000 when my income was 300,000, is my investment to the pension scheme or is my contribution to the pension scheme is taxable or not? There is a taxable point. What is the taxable point? Is entire 60,000? No. The 40,000 from that 60,000 is relieved. 20,000 needs to be charged as taxes. Did you understand that? Now you have to be very clear. Now you might be thinking, sir, they are giving 60,000 allowance. Yes, they are giving 60,000 allowance up to 260. When you go beyond this point, it is not provided. Did you understand that? Is that clear? Okay, so 260 is the adjusted net income, and that's the adjusted net income equals to net income plus gross PPC of gross gift aid donation. Okay. Amra, good question. Let me come to that point in a while. Okay, that's a bit of an advanced version of it. It's a good point. It's a good question to ask. So because otherwise you will miss what I'm trying to do. Now you understood the points, right? What happens with this 260? You understood? What if it's more than that? Now let me give you another situation. Let's assume your income is 360,000. So if your income is 360,000, so should we charge to 20,000 at 20%? No, 20,000 is not at 20%. You need to charge at the additional rate, because if you are, now for an example, if you are a basic rate taxpayer, only 20%. Additional rate, see whether where your taxable income is found and how much is the percentage that you need to charge. You got it? Because you need to adjust your incomes accordingly. Based on that only you have to charge your taxes. Fine. Coming back. So it can be 40 or 45. Those are the 2%. Right. You are asking me something.
The taxable income after adjusting.
Taxable income. 260,000 is your taxable income after adjusting everything. I'm talking about the taxable income from. Based on the taxable income only, we have to decide. Not the total net income that you are arriving. Because after that, you need to give personal allowances. You got it? After determining those only, you have to arrive at this 260. Coming back. Now this 300,000 situation you understood. Now let's assume if your income is 360,000. Now what happens? Up to 260, we will get 60,000 without any issues. But now after 260 is the problem starts. Now the problem is your income is 360, you have 260, which means it is increased by 100. Half of this is 50. So how much? Not percentage, okay. Sorry. Okay. So your maximum tax allowance is for pension is 60,000 for the particular period. You are utilizing 50,000 because that is restricted. So now your maximum allowances when your income level is 360,000 is how much? 10,000. Is how much? 10,000. So this 10,000 is the maximum contribution you can make to the pension contributions. Is that a compulsory thing? No. If I want to invest 100,000 from 360,000 I am receiving, let's assume to live 200,000 is enough for me. But 100,000 is an additional income, extra money that you make. That additional income, can I transfer it to the pension schemes? Yes, you can transfer. But the issue here is up to 10,000 from the pension money that you're transferring is tax excused. They are not going to charge any taxes. But 90,000, you need to pay taxes at the gross figure. Okay, 90,000, you need to pay taxes. Did you understand that point now? Now, what happens after this? Now, they are speaking about this minimum allowance, right? What's the understanding behind minimum allowances? Any income level after this, it's a flat rate. Maximum you can contribute only 10,000. So let's assume if your income level is 400,000. Now in your exam, don't waste your time. That's what I wanted to say. Let's assume if you are calculating income tax for a person, his taxable income is 400,000. If it is 400,000, what is the maximum contribution for? If he choose personal pension contribution, what's the maximum amount he can contribute? 10,000. 500,000, still 10,000. Up to 360, 10,000. From there onwards, it's going to be everything else is going to be 10,000. Everything else is going to be 10,000.
Like let's say he has 400,000. So 10,000 is the allowance he receives. The balance
Yeah.
90,000 is tax.
Exactly. I'll tell you the practical point behind this. If you make it as 370, 370 means the extra amount is how much? 100? No, it will be 55. 380. The extra amount is 80,000. So, not 80, 120,000, right? 120,000. Because 260 minus 380, no, 120,000. So, if you divide by half, it is 60. So, exactly it will match your total amount of allowance. So, this person is getting 0. So, he is not motivated to contribute anything to the pension scheme. No, that is some unjust situation to him. So what we make as a rule, from this point, it is fixed. Maximum that you can contribute to the contribution is 10,000. Did you understand that? So what I'm trying to say, now you have to be little careful here. So, hold on. You have to be little careful in the exam without wasting much of your time. if you observe a particular individual is making an income, especially to the MCQs they can ask. Okay, in an MCQ they can come after a person's taxable income or adjusted income is 400,000. What is the amount of tax he needs to pay? They can give you the other factors. Okay, and he's contributing to his personal pension schemes 80,000. Now let's assume it is a quick question they are asking us, and they will give you this reference, and he is an additional rate taxpayer. Okay, he is an additional rate taxpayer. How much of excess tax he needs to pay? Can examiner ask you a question like that? Yes. In that situation, you don't want to do a full computation. They are giving all the summarized points there. So I got the information to my head. Okay, the person's net income is, the total taxable income is 400,000. He's contributing 80,000. 80,000 to what? His personal pension contributions. And they are telling that he's an additional rate taxpayer, which means he needs to pay taxes at 45%. Percentage is confirmed in my mind. Now, how much additional tax he needs to bear? He's having a maximum limit of only 10,000. Of the 80,000, 10,000 is removed. On that 70,000, calculate 45%. That is yours. They can come an MCQ. They can come after an MCQ, because if you don't understand this logic, it's a disaster. What if the situation is 300,000? Now you know what you need to do. Same 300,000, let's assume I'm investing 80,000 to the contributions. So my limit is restricted to how much? 40,000. So the extra taxable point is 40,000 again, because I'm investing 80,000. 40,000 is relieved. 40,000, and based on the tax rate, you need to charge the percentage. So that part of the understanding is important. Clear? Fine. So what is the amount increasing tax rate band? 20,000 or 40,000? Okay. Vimal's answering your questions. Let me make it more clear. Now, for an instance, let's assume let's make a reference. Now you're making an income. You're generating an income of 300,000. Okay, and you're contributing to the personal pension scheme 80,000. Okay. Now the things that you need to do. In order to make your tax adjustments. So first of all, let me tell you, this is your taxable income. This is your taxable income. So if your taxable income is 300,000, now you need to understand whether this person is receiving personal allowance or not. That's the first question to be asked. Second question to be answered is, by how much his tax bands are getting changed. So first of all, to determine your personal allowances, okay, I would say I'm contributing 80,000 to the pension scheme. Now this 80,000 needs to be grossed up. We consider this as a net amount. Two situations we will consider like that. Whenever you're making a gift, a donation, HMRC tells you will consider it as a net figure, you can gross it up. Okay. And also the next situation is, when it comes to the personal pension contributions, you consider whatever the amount you actually contributing as a net amount, we gross it up. But when you do the calculation, you need to gross it up and take your answers. That's a benefit given. Okay. So how does this work? Now this 80,000 is 80%. I need to understand what is 100%. Correct? So what is 100% of this? 100,000, right? So technically you have actually invested 80,000 to your pension scheme, but to the calculation you are going to consider it as 100,000. Okay, to the calculation. So now what I would do from this point, my tax bands will increase, right? My tax bands is from 37,700 if you are a basic rate taxpayer. Now the band will increase by this personal pension contribution of 100,000. So which means up to 137,700, you are taxed at 20%. That is your basic rate. Generally your basic rate was 37,700, but now your tax rate is 137,700. Up to this point you are going to be charged at 20%. Is it a benefit? A bigger benefit, guys. From 37,700 to up to 137,700, the extra 100,000, normally you need to pay at 40%. You're getting a relief of 20%. That's how this benefit is given. That's why they're asking us to do this, gross it up. It's a mathematical operation yet again. Okay. Not only that, your additional rate, not additional, your higher rate tax band will also improve. It will increase. Now, that is from 125, 140, it will increase by 100,000. So now what happens? What is your total here? 225, 140. Up to this point, you need to pay taxes of 40%. Anything beyond this point, it's going to be 45%. You don't want to calculate the addition from there. Now, this isn't working. Now tell me, is this person is eligible for personal allowance? No, his taxable income is increasing more than 125, 140. Okay, so his personal allowance is nil. You got it? Because it's more than 125, 140. So he's making a nil personal allowances. Now you need to determine the tax calculation. Correct? So what is my income, taxable income? That is 300,000. 300,000, right? From this 300,000 up to 137,700, I'm going to pay at 20%. So that's how much. Can someone give me the figure? Two
27,500.
227,500.
227,500.
Okay. 227.
227,500.
27,500. 27,540. Now the next point needs to be charged at 40%. So from 137,700 to 225, 140, it is 87,700. How much is that? What's the difference you're getting? Two 25, 140 minus 137, 87, 440, not 700, 87, 440. Okay, 87, 440. So 87, 440 into 40% is how much? 34,976. Which means up to this limit, which is my total income from 300,000, I have paid taxes up to 225, 140, if I'm not wrong. Correct? Now my income is 300,000. Balance I need to pay at 45%. So from 225, 140 to 300,000, what is the limit? What's the difference? I'm saying the difference. What's the difference, Jerry?
74,866.
70?
4,860.
860. That into 45% is how much?
33,687.
33,687. So generally this is how you do. Now up to this point your answers are correct. And you will say to the examiner, this is the total liability. Is that the total liability? No. Why do I say it's not? Because when your income level is 300,000, you had a personal contribution of 80,000. Okay, where the maximum contribution, now there is another point, the maximum limit to your personal pension scheme when your income is 300,000, you know that from 300 you need to remove 260, the answer need to divide by half, which is 20,000. So your total allowance of 60,000 for the year, where did I get this 60,000? That is what they are given. So the total allowance for 24-25 is 60,000. So this 60,000 is not eligible for you. Why? Because your income is more than the respective limit. So which means that it will be reduced by 20,000. So when your limit is, see, when your income is 300,000, your limit to invest to the personal pension contribution needs to be 40,000. But how much actually you have invested? You have invested 80,000, correct? You have invested how much? 80,000. So this difference, that 40,000 needs to be taxed additionally at 45%. You got it? That 40,000 needs to be taxed at 45%. Did you understand that? Make sense? Any questions up to that point? So this part of your understanding is critical, guys. This part of your understanding is critical. Okay. Let's take a quick break. So, okay. Wait, I have a question. I'll answer that. So assume my income is 370. So it is exceeding 360 limit. Then additional allowance deemed to be 10,000 at this point. Should I calculate and give the answer? No need to calculate anything. Directly say 10,000. Because examiner already knows your minimum allowance is 10,000 after that income limit. He wants to understand, he wants to check, do you know this? So he's already know that your minimum allowance is 10,000. That's why he's now there is an annual allowance, then minimum allowance. No, he's giving you the minimum allowance in the tax sheet. He already knows what is that. So there you don't want to give an additional comment. Don't waste your time. Okay, as a comment, if you can mention here the income is more than 360, or this income limit minimum allowance is eligible. So he knows what you are trying to say. So don't need to write paragraphs to it. Okay, comment. What is a comment? That's why I renamed it as comment, because when I say add notes, you try to write it. Don't waste your time. The comment needs to be like, let's assume you're posting a picture in a social media. You look fabulous. You look fantastic. It's just one word thing. So try to keep it as short as possible. So just giving a quick comment on that. Okay, then examiner knows that, okay, what he's trying to say. So that is a pickup point. If you are struggling there, leave that. Don't do that. But better if you catch that point. You have to think bit advanced. Okay, then answering to. So 260,000 is the limit of taxable. Yes, that's the taxable income. It's the limit of taxable income. That is correct. So that is your taxable income. Then after a break, I'll discuss about the other parts of the allowance, so that we can recap most of the areas. Okay, which means I want to discuss around when we go through those statements, we can discuss most of the part. So first part we'll do this and then we'll jump into the question in the second. Okay. Okay, let's take a quick break and be back. Now the time is 11:10. So be back by, did you have your breakfast? Everyone had? Okay, fine. So then be back by 11:30. So we'll resume at 11:30. Yeah, we'll continue from there. So today I will take you all until 5 o'clock. No worries, we won't feel time running because we are going to do questions. So make sure we are sitting and we are there till it ends. Okay. So at the end, I'll quickly revise what you need to do for next few days yet again, and then make sure you're practicing it because when you come tomorrow I'm going to reflect few other areas. Okay, fine. Okay, let's move on quickly discussing the other parts and jump into the questions. So what is this approved mileage car allowances? What is this? What for what which situation we need to use it? Why they have given this point? What is this 10 up to 10,000 miles you need to pay around 45 cents? Over 10,000 miles it is going to be 25 cents. What is this? This is the business travel. When your company is paying you, okay, for an example, let's assume technically if you travel from 10,000 miles for this travel purpose, business travel purpose, or your private, whatever, your company is giving you an allowance. Let's assume your company is paying you 7,000. How much they are paying? 7,000. How many miles you are traveling? 10,000. Now the state, now this is your statutory allowance. By HMRC, this is the amount that you are going to eligible without being taxed. So for 10,000 miles, if they should technically pay only 45 cents, which is 4,500. But how much the company is paying? How much the company is paying? What's the difference between this? 2,500. So 7,000 is what actually company is paying. Up to this 4,500, this amount is not a taxable benefit. But the 2,500 needs to be taxed. Got it? So thereafter, the mileage that you travel, the amount of the allowance that you're going to get is reduced to 25 cents per mile. You got it? Did you understand that? So let's assume if company is paying 3,000 and you don't want to pay taxes. When you are calculating your employment income, you need to say travel 0 because it is exempt. If it is 7,000, they have paid. 4,500 is exempted. So you need to say the taxable amount is 2,500. 4,500 in the comment you can say exempt. Statutory allowance of 4,500 excess taxed. You got it? So that's where you need to use your knowledge here. That is important. So this figure is also reflected in your tax allowance sheet, or I usually call it as fact sheets. This is where the facts are given. Then capital allowances. It's a separate topic. What is capital allowances? It's the taxable depreciation. The way to determine your taxable depreciation. So when you're determining your taxable depreciation, it is classified the assets, all the depreciable assets. Is land is depreciable? No. All the depreciable assets, which is qualifying for accounting depreciation will qualify here. So which means technically your plant and equipments, or plant and machinery, PPE, property, plant and equipments, correct? IS 16, technically they're speaking about that. So you have to be little careful here. But when I say your property, plant and equipment, will building qualify for this? Land, obviously not, because it's not a depreciable amount. So it will not get reflected or charged under capital allowances. SBA, very good. Structure building allowances. So now there was an exam question. I hope I did that with you. In that exam question, that's the reason why I asked you this. In the theory classes, I did that past paper question. Where now, when you're having a big structure, when you're building a flat, you have heat assistance, pipelines, all the integral features of the building will be subjected to capital allowances, but not the building itself. Not the building itself, because for building you need to provide separate allowances of SBA as a percentage, 3%. So now you should get these points into your mind when you are going through these capital allowances. Then what type of assets move to the main pool? What type of assets are classified under special rate pool? So let's quickly talk about the special rate pool. Cars, where you need to park. Now, I'm talking capital allowances from an individual's perspective. For an individual perspective, which category you need to bring the car? You're having a car, to which category you need to consider? Main pool or special rate pool? Very good. Based on the carbon emission. If your carbon emission is less than 50, you need to include it under main pool. If your carbon emission is more than 50, now this is especially for car, more than 50, it is included under special rate. The special rate percentage is 6%. The main pool percentage is 18%. Okay, fine. Is that clear? So you have, now this is an area which will obviously they will test. You don't want to go here to remember those rates, but you need to do this working. Okay. Then when it comes to cars, the cars who are emitting zero carbon emissions. Now there are some allowances that you discussed under capital allowances. What are those allowances? AIA. What is that? Annual investment allowance. FYA. What is that? First year allowances. WDA. That is written down or writing down, whatever. The allowances. Now, what are these allowances? That is the amount of claims that you can make for the period. Now, when it comes to AIA, now annual investment allowance. What is the limit of annual investment allowance? What's the limit of annual investment allowance? Anyone? 1 million. So this 1 million figure, is it for annually or monthly or quarterly? How does it work? The name itself says annual investment allowance. Common sense, I would say. Use a bit of your common sense. It's for annual period. Now the next part of this question is, I'll talk about this thing. The next part is exam is going to come after the short life and the long life, where you need to prorate this. Now, short life means less than 12 months. If you are preparing your accounts, not short life, my bad, correction is short period. Okay, it needs to be short period. If it is short period, it needs to be less than 12 months. If it is longer period, it's more than 12 months. Now, 1 million worth of allowances is given to all types of assets. All types of assets other than cars. You got it? This 1 million is given to all the assets which qualify for capital allowance purposes, but this is not given for car. Why this is not given for car? Car has a separate allowance called FYA. So FYA is only given to cars. Do you give FYA to anyone else? No. So to whom you can utilize this FYA? any new cars, not second hand cars, any new cars which you are purchasing at zero carbon emission. So when I say any new car with zero carbon emission, which will qualify 100% allowance. How much? 100% allowance. You got it? However, written down balance, that is the general allowance which is given each and every year, 18 and 6%. The special things is annual investment allowance and FYA. Right. Now coming back to the factors. If it is a general 12-month period, it's easy for us. Everything is 1 million is 1 million. FYA is always 100%. Any given situation, WDA is whether it is 18 or 6, it's going to be the same. But if it is provided for 6 months, which means short accounting period, if you have a short accounting period, this annual investment needs to be provided only for 6 months. So your AIA needs to be prorated, correct? Now, for an instance, let's assume if I am bringing a vehicle worth of 800, not vehicle, a plant, a machine worth of 800,000, but my accounting period is only for 6 months. So this asset will initially qualify for annual investment allowances, correct? So under annual investment allowances, I will record machinery, the purchase amount is 800,000. Generally, you know that annual investment allowances will give you an allowance of 1 million. Okay, so you can utilize it. But this particular question carries accounting period is only for 6 months. So my maximum annual investment allowance I can use is restricted to 6 months because this 1 million is for 12 months. Now I can utilize it only for 6 months. So which means 500,000 out of 800,000, 500,000 you can claim as an allowance. The balance 300,000 will be claimed as WDA according to the percentage. What percentage? It will go to the main pool. From the main pool, okay, let me show you the reflections. Wait. So now let's assume I'm preparing accounts for 6 months. How many months? 6 months. So when I'm preparing accounts for 6 months, I'm bringing in a machine for a cost of $800,000. How much? 800,000. So I need to, this is qualifying for capital allowances, right? So I need to determine capital allowances on this. So initially when I'm doing my calculations for capital allowances, I need to consider any additions. Additions means any new assets which is qualifying for annual investment allowance. So this machine will qualify, correct? So what is the cost of this machine? 800. Okay. Can you remove it through your annual investment allowances? Yes. The answer is yes. But annual investment allowance for a period is only 1 million. That's the maximum allowance. But you're preparing it for 6 months. Can I utilize this entire 1 million? No. So for this particular period, only 500,000 is eligible for. So maximum limit I can go here is only up to 500,000. So this is your main pool. This is your special rate pool. This is the amount of claims that you're making. So this will be considered as an allowance of 500,000, correct? Then you have a balance of 300,000. From this 800,000, if you remove 500,000 as a claim, this 300,000 should be charged under main pool. So main pool we charge 18%, special rate we charge 6%. You know that. So what I'm trying to say is, right after this, you now will machine qualify for FYA? No. If anything qualify for AIA means it can't qualify for FYA. FYA is only given for cars. So I'm not bringing in a car here. So now it will be qualifying for WDA, written down allowances. I need to calculate written down allowances to this 300,000. So it will get 18%. Now this 18% is an annual charge. You got it? This needs to be prorated. So this 18% on this 300,000 is how much? 18 to 3? 24. How much? 36, 30, 54,000. Yes, it's 54,000. So this, you need to claim 54,000. How am I getting 54,000? Let me show you the calculation. 300,000 into 18%. Now this is for 12 months. I need only for 6 months. So 54,000 divided by 2 is how much? 27,000. So only 27,000 you can claim as written down allowance. So your total claim is going to be 27,000. So let me show you the final presentation as well. So now your tax written down value brought forward from 300,000. If you remove 27,000, it's going to be how much? 370, 273, sorry, 273,000. So capital allowances for this particular period, 527,000. This, by this 527,000, your trading profits needs to be reduced, or your taxable profits needs to be reduced by this 527. This is how you are going to use it. So this is what is reflecting for that particular period. Now, did you understand why did I say that 300,000 qualify for WDA initially, before I was giving some numbers here? You got it? Does it make sense? Now, this part of the clarity needs to be there. Not only that, we have done so much of questions. We have done so much of questions here. Now, what happens, especially for individuals, when you're calculating capital allowances, there are two more things that you need to consider. The private usage needs to be separately shown, and if there is a short life asset, that needs to be shown separately. What is a short life asset? Is it staying with you less than 8 years? Or any assets which is having a lifetime of 8 years? Or is it 50 years? Which one? Good confusion, no? Now, let's assume this is your exam day. Getting a question like this, the same confusion can arrive at your mind and waste your time. I'm trying to highlight where you can waste your time. This is where you can get confused. Now, these are little factors that needs to be in your mind. So now, can you say that you are more confident under the capital allowances part? You're not 100%. So it's an area for you to review, for you to understand. I'll tell you something. The common mistake among us, including me, I'm saying, we try to, when an exam comes, we try to kill the question when we are practicing period. So by killing questions, what happens is you are trying to motivate to find the solution only for that particular question. If a new question comes, you are totally out of the location. Correct? You'll be like, oh my god, I haven't learned this part. But you would have graded yourself as, brilliant in this part, but now your brilliance is not reflected. Correct? Why? Because we are learning the concepts not with the theory. Now, this, when particularly for tax, we need to have the rules in our mind, and we have to make choices and correct measures to answer. For that, you need to have clarity. No worries, you're not in dark. So we are discovering this before the exam, so we are safe. We are discovering this part before the exam, so we are in a safe environment. Now from here, I need to push myself. You got what I'm trying to say? Fine. Now when it comes to this short life asset, now that is another point that I'm asking you all to refer. I will ask it tomorrow. What's the next thing I asked you to do? Before the break, I asked you to look at something. Ties, very good. So ties, so when it comes to ties, how many ties are there? What are those ties? And the residency test. Okay, how we are going to use the residency test. Fine. So make sure you're noting down these two areas, because those are the two areas that I will ask you again tomorrow. And then I'll discuss the point. Coming back. So this is, they are talking about AIA, annual investment allowance. Then what is this ECA? What is ECA? Is it eligible for individuals? ECA. ECA means what? Enhanced capital allowances. Is it applying for individuals? No. This is applying only for companies. What is enhanced capital allowance? What is enhanced capital allowance? Anyone? Okay. What is enhanced capital allowance? Now, for individuals, we understood when it comes to your annual investment allowances and when it comes to your written down allowances and your FYA is given to qualifying assets which are depreciable. Fine. But FYA is only provided to us for individuals. But in companies, there is a special regulation where FYA can be provided to the main pool assets, which are considered as enhanced capital allowances. This enhanced capital allowances can be given to these main pool assets as well as special rate assets. Special rate assets will qualify only 50% of it, other than cars. Okay, other than cars. Okay, this is a special deduction. You call this deduction as super deduction. What's the name they are using? Super deduction. I will not tell the year. From 1st of April of a particular year, you need to do this research. That's add to your next checklist. What you need to bring when we start the class tomorrow. That before that particular period, the super deduction for main pool was 130%. Since 2023-24 tax year onwards, it is 100%. Okay, and 100% allowances we can claim. I know that your mind is struggling with to imagine what's the situation sir is trying to say. I want you to go and do that activity again, because today I'm not going to discuss companies. Okay, that's the reason why I'm saying, because tomorrow I'll start discussing companies. Now this is applicable for companies. So this is a point you need to check. This will be tested. Very high probability of testing this part, because there is a change which they are specially introducing to 24 Financial Act. In 23 Financial Act, it was 130%. 24 Financial Act, it is 100%. 130 for main pool assets, which means any assets that you bring. Then the next question there is, what sort of assets? Is it qualifying any assets? No. Any brand new assets. Any brand new assets that you are bringing will have a FYA deduction, first year allowance deduction, for companies, not for individuals. Okay. The next point is second hand vehicles. Now you might be buying it for the first time. It will not qualify for this super deduction, or in other terms ECA, enhanced capital allowances. Now this is charged under companies. I want you all to absorb the theory part again. It's an important thing they will test. Okay, high probability of testing in your paper. High probability. Because most of the students think the capital allowance is the same for companies. No. Most of the factors are similar. Most of the factors. They also have AIA. They also have FYA on cars. They also have WDA. Everything is same. That the same way that you consider for individuals, you need to consider for companies. But for companies, we have a special thing. That's what we call it as ECA, enhanced capital allowances. So when we are revising, we used to miss this part. So enhanced capital allowances is given to brand new assets which company is purchasing. All these brand new assets, if we are categorizing under the main pool, if it's a main pool asset. So for an instance, machine, main pool or special rate. You are buying a new machine, main pool or special rate. It is belonging to main pool. I'm buying a new car which is emitting a carbon of 20 grams. Main pool or special rate pool? Main pool. Less than 50 grams means main pool. More than 50 grams means special rate pool. Now all these are new assets. Told you these are brand new assets. So all these brand new assets will qualify for FYA. Or we also call this as enhanced capital allowances for companies, not for individuals. So what happens at this point, let's assume I'm bringing in a new asset. The value of this asset is 2 million. My annual investment allowance is only giving me 1 million. But any new assets will also qualify for AIA. If you have ECA for companies, is it smart to claim the allowances under enhanced capital allowances under FYA or AIA? The choice is FYA. Why? 100% of the assets value can be claimed. So even if it is more than 1 million, I can claim the entire 2 million as an allowance for that particular period, but it needs to be, the condition is the brand new asset. Okay.
They ask that with its beneficial towards the company.
True. In your MCQs, they will ask this. What is the beneficial point to utilize capital allowances? Oh, what? Now, it is not wrong. Now, for examination purpose, it is wrong. But if you forget to do this, it is not wrong in calculating it. But HMRC, in their audit, they can reflect. You got what I'm trying to say? During your final submission of your tax returns, leave that thing apart. Let's come to the calculation. Our examiner. In our examination, you can't do that. We have to utilize the ECA. That is the best option. So ECA is given 100%. on this asset, so which is for main pool. But if it's special rate pool, only 50%. So let's assume if I'm buying a car for 2 million, the car, if it is not emitting zero carbon means zero carbon emission means 100% FIA is given. So if it is not emitting zero carbon, let's assume if it is emitting around 60 grams of carbon, it is qualifying for special rate. If it is qualifying for special rate, when a new car comes, for the car, you need to give the first year allowances. But this car is not emitting zero carbon emission. This is emitting 60 grams of carbon. So for individuals, this will not qualify for FIA. But for companies, this will qualify for FIA at 50%. You got it? So 1 million, 50
Special.
first year allowances. FIA means first year allowances. When you are bringing an asset for the first time to the organization, the allowances which is applicable is FYA in companies specially. It can be a main pool asset that you are purchasing. It can be a special rate asset that you are purchasing. The FYA is given only for the brand new assets that you are purchasing. So when you're reading your question in the exams, you have to clearly understand the date. In this ECA, the date is important because before 1st of April 2023, I told that year now, it is 130%. You can claim 130%, which means 2 millions, 100% is 2 million itself. No? What is 130%? Needs to be more than 2 million. You got it? So that amount of claim that you can make, what happens as a result of your calculating these claims? By this amount, your taxable profits is reduced. Because finally, I am arriving at capital allowances, the total capital allowances. Did you understand that? So let me also put that into numbers. So what is ECA? Enhanced capital allowances. So this is given to new assets. It can be either main pool asset or special rate asset. So all the new assets will be getting an allowance of FYA. But this FYA is for companies. For whom it is given? For companies. For companies, if it is a main pool asset, you get a super deduction of 100%. We also call this as super deduction. Because in the exam, sometimes you will come across the word super deduction. It was tested in the March paper. Those who sat on the March paper, it was tested. Okay? Because that's the period it got changed from 130 to 100. So they tested that calculation then. Then special rate is 50% always. So on which category I'm speaking about? I'm speaking about capital allowances. So now what you have to understand, now this is applicable for new assets that you are bringing. All these new assets will also parallelly qualify for AIA, but cars will not qualify for AIA. Cars will not. Now your point is, are you going to use AIA and then ECA, enhanced capital allowances, which means the FYA for main pool assets? Is it wise or not? Is the question. This FYA is only eligible when you are getting the asset for the first time, new assets. Is it eligible for second-hand assets? No. So as a taxpayer, I would like to claim this FYA at beginning, saving my AIA, because every year AIA is carried forward. 1 million, 1 million, 1 million, you will get it. So if I'm getting, let's assume 1 million worth of asset, I'm trying to get my decisional point here. If I'm bringing in a 1 million worth of asset, and this asset is, let's assume, another plant, you're bringing a plant to the organization. This plant, sorry, will you use FYA or will you use it under AIA? Will you claim it under AIA? The best thing is claim it under FYA only for companies. But in the individuals, you need to use AIA. You got it? Companies use FYA. That's what we call it as enhanced capital allowances. Why? When new asset comes, 100% is claimed. So which means I'm keeping another allowance of 1 million. If I bring another second-hand asset, let's assume I'm bringing in a second-hand asset. I'm bringing in a second-hand asset which is costing me 500,000. Let's assume it's a machine. That also goes to the main pool now. Can I take FYA? Can I utilize FYA? FYA is only given to the new assets. This is a second-hand asset. Yes, of course, it's new for us, but it is second-hand. So second-hand assets, I will use my AIA. Because I got 1 million. Let's assume if you are utilizing this 1 million for the plant above, which means you are losing the chance of getting another 1 million through FYA. So that is not beneficial for you. So these points now, when I'm giving you the direct explanations, directly I'm giving you the facts, but examiner won't speak the facts like that. So when you are reading your question, especially for companies, your visibility, your search needs to be for the date and how these judgments needs to be taken, where you need to make your claims is what they will test you in the exams. That is an obvious question for you. When it comes to companies, is ECS eligible for individuals? No, not at all. If there is an MCQ, you should say no. For companies, yes. On what type of asset? New asset. It can be falling to the main pool or special rate. Now the next confusion is FYA. Now we call this allowance as FYA, first year allowance. So I told you for individuals, FYA is only for cars which is emitting zero emission. Correct? But here, it's not the case. It can be given to the main pool assets, special rate assets. It can be cars or any other thing, any other assets, but it needs to be brand. Clear? So when you're reading your questions in your screen, make sure you highlight those facts. And you need to make sure your understanding is reflected in that particular area. Especially MCQs as well. Section A part of the question. Clear? Okay. Did you come across when you're revising your company's part, this area I discussed? Okay. Okay, because I did companies as the last chapter for you. Correct? Even if you forget some back concepts, I will excuse, not companies. Okay, fine, but don't waste your time. So those who are learning this for the first time, sometimes you would have learned, you might have, clouded with some other stuffs, but it's okay. Now there is a clear visibility now. Now clouds are moved. Now you need to go and see the theoretical understanding and to now see whatever the exam kit questions that you're practicing, it's an adapted question. The past questions. Tax paper is every year it's changing its rules. So whenever there is a change, those points are examined generally. Now that is one part of a guess that I always do it. It is reflected. March paper, it came as it is. Last paper, losses came as it is. You got what I'm trying to say. So this paper we can get a super question again. Okay. So then you have to utilize your capital allowances accurately. Okay.
So for ECA, cars also qualify.
Cars will also qualify. Which cars? Now let's assume I'm bringing two types of cars. Let me explain you with an example. The first car with zero carbon emission. Anyways, it qualifies for FIA. Whether it ECA is there or not, it is qualifying for FIA. The next point is, what's the next point? What's the next point? Next point is if I'm bringing a car which is emitting more than 50 grams, that is falling on a special rate. So which means still I can claim FIA at 50%. Another car I'm bringing in which is emitting only 40 grams of carbon, which is less than 50. Is it qualifying for FIA? Yes, at what percent? 100%. Now, there is an activity example actually in your uh, theory chapters. Go through that question when you are learning next week. Now, you're going to meet after tomorrow. A week is there for you to do your revisions while practicing those five. What five? I told you at the beginning: corporation tax, VAT, everything. While practicing these five every day, you need mark down these points. Now, for an example, for some individuals, you might know what is ACA. For some crowd, they might not. You got it? So you mark your own gray areas. You make sure you are trying to study the theoretical aspect and make sure if it is not clear and visible, drop me a chat. So I tried to do this, but still I'm not getting this part. Okay? Quickly drop a message after you try. Okay? Fine. So make sure you're having a list. So areas to be focused, the area that you're confident. You have to be organized like that. Otherwise, it is difficult because you don't know what area that you are not aware of. For instance, let's assume if you are really bad in determining your inheritance taxes, you are not getting any heck of calculating inheritance taxes, then you need to pay a little more time to find out. And in your exams also, you're getting a question, but still you're not confident, means don't waste your time there. Answer all the other things that you know and come to this later. More often than not, it will be a section A or B question. So you got some choices to choose. Sometimes you will get the answers A, B, C, D. It's not matching. Out of the world. They're getting something else. We would have missed something else. So much of practice is needed. The practice is important. So don't waste your time from here. If you waste your time, it is going to impact your results. That's the equation. So easy only applies to new plant and machinery, right? It does not apply to car. No, easy applies to the car. That's what I'm all this time I'm shouting. ECA is applying to the new car who is emitting carbon. You got it? Who is emitting carbon? If it is less than 50, main pool qualifies for ECA. If it is a car which is emitting more than 50, it's a special rate. Still qualify for ECA.
All brand new assets.
All the brand new assets. That's why I mentioned the word all brand new assets. You got it? Good question. It's not bad to ask. So make sure you are marking those points in your mind. Fine. Give me a water break. See, they have given 100% for first year. I mean, the main pool and the special rate 50%. That they are just giving it as it is. You got it? But we should know where to apply. See, SPA, it's a straight line allowance of 3%. You told me already. So, but the tube says the new plant and machinery for ECA. New plant and machinery for ECA, even new assets. Okay. So let me clarify that point. Drop a message to me. Okay. Then corporation tax reliefs. So the cap, you know how to determine the corporation tax reliefs. So when it comes to corporation tax, okay, which is your companies, when it comes to companies, the first thing you need to understand what is your lower limit and upper limit. Here also you need to focus on the particular year, because in 2022 you did not have any limits. No upper limit, no lower limit. Everything is taxed at 19% flat. But in the tax year 23, not tax year, for companies we don't use tax year, no, we use accounting period. So accounting period 23 and accounting period 24, you are considering upper limit as 250,000, lower limit as 50,000 for one company. For one company. If it is 50,000 or less, you charge 19% of tax. If it is 250,000 or more, you charge 25% of tax. If it falls in between, you need to calculate something called MR. Who is MR? Mahinda Rajapaksa. No. Marginal relief. You need to calculate what? Marginal relief. How to calculate marginal relief? So I forgot the equation. No worries, they will give you. They will give you the equation also, even if you forget. But though they give the equation, upper limit you know, which is 250. Now this will subject to change based on the number of associated companies. I'll tell you that part in a while. What is augmented profits? How to determine augmented profits? Amra, what is augmented profits? What's the equation? Rimas, Fatima? What are augmented profits? Your TTP, total taxable profits, plus what? Dividends. Dividends from group companies or non-group companies? Group companies or non-group companies? TTP plus dividends is correct, but what dividends? Non-group companies. Very good. It can't be group dividends, you don't consider. Intercompany. Non-group company dividends you need to consider to determine your augmented profits. If you do not have non-group dividends, your TTP is equals to AP. What is augmented profits? The total taxable profits is, if no dividends given, means taxable profits, total taxable profits is equal to augmented profits. And then you need to remember the standard fraction. What is the standard fraction? 3/200. Now that won't be given. The standard fraction rate is 3/200. Then into taxable total profits divided by augmented profits. For that you need to know what is taxable profits. You need to calculate it. Augmented profits you need to calculate it. If you do not know this, you can't calculate marginal relief. Okay, I'll ask you another question. I don't know whether you remember or not. On group, very good ribbons. The question for you is, if there are no dividends to calculate augmented profits, without using this marginal relief method, there is an optional method to calculate your tax rates for the thresholds. What is it? Effective marginal rate. What is effective marginal rate? Up to 50,000 you calculate at 19%. After that you calculate everything at 26.5%. How much? 26.5%. So then you will get the effective rate, because no dividends is there, directly you can calculate your threshold. Did you understand that? I shouldn't say did you understand, because why? These are the factors which we have already studied. I'm just digging everything out. So first of all, do an analysis again the way I'm doing it. Take your tax rates So you are studying the tax allowances and rates which is given there. Parallelly, you're going to go to the respective areas and do some activities. Don't think that only by practicing the exam kit you are getting more confident. No, because you can't answer the new questions because your exam paper is going to be fresh. The rules and regulations are similar, not same. So the way of thinking needs to be adapted to that particular part. So beyond this point, I'll discuss the other parts tomorrow. Okay, it's because, or not even tomorrow, this is going to be speak about the value added tax. Okay, so let's do more questions on that. Then penalties for this, inheritance tax rates, then inheritance taper relief. Right, okay, I'll ask you another question. What is inheritance tax? Kai, what is inheritance? Amra, what is inheritance tax? Primaz, Malik, Fatima, what is inheritance tax? When you are making your transfers of your property or wealth, rather saying property, the correct word is your estate or your wealth. When you're transferring it to someone, that transfer will be considered into inheritance taxes, and there are some conditions you need to know. Okay, giving you an overall summary of inheritance tax. Inheritance tax, if you understand this, it's very simple. Okay. So first of all, when it comes to inheritance tax, there are three stages. Stage 1, stage 2, and stage 3. Okay. Tell me, what is a PET? Very good. What is a PET? Potentially exempt transfers, as if I don't. What does it mean? Definition.
For individuals.
Very good. The wealth which is transferred for individuals. The wealth which is transferred for individuals. CLTs to the trust. The wealth which you are transferring into trust. So you will transfer your wealth during your lifetime and upon your death. Correct? During your lifetime, you can transfer. For an example, let's assume my dad, during his lifetime, giving the Mahagedara to me. It's a lifetime gift for me. Correct? Then, how the tax is being influenced is a separate story. So that is considered as a PET or a CLT. PET. Any transfers done between individuals, it is a potentially exempt transfers. So stage 1 is a lifetime tax. Correct? Any transfers that you're making lifetime, during your lifetime. Whose lifetime? The person who is gifting while he is alive. My dad is still alive. So since he is alive, he is giving me a gift. So during the lifetime, should I pay any taxes? No taxes, no lifetime taxes for PET. But my dad is not giving his wealth, his estate to me, but it is given to a trust who is managing on behalf of my dad, because let's assume I have not reached the age. I can be 10 years old. At that point, he's giving me the asset. I don't know what to be done, right? And you are not qualifying to pay taxes also because you are under the age. You got what I'm trying to say? So, and your dad, my dad is giving this to a respective trust. Now, you would have seen in the movies, right? After the death of the parent or someone, he is coming distributing the wealth. Who is coming? A lawyer can be appointed. He can appoint another representative. An accountant can be appointed. Who is managing your wealth? So he will come and make the estate valuation. You got it? A representative. We call him as a representative. Okay, coming back. Now let's assume during my dad's lifetime, he gave me his estate. Entire estate is given to me. Entire value of his wealth is given to me. Is it taxable during the lifetime? No. It's a PET. No taxes in the stage one. But if he is transferring it to a trust, it is taxable. It is taxable. How it is taxable? How it is taxable? It depends on who pays the tax. That they will let you know. During the lifetime, if trust is paying the tax, they need to pay 20% of inheritance tax. If my dad is paying, which means the person who is giving, the transferor, if transferor is paying, he will pay 25% of this tax. This is happening when you are making a transfer to a trust. Okay. Stage 2. What is stage 2? Death tax. Now my dad is no more. He passed away. Now there is a condition. What condition? Do you remember the 7-year rule? Do you remember the 7-year rule? This is important to understand. The 7-year rule. Why it is important to understand? Because let's assume my dad is giving me the gift in 2007. Example. And he passed away in 2017. He passed away in 2017. So this is the date he gave me the gift, and he passed away in 2017. Tell me, should I calculate inheritance tax? Should I compute inheritance tax? Now this is pure theory. I'm just talking you the theoretical principles. This is not your theory class. This is your revision class. So tell me, anyone, this is an open question. Anyone can answer. Should there be any inheritance tax to be paid? No. Why? You need to consider from the date of gift, within 7 years, if that particular person dies, then you are supposed to pay taxes. Otherwise, zero. Especially, now let's assume if my dad dies in 2010, should I pay taxes? Yes. Why? After the gift, within 3 years, he passed away. Within 3 years, he passed away. Okay. Now what happens as a result of that? So with the 7-year rule, the PET is becoming taxable for the first time. In the stage 2. The CLT is becoming taxable for the first time. Sorry, not for the first time. Yet again, it is taxable for the remaining amount. Because the inheritance tax percentage is how much? 40%. So during lifetime, you have paid either 20% or 25%. The balance you need to pay now. The balance is paid in the stage 2. Now the stage 2 is decided based on the person's death certificate. Based on what? The person's death certificate. Now this ideology needs to be there. This theoretical principle needs to sit in your mind. Otherwise, how can you make decisions? Now this 7-year rule applies in different angles. You know what is NRB? Nil rate band. Every 7 years, that is also getting reset. So what is nil rate band? What is nil rate band? What is the amount what you'll write back? Hmm. Okay. So guys, these areas I'll explain you in the question practically. Because when I say this, you might, if you're not answering me, means now one or two people are answering, which means only that particular individual would know what is that. You got what I'm trying to say? I will keep on explaining things, it will go into your head, but you can't reflect into the questions. So those theoretical parts, that's why I didn't discuss about that also. Okay, there are few important points that you need to consider. Make sure that you're going through the theory, but I will practice some inheritance tax questions. Through that, I'll teach you the entire concept that you need to do. That likewise, I'll give you a summary what you need to do. So now let's jump into more questions. Okay, let's start doing some questions. So which I actually gave it to you all for your. So let's start doing the mock paper now. Let's start answering that. Let's do it with me. Section A. Let's start from section A type of questions. So in this section A, so in the tax year, hold on. Okay. In the tax year 24-25, Suze earned an employment income of 177,540, received bank interest of 16,875. Is bank interest taxable? Good question. Savings, is it savings income? Yeah. Then is it taxable? Why is it taxable? This is an interest that you are receiving. Interest received. Now, some students confused. The gilts interest that you are receiving, any interest you are receiving, it's an investment income for you. Any income that you receive needs to be taxed. Okay, right? And you are making a dividends of 16,500. So they are asking us what needs to be your tax liability. A basic question. Can you go wrong here? You should not go wrong here. Should you get 2 marks here? It's a must to you. If you go wrong here, then you're very bad in tax. Correct? Because this is a simple question. Now I'll quickly tell you all something. Because they are not confusing you here. So the shortcut, what the shortcut would be? The total employment income. Your employment income is how much? 177,540. Your interest income is 16,875. These two will, sorry, let me do like this, otherwise you. So what you used to do is your non-savings income, your savings income, and dividend income. Quickly divide into that. Because the tax rates are different to these, and there can be some special allowances. Don't forget that. So non-savings income, employment income is a non-savings income. It's how much? 177,540. Correct? Then your savings income is how much? 16,875. That is your savings income. Then your dividend income is how much? 16,500. So what is your total? What's your total income?
210.
210.
915.
915. Now I ask you some basic questions quickly. First of all, tell me whether this tax rate payer will receive personal allowance. No PA. Why? His taxable income is more than 125, 140. So don't waste your time there. No personal allowance. Now, is he an additional rate taxpayer? Yes, he is an additional rate taxpayer, which means your first 37,700 needs to be taxed at 20% for non-savings income. Then up to 125, 140, it needs to be taxed at 40%. So the difference is how much? That is 87,440. You got it? What I'm trying to say? So 177,540 is your total non-savings income. 37,700, 20% is how much? 7,540 or 570. 540. 7,540. You're getting 7,540. Then the income from up to 125, 140, it needs to be charged at 40%. Already you have taxed up to 37,700. So 125, 140 minus 37,700 is how much? 87,440. 87,440 into 40% is how much? 34,976. So which means up to 125, 140 of your total non-savings income of 177,540 is taxed. Now the next difference that you need to find, 125, 140 minus 177,540. That is how much? 52,400. That needs to be taxed at 45%. That needs to be taxed at what? 45%. So what's that total? 52,400 into 45%? 23,580. So these are the tax. So I'll put the tax liabilities into this side. Now savings income. The first thing you need to check is, do you have any allowances to give? If you are a basic rate taxpayer, you will get first 1,000 at nil rate. If you are a high rate taxpayer, you will get 500, but you are an additional rate taxpayer. Do you have any allowances? No. So everything else will be taxed at 45%. Because here itself you are reaching the 45% limit. So go in this order. So then it's easy. Otherwise you will confuse in your exams. So 16,875, 45% is how much? 759. Okay. Then you have dividend income. Any level of dividend income, any type of taxpayer, you will receive an allowance of 500. Correct? So only 16,000. Is it 16,500? Yes, only 16,000 is taxable. At what rate? Dividend income's additional rate is 39.35 or 75? 35. No? So that figure will be given in the tax rates that you can confirm even if you're having a doubt. It is 39.35%. So that's how much? How much is that? How much is that? 6296. Now total all this, that is your liability. 7,540, 34,976, 23,580, 7,996. Option C. If you're getting option C, then I'm happy with you. You got it? Now see, to get this option C, you should know this calculation. You should know this method to determine. Okay. So this is a very basic question, I would say. We need to score the 2 mark here. There is no excuse if you score a 0 mark here, which means your basic is not strong. It's a very basic question, I would say. Correct? Then yeah, okay.
The exam remote, so I don't get paper, right?
You can use paper.
Okay.
Yeah.
I saw the mention we can't use that paper.
Then you can use the scrap sheets there. Scrap pads will be given to you.
So we could be having an Excel.
Yeah, make sure your power connection is not disrupted. Your internet speed is there. The noise are the three main factors in a remote exit. And lock your, because if a noise comes, they will immediately escalate. They'll stop, they'll end the exam. Got it? So it's okay. It's okay to do the remote exam, but make sure those things are not.
Scrap paper is
Yeah, you can use a scrap paper. Let me also read the conditions a bit. Just go through the notes. I have to also go through those notes. Okay. Fine. So did you understand the answer for the first one? Now the second. For the second question, they are asking us to find the total employment income. What's the question? Did they ask you to calculate the taxes? No. They're just trying to understand what is your employment income. So which means if she's working for a company, what is her income? So Sheena earns 37,000 per annum as a marketing executive for AD Limited, and which prepares accounts for 31st March year end. For last 2 years, Sharina is receiving some bonus payments. So the bonus payment for the year ended 31st March 2024 is paid on 1st of May 2024, 4,000. For 31st March 2025 is paid on 1st of May 2025 for 5,500. So in addition, Sharina provided a parking place which is the close to their place of work. The provision of the space cost is £1,000 per employer. Okay, they are not giving per employer, but they are saying 1,000 count is for the employer. So now what is your total employment income? What's your answer? First of all, let's assume you're Sharina. You're making 37,000. That is your normal gross salary. No? So the normal gross salary is considered. The next part is, now this is the normal salary. I would say salary income. This is your salary income. Then you are receiving a bonus to that. Now when you're choosing the bonus, which bonus you need to take?
25.
How to decide? Should you take that 4,000 figure or 5,000 figure? 5,000. Why 5,000? Anyone else? Any other cross questions? How to decide bonus for employees? So for the year ended 31st March 2024, that is the period. The entitlement date is when? 31st March 2024. But you are getting paid in 2024, 1st of May 2024. Now this is technically falling into the tax year 24-25. Correct me if I'm wrong. Okay. Then you are having another year end at 31st March 2025. This payment, I'm talking about the payment. The payment is received on 1st of May 2025. But this is belonging to 25-26 period because the 1st of May 25 is falling to 25-26 period. So should I take this 4,000 as your bonus or something else? If you are choosing something else, why is my question. That's the theoretical part. I'll give you a minute to rewind yourself. When did you choose paper? You did the mock paper, no? That's what I'm asking. You choose 5,005. Why? Why?
It's paid in 25 related to
No, I need you're giving me a generic response. I need a specific response. Amra, any thoughts? 24-25 tax period bonus is 5,005.
bonus is related to the year end.
No. There is a particular point how to choose the bonus. That's what I'm asking with you. It's a particular point I discuss with you. If you go to chapter number 4, I guess.
Earlier of paid date of
Earlier of paid date, earlier of entitlement date, needs to be between earlier of paid or entitlement date. Now this question is bit tricky here. Why do I say bit tricky? Now you need to consider your tax year. So in the tax year, this 1st of May 2024, you are paying the last year's bonus. So generally, last year, whatever you're estimating, your performance will be determined this year and will be paid in the following. Okay. So here the date of entitlement is not given, but the year is given. You got it? The date of entitlement. Now, for instance, let's assume this bonus is supposed to be received on 1st of February for the year ended 31st March 2024. Then you need to consider the 4,000 to the 24 financial period, which means 23-24 period. But this 4,000 will go under 24-25 period because the earliest date here is the date paid. The date of entitlement is not given. Have they given the date of entitlement? Can you prove me the date of entitlement? Then I'll agree with you. What you have done when you're marking this MCQ, you have considered this as the date of entitlement. Everyone got wrong. Everyone. Okay. Now, sir, how to determine the entitlement date? They will give you. They need to provide you the entitlement date. In this question, they have not provided the entitlement date. Entitlement date is different. Financial period is different. The date that you are receiving is different. The confusion or the comparison needs to be between the paid date and the entitlement date. Whichever is earlier, you need to choose. So in that essence, can I take 1st of May 2025? You can't. That will fall into 2025-26 point. Amna, you're correct. Receipt basis. But make sure the entitlement is also cross-checked. Then, what is the next part of the income? In addition, Sharina is provided with a parking place which is close to their place of work. The provision of the space cost is 1,000. So should you consider 1,000? The parking space. Now, since this is an MCQ, is exempt benefit. I gave you a big list, right? I gave you a big list of benefits. So parking space for employer is going to be exempt benefit. So will it increase my total employment income? No. If it is not exempt, it will. So my answer needs to be 41,000. Do I have an answer for 41,000? Option A. Option A is the correct. So for the director bonus, we should see the date water correct. So, so should the water date fall within the accounting period for the tax year of the director bonus? There, you need to see the date of water or the paid date, whichever is the earliest. No? So water date is the date that you're going to consider. So see the date which falls to which tax period. From that particular period, choose the figure for direct. Okay. So it depends on the date of vote and the date of payment, whichever is falling earlier. So based on that particular month, you need to decide whether it's falling to the tax year 24-25 or before or after. Okay, Rimas? Okay, fine. Next. The third one. It's another good example to practice. So there is a sole trader who elects to use what basis? Accrual basis of accounting for tax purposes. So he has incurred the following expenses for the year ended 31st March 2025, but he is unsure whether whether these things will be treated for the tax purposes or not. So he's having three factors. You need to say whether it is allowable expense or disallowable expense. So there are some allowable expenses in terms of trading profits. So tax adjusted trading profits. I told you, right, when I was drafting you the revision, you need to be clarifying yourself with, is it an allowable expense or a disallowable expenses. So the cost of new car used partly for business purposes, is it allowable or not allowable? Allowable or not allowable? This is not allowable. However, this will qualify for capital allowances. There you need to determine the private usage separate. Okay. So this is not allowable, but when you are determining your income tax computation, when you're calculating your capital allowances for that particular thing, you need to decide your private usage and get the business part separately. For capital allowances, yes, but you can't consider this as a trading expense. So this is not an allowable trading expense. So writing off trade debts written off by a customer, we call it as impairment losses. Is it allowable or disallowable? That is allowable because it's a business related expense. Any business related expense is allowable. You are selling, your customer is not paying. It's an allowable expense. Legal fees in chasing the trade debt owed by a customer. Is it allowable? Are you spending for business or personal? You are spending for your business purpose. There had to be a legal cost. For an example, let's assume you are one of my major customers. I have made a sales of 5 million to you. So obviously, can I write it off as bad debts? Even if I'm writing it off as bad debts, it will impact my organization massively. It's a material impact. So then I need to file a case against you. I need to spend on you. Later, I have to recover from you. IAS 37. Provisions for contingent assets and liabilities. Now, my next question is provisions are allowable expenses? Provisions are not allowable expenses. Note that point. Provision, if you have provisions, it's a what? Provisions are disallowable expense. So at this point, the legal fees is going to be unallowable expense. So that's your answer needs to be not allowable, allowable, and allowable. Next, it's a national insurance contribution question. So chapter 9 or 10. Christine operates as a sole trader. Her trading income for the period is how much? 55,000. The trading income is how much? 55,000. They are asking us the class 4 NIC. Class 4 means self-employed person. For self-employed person, what is the contribution they need to make? How to understand the contribution? If you don't know the percentages, will they give us those percentages in the tax sheets? Let me show you. It is not done. Here. That is class 2. It's a matter of using this part. So what is the taxable income? 55,000. First 12,570, nothing to be charged. So which means from 50,270 minus 12,570, you need to contribute how much? 6%. What is that 6%? The difference 6% is how much? How much? 2262. 2262. Is that all? No. You are contributing how much? 55,000. Up to 50,270 you have already contributed. Now the next needs to be charged at 2%. So that's going to be how much? I'll take 95. So the total is 2357. That's your answer. Now see, now this part they are giving you the income. It's a matter of using a fact sheet to generate. Don't miss this out. If your answer is incorrect for the second one, I would have excused, because you would have been blind with the entitlement date. You would have confused. It's a reasonable thing. It's a 50-50 thing. Okay, that's I'm okay, but now you know how to design it. Third one, you need to estimate the fee. Now see, in the third question, you need to get all these 3 correct, guys. Then only you will get 2 marks. Even if it is 1 incorrect, you will score 0. That happened to most of you. Okay, then at this point you need to provide me an answer. The answer is how much? 2000. How much you calculated? 2357. So those who have given me this answer, your answers are correct. Is it a difficult one? No, it's an easy area. So we have to, it's a must to score 2 marks there. Correct? So don't miss such easy questions in your exams. There will be some questions like this. Everything won't be hard. There is an area, some direct questions are also given. So which means capitalize those marks. Now the private rules. So most of you all had confusions using this, the private usage. I'll give you a minute to read this question and draw how to determine the exemptions. So let me also join you all. So Mara has owned her house. Now, first of all, tell me, should you pay taxes on your main residence? Should you pay taxes on your main residence? No. But if your main residence is utilized, generate income, then you have to. Correct? Right. Now, what happens at this point? Mara has owned her house in Manchester since 1st of January 2040, not 24, 40. She moved in as soon as she bought it and occupied. So when she is moving to the house, she's actually moving to the house on 1st of January 2050. But when did she own the house? 1st of January 2040. Now I'm trying to identify the period of non-occupancy. Okay. But here they are asking us include the period of both actual occupancy and deemed occupation. So the question is, what are the days that you are actually living? So I'm actually occupying it from 1st of January 2050. Is that the understanding? She moved in as soon as she bought it and occupied it until 1st of January 2050. What does it mean? Now, what's the understanding? Now, this is not tax problem. This is English. Correct? Right. So, who can tell me the understanding behind it? Raf? Her actual occupation is from 1st of January 2014 until 1st of January 2015. Correct? That is actual. Then until 1st of January when she left to travel the world. So which means she is going out of the country. While traveling, she got married. So she went to another place, she found a partner. And now she is moving to Bermuda. She returned to UK in 2021. So she is coming back in 2021. So between this, it is non-occupied. Correct? Unoccupied, no, she was not there. In 2021 with her husband and children, but did not work and did not reoccupy the Manchester property. She did not even work or she did not use the property in the Manchester. So when she is returning back in 2021, she sold the property in 1st of January 2025. So 1st of January 2025, she is selling the property. Correct? So in calculating the value for private residence exemptions available to Mara, when you're selling only, you're making this. Now, this is subject under which topic? Which topic? Which type of tax? Or what type of taxes you need to search here? Capital gain taxes. Very good. This comes under capital gain taxes. Okay. So which means she did not occupy. So what is her period of occupation? Occupation means how long actually she was residing. During that period, it is exempted for you. So they are asking what is that period. So since she is occupying from 1st of January to 1st of January 2015, exactly 12 months. Correct? 12 months, right? Then she is selling the property on 1st of January 2025. The last 9 months is deemed occupation. The last 9 months is what? The last 9 months is the deemed occupation. Correct? So, since you have the last 9 months, can it be 11 years? Exclude your answer. Can it be 4 years? Am I getting 4 years? 12 months plus 9 months is how much? 21 month. Can it be 1 year? It's more than 1 year. So technically your answer needs to be 1.75 years. They have given in years. So 21 months means 1.75 years. So this is divided by 12. So what's the answer you're getting? 21 divided by 12. 1.75 years. They're converting in number of years. Now in this question, they are not asking you any calculations. Now, what is the rules behind this? Let me come back to the theoretical part. Under capital gain tax, so we can take any period overseas over 3 years, right? Okay, good. So first of all, she was in Manchester United on 1st of January 40, and she's moving to Bermuda after 1st of January 2015. During this period, she was actually occupied. Okay. However, when you're determining your actual occupation, she is coming back to the country after 3 years. It's a good point. That's what I wanted to say. So after how many years she's coming back? She's coming back to the country in 2021. She left in 2015. So 15 to 21, how many years? 6 years. So which means at that point you're deemed now and coming and you're going to sell this property. So why you're calculating the PRR, private residence exemption or private residence relief, we call it as. Why are you calculating this? To determine when you are occupying your main residence. Now, if I completely sell my main residence, my home, to someone and making a capital gain, my CGT liability is 0 because it is exempted. The problem here is I'm not utilizing my space for some time. So I'm leaving the property as it is, but now I'm coming and I'm selling it off. So when you are selling it off, there are some conditions that you need to adhere. The first point is to understand what is your actual period of occupancy and what is your non-occupied period. Okay, so that is depending on the dates that you are staying and moving out. So you are staying completely from 1st of January 2014 to 15, the complete 12 months is there, no issues. Okay, then you're absent, which means you're non-occupied until 2021. So you are going overseas. So when you are going overseas, when you're traveling overseas, then what happens? Since this is becoming more than 3 years of a stay or 4 years of a stay, this period is becoming or falling into the category of non-occupancy. If she is returning back within 2 to 3 years, this is where you forget your theory. You got it? Now that's why I always used to say, when you are doing a question, it is not point of getting the final answer. To get the final answer, you know only to answer a similar question like this. Or the same question rather than saying similar, the same question. The last month, 9-month rule is always applied. 9-month rule is anyways given as a deemed occupation, even though you're not occupied now. Actually, she's not occupied here. That 9 month rule is given. But what are the other conditions is my question. Who can remember the conditions for PRR? Okay, I'll give you 3 minutes to go through your notes. The time is, what's the time? 1:30. Give you 3 minutes to go through your notes and draft it, because everyone take a new draft sheet. Conditions for PRR exemptions. Okay. Point 1, point 2, point 3, point 4. Let's do it right away, everyone, and then we'll discuss with everyone. So then we don't forget it. Otherwise, we will forget it. So what are the conditions? Actually, someone asked me this question, so I answered that particular person, answered another concept, but I want everyone to know this. So let me also support you. Let's take some notes. Now, this is to determine your non-occupation period. So try to understand this part. So let me join your search. So I won't repeat this again and again. So make sure we are reading this at this particular point. So we are going to discuss about private residence relief. Correct? So what is private residence relief? Now this is a relief that we are going to understand where an individual has actual occupancy and non-occupancy of his main residence. So when it comes to actual occupancy and non-occupancy of your main residence, you need to determine your actual occupancies, the days that you are actually living. The days that you are actually living. So the days that you're actually living, it can be from the day that you are staying in the house until the day you are moving out. From there onwards, everything else needs to be your non-occupied period. Okay. So when you are determining your non-occupying period, there are some factors to determine. So how to calculate my non-occupying period? So period of non-occupying, even though you are not there in the house for the last 9 months, we consider it as you are occupying it. Though you are not there the last 9 months until the date that you sell, because capital gain taxes is charged once you sell this property. No, So the problem here is, when are you going to sell the property? So I'm going to sell the property. So when I'm selling the property, if I'm fully utilizing my main residence, I am not liable for any capital gain taxes, because main resident is exempted for capital gain taxes. Did you understand that point? However, the period, if you have not used your house, that part you need to prorate and take the period that you actually occupied is exempted. The period that you did not occupy is, you need to pay taxes on that particular part of the gain. You got what I'm trying to say? You are living in the house, let's say you are utilizing the house for 100 days, 50 days you are living. For 50 days income, you don't want to pay taxes. The next 50 days income, you need to pay taxes. However, the last 9 months of that 50, okay, that 9 months period is exempted. So that exemption is what we call it as deemed occupation. We call it as deemed occupation. So what is deemed occupation? Deemed occupation is contributing to your actual occupation. You got it? So that's the reason why in my question I took that 1 year plus the 9 months from 2025 and 9 months behind. The last 9 months is anyways exempt. Okay. Now this is a generic understanding. Now what else you need to understand about this? There are some conditions that you need to understand. So the first condition that you need to understand here is going to be non-occupying period means any period where any period the taxpayer, let's say any period the taxpayer was employed abroad. What does it mean? Now, for an example, now let's assume in this situation, this particular person is migrating for work purposes. Now, you are having a house in Sri Lanka. You're not using that house from 2020 until 2025 because you are in Dubai. Will that particular period be considered as non-occupying period? Yes. That will be considered as a non-occupying period. I'll tell why we are calculating this. Okay? Because you need to calculate actual occupancy and the non-actual occupancy. So this will contribute to non-actual occupancy. Then the second condition gives more reflection to us. What's the second condition? Who can remember the second condition? Anyone? The period which is not exceeding how much? How many years? Which is not exceeding 4 years. Which is not exceeding 4 years. The reason is due to what reason? What are the reasons? Work away from home. The reason is what? You are away from home for work purpose. Okay. In UK or abroad. So now there is a critical understanding here. Now this person, she moving to Bermuda in 2015. In 2015 she is moving to Bermuda. But she is returning back when? 2021. Is it more than 4 years or is it less than 4 years? Sorry, the period it needs to be not, okay. So that's what I'm saying. Not exceeding 4 years. Is it more than 4 years or less than 4 years? More than 4 years. So which means we can consider that particular period as non-occupying period. However, if the periods are not exceeding 4 years due to work away from home in UK or abroad, less than 4 years means it can consider as, it's considered as what? Actual occupying period, a deemed occupation. At that point also it becomes the deemed occupation. So if it is not exceeding, if periods not exceeding 4 years due to work from home, sorry, in this case she is not traveling for work, no, they clearly said she is not traveling for work. See, she moved as soon as she bought it and occupied until 1st of January. She left to travel the world. While traveling, she got married and moved to Bermuda. She returned to UK in 2021 with her husband, but did not work or did not reoccupy the property. So her motive is something else. So this part of the consideration is not eligible to her because they did particularly talk about that she is moving for work. But the third condition is periods not exceeding 3 years for any other reasons. So what is the third point is telling us? The third point I'm reflecting here. The period which is not exceeding 3 years for any other reasons. If you are out of the country, now in this case, any other reasons, right? She's not going for work. Since it is any other reasons and you are being more than 3 years, we consider it as a non-occupied period. If it is within 3 years, you consider it as deemed occupied period. Did you understand? So which means it will also fall into the deemed occupation. You know what is deemed occupation, right? So deemed occupation means literally you are not there, but you assume that you were there. That is deemed. Anything that you find the word deemed means you are assuming that you are there. So now what we are trying to calculate from here, you are trying to calculate, okay, the number of months. You need to calculate this in months, okay? The number of months you are actually occupied, the number of months that you are not actually occupied is the difference taken to determine. Now let's assume you are making a gain of 1 million by selling your house. Now you need to understand if it is 100%, if you are living in the house 100%, then you don't want to pay zero taxes. So you don't want to pay any taxes. Your capital gain taxes is 0. But let's assume if your actual occupancy is 70% based on the number of months and the non-occupancy is 30%, of this 30% capital gain taxes you need to pay, which is on 300,000 you need to pay taxes. You got it? So that is the reason why we are identifying this. So here the PRR will be 70%, which is 700,000. Okay, fine. Did you understand that? Clear? There is another relief. What is that relief? Letting relief. What is letting relief? I'll teach you that as well. So what is the diff? Okay, hold on. So first and second one is both actual. about employment, yes. Also for the deemed occupation, what does actual occupation precedes as follows? Absence means. Okay. So what they are trying to say is the first 2 points. Now see, first 2 point, you are moving across the country for work purpose. See the first point. Now let me explain that and come to the letting relief. The first condition is what? Any period the taxpayer was employed abroad. So I'm going for work. If I'm going for work reason for any period, that is what? Is it non-occupied? That's what I told you there. You should consider that way. Okay. I'll reflect the second point and then come to the first point again. Then the second point I'm saying, the periods not exceeding 4 years due to work away from home in UK or abroad. So there are two things here. So the first 2 points are critically discussing about the employment factors. Very good. It's a good catch. First two factors are talking about the employment factor. The next point is a generic factor. So this point you understood. The third point is the period which you are not exceeding 3 years for any other reasons. Then that will be considered as what? A deemed occupation. So if it is exceeding more than 3 years, you will consider as non-occupied. Less than 3 years means it is considered as occupied, deemed occupied. Okay, occupied. Then the first two things, don't you have a confusion? It's a good confusion there. So what is the difference between the first 2 points? Contradicting, right? Any period the taxpayer was employed abroad and periods not exceeding 4 years due to work away from home in UK or abroad. It's also UK or abroad. No? Still the abroad part is there. So in the second point, I'm saying that the period which is not exceeding 4 years due to work, I'm not going to consider it as an what occupation? Non-occupying period. The period not exceeding. Okay. So if it is not exceeding means it is occupying. You are living in the house. You are considering you are in the house. More than that, you don't consider. You are absent. The first point tells you any period the taxpayer was abroad, it's fine. Any period means, for an instance, let's assume I'm going for Dubai for 6 months. Coming back to my home. Then I go back again. So my travel is up and down due to my work. I'm not purposely going there for any other reasons. Is there any other reasons for me? No. My only reason to travel is work. So any period that you travel for work, it will be considered as deemed occupation, not occupation. It will be considered as an occupying period. You got it? It will be considered as occupying period, not as non-occupying period for work-related matters. So if you travel out for work-related matters up and down, it is occupying. If you are traveling, the periods not exceeding the 4 years due to work away from home in UK, now this is continuous. That's a continuous thing. You got it? The first one, you're coming back. But the second one, the period that you went, now I went to Dubai, I'm not coming back for next 6 years. The period extended as a result of work. I'm staying in UK, Dubai for last 6 years. Then that period will be considered as non-occupying. The entire 6 years will be. Why it will be considered as non-occupying? Why that entire period will be considered non-occupying? Because for last 4 years I didn't return back. It due to work, but I did not return. I was absent. You got it? Then the next thing is for any other reasons. So first two reasons is for employment fact. Technically, if you are an employee, these are the two reasons you travel. No, you just go for any other reasons to visit. For instance, let's say sometimes you go for vacation. So during vacation, if you go for 1 month vacation, you are not living at your house. So should it be calculated under non-occupying period? The problem is when you calculate under the non-occupying period, you need to pay taxes. Okay, how to escape from taxes? You need to understand. Okay, any period that the person is traveling up and down for work, it's fine. It is considered as occupying period. Okay, the actual occupying period, which means for that period you don't want to pay taxes. If it is exceeding more than 4 years, okay. So for an example, let's say I'm having a long stay, but for 3 years. Sorry, but for 4 years. Within 4 years, I'm returning back here means it is considered as occupied. But I'm coming in the 5th year means it will be considered as not occupied. So make a visit and go. You got it? Did you understand that? Clear? So if that works, 5 years continuously away from home, 4 years is exempted and the first year is taxed. No. Not 4 years is exempted in the first year tax. The rule is if it is not exceeding 4 years. Not exceeding 4 years means entire amount is considered as occupied. If you are moving to the 5th year, entire up to 5 years it will be considered as what? Not occupied. That's the rule, okay? It's not 4 years exempted and 1 year not exempted. Not that. Fine, good question. Good question. Now is that clear? Now don't forget these rules until September 2nd. After September 2nd, you forget it. This is for what? PRR, private residence. Now I wanted to teach the next one. I forgot to teach the next one. What's the next type of relief? Letting relief. What is letting relief? Now this is still under capital gain taxes. My main house, I am living in the main house. Okay. Now here I have 10 rooms, 5 rooms let, 5 rooms I am occupying. The non-occupying space is what? That 5 rooms. So that will be automatically subjected to property income as well, correct? Under property income, you will get the income and there you will find your relief. What's the relief? 7,500. Then I told you a rule for that. Should you claim 7,500 if your allowable expense is 8,000? No. If it is less, claim. Less than what? 7,000. Now that is not applying here. I'm not going to talk that part. Now that is also a portion. That is you are generating an income. So now this non-occupying period that I'm going to determine for capital gain taxes. What's the purpose of capital gain taxes? You are selling a capital asset. From that capital asset, if you're making gains, that gains is taxed or not is my question. So this time I'm going to sell my main house. I'm selling my main property, the house you are living. So as you all know the principle, if you are selling the main house, 100% if you are occupying, then you don't want to pay what? Taxes. But if you are not occupying 100%, then the non-occupying days we need to estimate and pay taxes. That's the rule. So the letting space which I am giving will not be considered as what? Will not be considered as an occupying period. However, you will get a relief. So there is a fixed relief of 40,000. Correct? So the letting relief needs to be lower of 3 things. Lower of 3 things. What are those? First thing is needs to be less 40,000. The limit is 40,000. The second rule is your PRR, your private residence relief. you are getting your private residence relief, you need to compare between these three and take which is the lowest. What's the third point? So first one is that 40,000 threshold. Second point is the PRR relief that you calculated. Third point, now if you do not know this rule, you can't do any questions from this part. What's the third point? Okay, yet again I'll give 2 minutes, try to find it out. Please, then you see the book. The gain for the relevant period. You need to consider whichever is the lowest out of 40,000, or when you calculate the PRR. Now let's assume you're calculating your PRR. Three things to consider for letting relief. So the letting relief figure needs to be, so relief means what? It will reduce your taxable income. The capital gains needs to be reduced. So that can be reduced. The first thing is, if you are making 40,000 pounds or maximum is 40,000, then your PRR exemption, let's assume it is 50,000. The relief that you calculate is 50,000. Then the third point is your actual gain. So actual gain out of the property is, let's assume 100,000. So in this case, which is the letting relief figure that you will choose? 40,000. You got it? Let's assume in an occasion where PRR is 30,000 and your gain is yet again 100,000. Now what you will choose? PRR. By that amount, that will be relieved. Did we do a question? Yes, we did questions. I did activities with you. Now you need to remember these rules. Where does it apply? Correct? That maturity is important. Otherwise, we will struggle in questions. So letting relief and PRR is given to what particular transaction? When you are selling your main residence. You got it? When an individual sells his own residence, if he is 100% utilizing it, no taxes to be paid, the problem appears when he is not utilizing 100%. When he is not utilizing 100%. When he is not utilizing 100%, what happens in this situation? What happens in this situation? You need to calculate occupying period and non-occupying period. That is for PRR. What is PRR? Private residence relief. When you are calculating the actual occupancy is easy to determine. The days that you are actually there in the property. The days that you are utilizing your property, that is all fine. But the non-occupying period, you have to be very smart. The last 9 months is deemed occupation. Consider it as that you are living in the property. Then you need to consider 3 factors. What are those 3 factors? 2 employment factors and 1 generic factor. The generic factor is for any other reasons you are abroad for more than 3 years. For more than 3 years means entire period is going to be considered as what? Entire period is going to be considered as non-occupied. It will be considered as non-occupied. If it is less than 3 years, it will be considered as deemed occupation. You are occupying. That is the other reason. But employment factor, that will be considered between the 4 years. So continuous 4 years, if you are not coming, if it is exceeding 4 years, the entire period is considered as non-occupied. If not, it will be considered as occupied. The first factor is also telling that any period that you are working abroad, okay, will be considered as deemed occupation. You got it? So that is how you need to make sure to understand those principles. So also deemed occupation, what does the actual occupation precedes and the follows absence means. Okay. So deemed occupation, what does the actual occupation? Preceding means what? Before. Okay. So actual occupation before and follows absence means. So what they're trying to say is, what is your actual period that you're occupying? Absence means the period that you're not living. That's where you need to consider these three factors. So when you're considering these three factors, the period that you are absent also can be considered as deemed occupation. Okay, or considered as the period that you are occupying if you are not meeting the three conditions, is what that means. Okay, if you are confusing that with that factor, forget about that factor, understand these three factors. What are the three conditions? For any period that you are traveling out for work, then you are not there in your house, no, you are absent at your house, which means it is considered as occupied. You are occupying the house. Second factor, now you are occupied, but you are not coming back to home for last 6 years or 5 years, more than 4 years. If it is more than 4 years, it is non-occupied. But if you are coming back in the third year, fourth year, then it will be considered as you are occupied, which means you don't want to pay taxes. It will be contributing to the relief. The third factor is the any other reason. If you are going abroad for any other reason and you are not traveling back for more than 3 years, means entire period will be considered as not occupied. If you are traveling before the third year, means we will consider it as an deemed occupation. So those are the factors that you need to take. Clear? Any questions? Amra, are you clear now? Rimas, Malik, Amruti, you? All good? Okay. Fine. So guys, it's not about, yet again I'll say, it's not about the theoretical perspective. It's also about applying in this question. Now see, now this was a very practical question, right? So from this fifth question, we understood why it is 1.75 years. So if you know the theoretical areas clearly, if you don't have any doubts, it's easy to apply. Okay. Shall we have a break, lunch break, and then come back and start on the next questions? Okay. So before we go for the lunch break, quickly, it needs to be very transparent between us. So far, how is this session? So if you want, let's, is it the way I'm discussing? No, this is, since it's the first day, I'm just brushing up certain things. I'm discussing with the questions and highlighting certain areas. This approach is okay, or shall I directly go to questions and keep doing questions? I would say this is reasonable. Why do I say this is reasonable? So we are trying to match the theoretical area and the questions. Because if I just teach you the fifth one, I would teach you the reasons, the actual occupations, and the 9 months, the question is done. You got it? So when we discuss the overall perspective, it is better, I can say. Okay. So that's the fifth question. So the fifth question we are done. So let's go for a lunch break. And now it's 1:45 or 1:47. Pay back by 2:40. Okay. Because I know that when you go to eat, it will take a bit of time. So, so the next question is asking us, what is the order of matching 10,000 shares sold on 1st of June 2023? So when you are disposing shares, for you need to first of all understand, is it for an individual or is it for a company? You got it? So when you're disposing shares, try to determine, is it for individuals or is it for companies? Okay. So Jessica sold 10,000 shares in Revit PLC on 1st of June 2020. Now tell me, is it for an individual or is it for company? is this impacting for an individual or for a company? Rimas, Amra, Fatima. I don't want a doubt answer. Individual, be confident. Jessica sold. Who is selling? Not the company sold. Of course, you are having shares means of one of the company share only you should have. For an example, Hazan is selling Dialog shares. So I have invested on Dialog. Now I am selling my shares. I'm trading my shares. So when I'm selling my shares, what is the capital gain that I'm getting? That needs to be taxed. Okay. However, the number of shares that you have purchased is given in the order. So you should know the basics here. So how to match? First of all, you need to understand the date of sales. The date of sales is on 1st of June 2023. So you need to check, have you sold any shares based on the same date as the date of sales? So on 1st of June 2023, have you made any sales? Have you made any sales? No, I don't have made any sales on 1st of June 2023. So that's your first checkpoint. So on this date, on the same date, I have not purchased any new shares. So I'm not going to consider. Then the second point is within following 30 days. So within following 30 days from the date of disposal, have you purchased? So you are disposing on 1st of June 2023, correct? So have you purchased any shares within the following 30 days? Have you purchased any shares within the 30 days? Oh, there is a small error, no? Small error on the question. It needs to be here. It's on 1st of June 2024. Here they are mentioning it as 1st of June 2023. But anyways, no worries. I gave 2 marks for you all. When you did the mock, I gave extra 2 marks because that's the error. So, but anyways, we understood the mistake, right? So on 1st of June 2024, have you sold? Yes. On 1st of June 2024, we have sold 3,000 worth of shares. So that needs to be the first issue. So it needs to be matched with the 3,000 purchased on 1st of June, which means option 2 and option 3 is not your answer. Correct? So you are left with only 2. The second thing, within 30 days. So within 30 days is next 1,500. So I'm done, guys. Everything else should go from the pool. Correct? Now this is a simple match. Here you can't get wrong. Here you can't go wrong. Did you understand that? Does that make sense? But if it is for a company, how are the rules? Same date, then last 9 days of purchase, and then you go to the pool. The only difference is the second point for the companies. For individuals, the second point is within following 30 days. But for companies, last 9 days. Okay. So be careful whether it is a company, whether it is an individual, that's where you can go wrong. So you have to read your questions in that understanding. And if it is company, your rules needs to be changed. And if it is the individuals, your rules needs to be changed. Next. Okay, it's a true or false question. You can get true or false questions as well. Are the following statements about income tax self-assessment system is true or false? So you need to say whether these things are true or false. Okay. Payments on account, I call it as POA. Can you remember? Are never required for class 4 NIC contributions. True or false? So payment on account. What is payment on account? What is payment on account? Just tell me who should pay payment on payment on accounts. Or what sort of things that you need to pay payment on account. They're talking about income tax. Your class 4 and the income tax liability. Okay. Class 4 and the income tax liability becomes due. So you have 3 installment periods to pay. You got how many installment periods to pay? 3 installment periods to pay. What are the dates it's falling? The first payment is falling on 31st of July, and the second one 31st of January. Then the next, you don't know. This is income tax administration part. Now I told you, right? Most of the students, what they do is they ignore that part. Theory, I don't like that part. So if you don't like that part, that's the part examiner likes the most. Trust me. Though if you clearly understand what is it, I'll give you a summary. I'll share you a document tomorrow. So tomorrow, let me take you all through the administration parts of each taxes. Okay, so which means for income tax, companies tax, value added tax, as well as the inheritance tax and the capital gain tax. I'll give you a document. I'll share a document with you all. So it will highlight the due dates that you need to know. So tomorrow I will discuss that particular thing. So tomorrow the morning hours, that's the point I'm going to discuss. Evening hours, separate question. Okay, but before that, I need you all to go through tonight. Okay, tonight what you need to do, quickly refresh your administration notes. I asked you all to make your summaries. Now this is the point it will become useful. So since I'm going to do it, I'm not going to do further explanations on that at the moment, because we'll jump into other questions. But here I'll just give you the answers. So payments on account are never required for class 4 national insurance contributions is a false statement. It's a false statement. An individual with property income tax for 24-25 is required to keep the records to support the tax return until 5th of April 2030. Correct or incorrect? He needs to keep until 31st of January 2031. How long you need to retain the records? Was it discussed? Yes, I told in the class. And I gave this date also. It is not 5th of April. It is 31st of January. 31st of January 2031. Which means 5 years after. What's the rule? 5 years after. How long you need to retain? 5 years after the end of tax year, which means 24-25, which is 25-26, 26-27, 27-28, then 28-29, 30-31, January. 5 years. 31st January 2031 is the date, not 5th of April 2030. So till that period, he needs to keep his source documents or the records. So is that correct? No. Now if you don't know that point, you will mark it as correct or true or false at the end of the day. Then an individual who pays capital gain tax liability of £10,000 for the tax year on 24-25 on 15th of August 2026 will be charged a penalty of £1,000. Pure administration question. Pure tax admin question. So what's the rule? So when are you paying? You're paying on 15th of August 2026. technically for 24-25, the payment becomes liable on, the capital gain tax becomes liable on 31st of January 2026. So by January 2026, you need to pay the liability. If not, they will charge a penalty of £1,000. How to calculate the £1,000? Now, if I teach you, I need to pull out the entire history. So I will teach you that particular administration part together. We'll reflect all the administration questions together. So the moment, this is a true statement. This is a true statement. But you need to understand why this is true. Those who are good in the administration part, you should understand this. Those who did not, hold your emotions, because I need to take you all through a particular document. From there, you can't miss it. Okay? Because I'll teach and get you all across through that, the admin part. Next is also similar, but it's a penalty. That is also the admin questions. So see, this is also a tax administration question. So is it important? Yes, 2 marks. Another question, is it important? 4 marks. Important. For the year ended 31st March, Pen Limited submits, now this is company. Pen Limited submits its tax return and pays its corporation tax on 1st of November 2026. So when are they paying their taxes? November 2026. The return shows a taxable profits of 38,000. What is the taxable profits? 38,000. Now this is company's administration. What administration is this? Company's admin part. Then Pen Limited does not pay corporation tax by installments. So who needs to pay corporation tax by installments? Is it a good question to ask? Large companies. How to decide whether it's a large company? Don't ask me that, sir. That's what you are going to revise tonight. Now see, now these are the points that you need to know, right? Because these are the factors which is already told to you. You know the answers already if you revise. You got it? Now you can't be a person. Now I would say these are must 2-mark questions where we can't miss it. The thing is, when you see the administration part, you are lazy to read and grab the information. You got the point? So tomorrow is the last day. I will repeat it. Then after, I won't repeat it again. Because you need to make sure that is going inside and sitting inside your head to answer those questions. Okay. Has no payments made corporation tax in respect of this year, and has no associated companies. Be very careful when it comes to companies. In this, they are telling that there is no any associated companies. Previous returns and payments have been submitted and paid on time. Why they are giving that? Only if it is submitted and paid on time previously, for the entities, for the companies who are qualifying for the as a large companies for the first time, the first year itself you don't want to pay your tax payments on a POA, in an installment basis, payment on account basis. If certain conditions are met, make sure you are not a large company in the previous year and you have submitted your tax returns on time in the previous year. Now, however, in this particular part, you are not going to be a what company? A large company, but your total taxable profits is 38,000. However, they are asking us, what is the maximum penalty? What is the maximum penalty for the late filing of the return? So guys, before we go to the answer, we should know the deadlines, right? So deadline is a known factor or an unknown factor? It's a known factor for us. You see the tax year and you should know how to estimate, how to calculate these deadlines. So is this an area that we need to skip? If you are a smart student, you should not skip, because though you are comfortable in calculating parts, you're doing your calculation for MCQs. If one thing, one simple error can score you a 0. But if you really know the known points, for an example, who needs to pay taxes on payment on account? When it comes to companies, who needs to pay POA on for individuals? What is their taxable income? What is that particular date? If these are the set things, those days examiner can't change. Can he change? Then his answer is wrong. Now in the previous example, not the previous, the one before, he has mentioned it as he has sold the shares on 1st of June 2023. You reflected the answer is, the question is wrong. Why? You know the fact. No, the interest that you showed there is not shown here. That is what I am saying. So which means that's the reason why I told you, you need to study administration parts is a must. Even if you didn't study any other parts, I'm okay. Tonight you are going to reverse on admin part. And tomorrow morning we are going to study together or revise together. Okay. So first of all, you need to understand. Otherwise, these questions will be creep. No, you don't know how to charge the penalty. Is it given in the fact sheet or not? Okay, so if I ask you questions like that, you are in jail. Correct? You don't know the answer unless you need. Okay. So what needs to be the answer? Anyone? So 38,000. You are a small company. How much of taxes you need to pay? What percentage? At least tell me that. 19%. Why 19%? Because there is no associates. So your lower limit is 50,000. Up to your taxable profit is becoming 50,000. You will charge only 19%. So 19% is how much? 19% is how much? How much? 7,220. Now the next point is by when you should pay. So before when you need to pay, if you did not pay by that date, then only the penalty comes to. So you are paying on 1st of November 2026. See the taxation and pays. So you are paying on 1st of November 2026. But the question is by when you need to pay. You need to pay it by 31st March 2020. Same year and you need to pay it. You got it? If your company is qualifying for a large company, only you need to advance your payments. You need to start, the first payment should be happen from the 7th month 14th day. Then every 3 months you need to pay on the 14th day. Can you remember those things? Okay, fine. I'm not going to scold you anymore. I'm scolding to myself. Okay, so the point is I didn't teach you properly, no? That's the point. No, it's skim on me. Fine. So this should be paid by when? 31st March 2025. Okay, now at least tell me how long I have delayed the payments. How many months? How long? April? No. Sorry, this needs to be 31st March 2026. Fine. 31st March 2026. 1 year. 12 months. So within 12 months, you need to pay. So from 31st March 2026, then April, May, June, July, August, September, October. How many months you are delaying? 7 months. Because 1st of November you are paying, no? So up to October only you are paying. Right. So now what happens? Now what happens? You are late by how many months? You are late by 7 months. Now how to calculate the penalties? For first 6 months, there was an amount. You should know that. For the first 6 months. Is it given? Is it given in the... Now let me check. So you also need to check. When I ask you that if it's given, if you don't know. So they have given the standard penalty rate for errors, for deliberate mistake and stuff like that. Then official interest rate is given. Penalties are not provided. Penalties for VAT is provided, but penalties for companies? Anyone? Is it provided or not? Did I discuss it anyway? No, it is not provided. So which means that you need to remember. You need to remember the chart. Did you understand that? So that part of the calculation is not given to you. So this Pen Limited is a small company. So they get 12 months to file, and the payment is getting due by 31st of March 2026. But they are paying on 1st of November 2026, which means they are late their payment by how many months? 7 months. There is a fixed penalty that you need to pay if your returns are more than 3 months. The fixed penalty is £200. So up to 3 months, 200 or 100. First 3 months, £100. Exceeding £200. Now this is 3 to 6 months, but this is becoming 7th month. More than 6 months, correct? So you need to analyze that part also. So some answered 722. Okay, not some. Most of you all have answered 722. None of you all did this question correctly. You marked 722, right? Because I can remember. Most of you all have marked 722. How it becomes 722? How it becomes 722? So after this, what happens? This is the amount that you need to pay. Okay, you need to pay 10% on this for every delay that you are taking across. Okay, from 3 to 6 months. Forget whatever I'm trying to say now. I'll tell you the grid tomorrow. But at the moment, I'll give you the answer. Then how to judge this 10%? How you need to understand what is your accounting period. That's the first step. Second step, you need to know in administration questions by when this is becoming due. Then you need to understand, have you paid on the due date or another date? Another date means, am I supposed to pay any penalties on that? Yes or no, you need to consider. In this case, it's a yes. So on this 7,220, the 10% is how much? 722. Now this is how you have considered the 10%. You calculated the 10% correctly. But you have missed to add the first 200 pounds of penalty, where your answer needs to be option D. Because the penalty which is charged on the unpaid tax after 6 months is going to be 10% of the total tax liability plus the fixed penalty that you need to pay for 6 months. You got it? The fixed penalty for the 6 months plus, now you are paying it on 7 months. If your answer, now if you are delaying by 6 months, then your answer needs to be 200, option B. Now since you are going to the 7th month, you need to pay 10% additionally. Okay, So only by this question you can answer the exam questions. First of all, we need to study the entire setup. If you are delayed, how it is charged, because you have not revised. So tonight is your revision date. Will you do it? Maybe says I need to go for a movie. Movie even you can watch after 2nd of September. Okay, how many of you all watched Coolie? You watched? No, Yusuf. See, dedication. 5, not yet. Going tonight. So inshallah for that. So how? So Malik, you watched? Amra, of course, I think no. Amruti, Fatima and Rimas. No. Can I watch? I can. So tonight, what is your homework? Friend, what is your homework? Tax administration. So when I say tax administration, refer income tax, refer corporation tax. It won't take much time, trust me. It won't even take 2 to 3 hours. A quick refreshment of those things. Then VAT deadlines, it's easy. Inheritance tax deadlines, capital gain tax deadlines. Only these 5. All these 5 will be tested in your paper. Okay. So administration part will carry some marks. Important. And there was a pure 15 marker or a 10 marker, I can't remember exactly, on administration. Disaster, no? Just in case if it appears in your paper as well, you know, but you don't know. That's what happens. No, not no. Correct? Next. Okay. This one. I don't know why some of you all got it incorrect. You need to spend some time here. Okay. But after spending time, we can't go wrong. It's a waste. No? Getting a 0 without spending time is better, or with spending time is better. When practicing, spending time is better, but in the exams, without spending. So don't do tactic 2. Okay, fine. So now let's do it together. Now this is a capital allowance calculation. You see, capital allowance working is important. Section A, sometimes in section B and section C. Especially in section C and section A, they will come. They'll check this. Where did you learn about capital allowances? Both income taxes for individuals and corporation taxes for companies. Then I told you something, ACCA. So this is for an individual or a company. Speedy limited, company. So then you need to bring your thoughts from company. The problem is there. Okay, but let's see. But they have asked so many factors. They were talking about the personal assets, so something like that. People have prorated that. For companies, should you consider the personal usage? Only for individuals, when you're calculating the capital allowances, remember this point. Now, when you're calculating, you know the pro forma, right? I knew everyone here has crossed the theory part. Whether you remember or not, that's a second thing. You would have crossed your theory knowledge. So which means when we are calculating the capital allowances for individuals, you know that you use line or item by item basis, where when there is a private usage of the any asset by the particular individual, and when there is a short life asset. In this case, if it is an individual, you need to consider the private usage. But if it's for companies, ignore. Companies, ignore. Don't make that mistake again in the exam. Okay. So Speedy Limited had the tax written down value brought forward for the main pool assets 40,000. So let us put it together. So we'll do this working. So you have a main pool asset and you have a special rate asset. Main pool we charge 18%, special we charge 6%. Correct? But there is a written down value brought forward. How much? Written down value brought forward is main pool is 40,000. Then you have short life asset for the computer 5,000. Okay. So SLA. Now, during the year, the company saw a plant for 600 pounds. The AIA was claimed when the plant was purchased for 1,500. So for how much you have purchased? For how much did you purchase this? So for how much did you purchase this? 1,500. For how much you are selling this? 600. Now my question is it a balancing allowance or a balancing charge? Is it a balancing allowance situation or a balancing charge situation? How to determine that? Anyone? Balancing allowance. Good, dreamers. Why it's a balancing allowance? I just said Srimad is good. He's wrong. You are technically claiming AIA for the plant and machinery 1,500, which means already the entire allowance is claimed. No. After claiming all the allowances, you are selling this asset. You are making 600 worth of money. This is a profit or a loss for you. In terms of calculating capital allowances, it's a profit situation for you. You're not making a loss. Now, most of you all have gone wrong there. You're understanding. So, this becoming a balancing charge. It becomes a balancing charge situation. Okay, let me come. Now, this is a disposal. So, first of all, recognize what is a disposal. So, let's calculate things together. First, we'll understand, we'll reflect our theoretical knowledge, and then we'll compute the final answer. Okay. Then, Speedy Limited sold. Now, yet again, there is another disposal, right? A computer purchased on 31st January 2025. Computer is your short life asset for 2,300, inclusive of VAT figure. Inclusive of what figure? VAT figure. The first one was exclusive of VAT. So we are going to learn few things here. It's a very good question. So this is exclusive of VAT. This is inclusive of VAT. Please focus this adjustments that I do. It's critically important. Okay, because this is an easy area, but we can easily go wrong as well. Okay, the computer was purchased 2 years ago. So short life asset means the lifetime of the asset needs to be less than 8 years. Oh, I told the answer, no? Less than 8 years. Okay, so you are selling it for 2,300. Is it a balancing charge or a balancing allowance situation? The cost is 5,000. Now you need to bother. The cost was 5,000. This is the cost. They did not say you have claimed AIA or not. Correct. The cost is 5,000. You're selling for 2,300. Are you making a profit or a loss? Are you making a profit or a loss? You're making a loss. So which means this will be a balancing allowance situation. Correct? This should be a balancing allowance situation. I did not draft any answers. I'm just discussing the question. Then during the period, now these are some new additions. Purchased a new machinery for 26,000 excluding VAT in November 2024, and a car costing 10,500 inclusive of VAT in March 2025. The car has carbon emissions of 42 grams. So what is the category? Main pool or special rate? Huh? Main pool. Then machinery? Main pool. Good. And driven for business usage as well as personal usage by the managing director. Business usage and personal usage. Now, this question is a comprehensive question. It's a very good question. So those who are good at capital allowances should note some points here where you have missed certain areas. So to your final exams, particularly for companies, they can come after a question like that. In your exam, expect an ECA as well. Enhanced capital allowances. Okay, fine. So now how to do the workings for this? So there are two disposals, correct? There are two disposals and two additions of facets. So first of all, I need to make the additions. That's the rule, correct? So additions. So I need to understand, is there any AIA to be claimed? So how to make that decision? How to make that decision? How to make that decision? Do you have any items which qualify for AIA? Do you have? Yes. What is that? Machinery. So first of all, the additions qualify for AIA, annual investment allowance. So what is qualifying? The machine. For how much you are purchasing? 26,000. Correct? So what is the amount of AIA you can claim? 26,000. So guys, I'll tell you another loophole in this question. Now examiner is bit silent here. I told you now this is happening after 1st of April 2024. If you are buying any new assets, it should qualify for ECA because it's a company. Okay, because it's a company. So they have to particularly mention this company is claiming ECA. In this question, they have not mentioned. Okay, so there is a contradiction. There is a doubt. Now, this is how you need to evaluate your questions. This is how you need to study your questions. Fine. Coming back. You are claiming AIA. How much is that? So I'll put all the claims here. So from this, I'm making a claim of 26,000. Correct? The normal way of doing things. Then, do you have any other additional things that qualify for AIA? Any other additional things qualify for AIA? No. Why? You have purchased a car. Will car qualify for AIA? So don't doubt yourself. Be 100% strong in your decision making, right? But I wanted to include another factor which I forgot to mention. Now, this machine was purchased excluding VAT. So, should I take the figure excluding VAT or including VAT? Excluding VAT or including VAT? You should take excluding VAT technically when it comes to machines other than car. Because car, the VAT is not recoverable. Under the VAT chapter, we understood that. So, in very simple terms, I don't want you to confuse from here. In exams, in your final exams, car, take the including figure. Car, what you need to take? Including figure. Everyone else, excluding VAT. Now, sometimes they can give you within brackets excluding VAT, including VAT. For car, you need to take including or excluding? Including. For others, excluding. Simple as that. Remember that point. That's a golden point for you. It can be for individuals or else for companies, both the same. Right. So, sir, if the question says claims is ECA, now technically, Amra, let's think in practical way. This is an MCQ. Whether you are claiming ECA or AIA is going to reflect the same answer given the other factors are constant, because for an instance, let's assume they are giving more assets to you, second hand assets. So if second hand assets are provided, better to use ECA method for new assets. Why? ECA 100% you can claim without wasting. But since in this question I don't see any other factors, so this is going to be a usual thing, a usual MCQ. Okay, fine. So additions qualify for AIA is 26,000. So then you are bringing in a car. Will it qualify for AIA? No. Will it qualify for FYA? Will it qualify for FYA? No. Why? It is emitting carbon. No. Cars emitting carbon means not. But under ECA it will. But this is not an ECA question. So then I'm bringing in a car. That's the next addition, right? So I'm bringing in a car. What is the cost of the car? What's the cost of the car? The cost of the car is 10,500. Should I take including or excluding? Including. I told you, right? For car, it is emitting 40 grams of carbon. So it should go under the main pool. Under the main pool, it needs to be including VAT. So what's the figure you need to take? Including VAT figure. Everyone else, guys, excluding VAT. If you ask me the reason why, because under the rules of VAT in UK, the VAT which is charged on car is not recoverable. So that will be claimed under capital allowances, which means for taxable purposes, that is not your cost now. Correct? Can you include when you're purchasing this? VAT is technically doesn't adds up to the cost. That is charged on goods and services. Okay. So what happens ideally when you're representing your figures, you show your figures in the balance sheet without VAT. Okay. But here only for car you need to show including VAT because it's part of the cost for taxation under taxation rules. I'm not talking from the accounting perspective. I'm talking the taxation perspective. Clear? There's only one thing to remember there, so it's not a hard point to remember. But now, are we done with everything? You're done with technically everything is okay. But during the year, you are having some disposals as well. So you are selling a computer and on 31st of January and you are selling a plant. So you are selling a plant for 600 pounds. So which means there is a disposal. What? For everyone you need to calculate now, because this is happening during the year, right? So overall I need to calculate WDA. So I'm not going to calculate WDA, otherwise I need to calculate twice, and sometimes I can go wrong. So we'll calculate fine. So disposal, there is a plant, the cost is how much? 600. So is it a profit? Is it a profit for us? Yes, it's a complete profit. That's the reason why from my main pool balances, I'm reducing it, guys. You got it? From my main pool balances, I'm completely reducing it. Am I adding it? No. 600 is going out. Okay. So the 1500 is also inside this main pool of 40,000. That's one part of your asset. But whereas you have already claimed AIA. So already if you have claimed the allowances means, and if you are selling that asset, it's going to be a purely a profit for you. A pure profit for you. So that 600 is gone. Then you are disposing a computer. Correct? That computer is a short life asset. Only short life asset is 5,000. For how much you are selling? 2,300. But including VAT. Can you take inclusive VAT figure for computers? You can't. I said only for car including. Everyone else excluding. So which means 2,300 pounds. 2,300 pounds is including VAT. What is VAT percentage? 20%. The standard VAT rate is 20%. This 2,300 is 120%. You need to know what is 100%. Without VAT, because I need to know the cost without VAT. So what's the figure you are getting? 1917. So this is the amount I need to consider as my sales. So I'm getting a sales proceeds of 1,917. Correct? So now I have to determine my balances. So when I'm determining my balances from 5,000 worth of short life asset, you are selling it for 1,917. Are you making a profit or a loss? You're making a profit or a loss? You're making a loss. How much is the loss? 3,000? No, 5,000 minus 1917. 3,000? How much? 3,083 is a positive figure here, which means you're making a loss in this situation, correct? So which is regarded as a balancing allowance, a balancing allowance of 3,083. So which means you can claim 3,083 from the tax authority. Then what is the balance that you are getting for the main pool? 40,000, 50,000, 5,500, 49,900. Correct? 49,900. For this you need to calculate the WDA. Correct? What is WDA? That is 18% on this 49,900. How much is that? How much is that?
8982.
8982. 8982. So which means you can claim 8982. So these are all your allowances that you're going to get. Correct? So 26,000, 3,083. No need to get the finalized answer because we need these figures only. They are not going to give marks for this. And 8982. 38,065. So you need to find an answer for 38,065. Do you have 38,065? Yes, right. That needs to be your option. Right. What's the learning from this question? What's the learning from this question? The learning from this question is, what's the learning, guys? That you need to get the including figure only for cars. Then that needs to be excluding figure others. For everyone else, it needs to be the excluding figure. Okay. Then you understood how to determine your disposal proceeds, right? So that needs to be clear. Okay. Now, give me a minute. Any doubts in this question? Anyone? If you have your doubts, you can ask me. If not, I'm going to move to the next part. 10th. So this part I was a bit sad. Some of you all got wrong. Can you quickly do these questions? I'll give you 2 minutes. So this is a company's question or is it an individual question? This is for company. How did you identify? By the name. There's a name limited is given. So they are asking us calculate the losses available to carry forward. Is the question. Correct? So did you calculate it? So while you're calculating this, let me confirm one thing. When I was explaining you about ECA, what is ECA? Enhanced qualifying or capital allowances, you can say. Enhanced qualifying assets. Cars do not qualify, okay? You're correct. Cars do not qualify. Whether it is they do not qualify for the ECA consideration. Okay. Only plant and machinery. They are as well only plant and machinery. Any new plant and machinery. Okay. So we are not going to qualify any cars. Okay, that's correct. So Amra also has said the same. Yes, Amra, you're correct. So cars ignore, but new cars which is not emitting carbon will reflect what? FYA 100% only for zero emitted cars. No ECA. So ECA is on new plant and machineries which are either qualifying for special rate or main. Fine. So answering this question, the 10th one. What was your answer? So S Limited has the following periods. So they are making a loss in which period, guys? In March. You assume to relieve the claim early as possible. So they're asking you to claim early as possible in the year ended 31st March 2020. What do you mean by early as possible? Don't keep it for the future. Claim it now. So when you are claiming your losses, you know your rules. First of all, it needs to be relieved the losses under which period? On the current year. Current year, do you have any profits? No. Your QCD is getting wasted here. But this 525 can eliminate entire 375. Correct? Yet again, the QCD is getting wasted there. Before, you need to relieve on the total taxable profits. So out of 525, if you relieve 375, what is remaining? 50. It's an easy question. 150 needs to be your answer. Clear? I don't know why you all got it wrong. It's a very simple question. Then, inheritance tax. Rose made a number of gifts for the tax year 24-25. For each of the following gifts, select whether they are exempt or not exempt transfers for inheritance tax purposes. Ignore annual exemptions. And what is the annual exempted amount? 3,000. 15th September 2024, she gave 3,500 to her son on the occasion of his marriage. Exempted or not exempted? That is comes under marriage allowance. So if the parent up to 5,000, right, can be exempted, so that is exempted. She gave 400 pounds to her daughter. Is it exempted? It is not exempted. Why? Small exemption. What are the exemptions available for inheritance tax? First of all, during the lifetime, annual exemption. Then exemptions given based on the income, the cash. Then small gift exemptions. So small gift exemption is value is how much? 250. It can't be repetitive also. Only once you need to make. Okay. Then marriage exemptions. And also finally spouse exemptions. What is spouse exemption? Whatever you transfer to your spouse, it is not taxed for inheritance tax purposes. So on 14th February, she gave 10,000 shares to Peter Limited to a discretionary trust. The value, the shares were valued at 60,000 on the date of the gift. Is it exempted? No, it is not exempted. That will be taxed because CLTs needs to be taxed on a lifetime basis. So this needs to be your under your inheritance tax. So recall your rules for inheritance tax. It's important. Okay. Next. Okay, good question. So you need to determine your gross chargeable amount for a PET. Mary was married on 23rd of July 2024. On that day, her father, David, gave her 50,000. How much is giving? 50,225 to purchase a flat. David had not made any previous lifetime gifts. What needs to be the gross chargeable amount for the period? What needs to be the gross chargeable amount? So how to find gross chargeable amount? The transfer of the wealth is this much minus any exemptions. So who is giving this? David father. Father is giving to the daughter when she is marrying. He is giving 50,225. Is there any exemptions available? Yes. Marriage exemption. You got it? Did you understand that? Because Mary is getting married. So who is giving this? Father is giving. So is entire 50,000 is taxable? No. Because she is getting married, her father is giving, then the marriage exemption of 5,000 can be utilized. Any other exemptions? Annual exemption. So current year 3,000. Previous year 3,000, because the previous year it was unused. The balance is your answer. That is your gross chargeable amount. So what is your gross chargeable amount now? Calculate it. 5225 minus 5 is 45. 39,225. Correct? 39,225. Next, you need to calculate the output VAT. Or what is the amount of output VAT payable for the quarter ended 31st March 2025. So Blown Limited is a VAT register and all his sales are standard rate. In the quarter ended 31st March 2025, the company had the following transactions. The company is having the following transactions. The standard rated sales is 22,000 before discounts. The company offers 5% discount for prompt payment, and this discount is taken up in respect of 25% of its sales. Okay, so normally it's a trade discount. So trade discount needs to be reduced at the point of sale. Correct? This discount is taken by 25% of the customers, which means 75% of the customers is not taking the discount. Fine. So this is a sales. Correct? So sales means you need to calculate what type of VAT. Sales means output VAT. So when you're determining your calculation, so your total sales is 22,000. Correct? So your total sales is how much? 22,000. Of this 25%, of the customers are going to pay only 95% of the price because they are getting 5% discount. They are not going to pay 100% of the price. And then for that amount, you need to charge tax of 20%. Tax of 20%. The next 20,000 say of the 75% of this, they will pay the entire 100%. So which means you need to directly charge how much is the VAT. You got it? So how much you are getting here? 20,000, 25%. Of that 95% into 20%. 20% is the VAT. This is the discount, and this is the percentage of the discount crowd. Correct? So that is your total sales with discount and without discount. So how much you are getting there? 1045. That's the VAT that you are collecting. That is the VAT. Then here
3,300.
3,300. Others we need to that's the first transaction. Correct? Then managing director is taking a car 25,000. See car. And use 25% of the time for private purposes. For car, we do not claim input VAT or output VAT. No, now this is your reference, no output VAT for car. Okay, as input VAT is recovered through what? Capital allowances. Because under capital allowances, car you took that including price or excluding price? Including, right? The same exam paper, they are testing the both points. It's a good point for us. You got it? Don't forget it. So when you're calculating the VAT, car, you do not calculate the output VAT. So it is 0. So how much is that? That's all. There's no more transaction than that. So it's going to be 4,345. So the answer needs to be 4,340. Now, for instance, let's assume if you are not aware about the theoretical point for the second part, what you will do? You will calculate 75% as business use and take 20% of that and score 0. Correct? So be careful when you're determining that. So for a CLT, if the tax paid by the transferor, the tax value also needs to be added to the gross chargeable amount value. Okay. CL, now what's her question? Her question is from, so why the, okay. Amra, you're asking me 2 questions. So first of all, I'll answer your VAT question and then come to the inheritance tax question. Why am I taking 75% here? Out of this 22,000, 25% of the crowd is taking the discount. So for them, I need to charge 95% of the price. If not, you need to calculate that 5% on this 22,000 and minus, it's a big calculation. This would be the shortcut. And then I'm taking the next 75% of the crowd is not taking the discount. 25% is taking means 75% is not taking the discount. For them, we need to issue invoices at the full price. So, and then when you're issuing invoices at full price, I'll charge 20% on that figure, not at the discounted price. Correct? And make sense? Your VAT part, inheritance tax part, I'll explain. Did you clarify your VAT part? Okay. Now the inheritance tax, so question, now see, it's a good learning for everyone. Okay, so when it comes to our inheritance tax, you need to calculate our gross chargeable amount. Okay, every year you need to calculate your gross chargeable amount. So how to determine your gross chargeable amount? How to determine your gross chargeable amount? Based on the, yes, transfers minus any exemptions, and then you get your gross chargeable amount. Correct? So when you are determining your gross chargeable amount for a trust, you have to be careful when you're determining this. If it is a trust, you need to see who is paying the taxes. Who is paying that? Because for trust, lifetime tax is there. For a PET, there is no lifetime tax. So if you are transferring any amount to a trust, when you are determining the gross chargeable value after the exemptions, if the trust is paying taxes, you can take the gross chargeable amount as the amount that you calculated after the exemptions. But if the person, the transferor, is paying the tax, that needs to be added to the gross chargeable. Did you understand that? So no worries, I'll do a complete inheritance tax questions and then I'll explain you how things are. But at the moment, those who are good at inheritance tax, try to understand that your inheritance tax, when you're determining your gross chargeable transfer, after each and every gift, you need to calculate your gross chargeable transfer value. So the gross chargeable transfer, when it's given to a trust, you need to decide who is paying the taxes during the lifetime. That 20% and 25% I'm talking. If trust is paying, they will pay 20% of the tax. If the transferor is paying, he will pay 25%. So what happens? You get your gift amount. How much you gifted? You take the gift. If the transferor is paying, add that gift amount as the gross chargeable transfer value. You got it? Then, that's okay. Should it be after nil rate bank or before nil rate bank? That's the next question I want to ask. Because the person who asked you the question, so gross chargeable value should be used for nil rate bank. Okay. So what is nil rate bank calculation? When to use nil rate bank calculation? I don't want to confuse your head a little. So no worries, inheritance tax. I'll give you a full summary on inheritance tax. If you know that summary, it's easy for you to answer. Okay. For the time being, just hold on. Don't confuse whatever, because I'm just taking you with a set of sections. So tomorrow I'm going to talk about income tax administration and few other questions. Okay. Then I'll take you the inheritance tax part. I'll give you a summary towards the end of tomorrow's session. I'll give you a summary towards the end of tomorrow's session about inheritance tax. Okay, fine. At the moment, don't confuse whatever we have learned so. Okay, Amra, no worries. I'll explain to you tomorrow to everyone. I'll start the inheritance tax from the beginning, from the stage 1, stage 2 to stage 3. The things that you need to do. So if you know what point that the question is asked, then it's easy for you to answer and recall all the conditions for each, and how to decide this gross chargeable value, how to decide this nil rate ban. There is another nil rate ban, RNRB. What is that? Residence nil rate ban. What is that residence nil rate ban? When it is used. Now another question is, can you use unused nil rate bans for your spouse? So if you are a husband and wife, can you use it? You got it? So all those reflections we need to study. So that is going to be more comprehensive. Okay, fine. So that's a separate part, because if I touch there, I need to explain all the rules. Otherwise, if I just explain only for that particular question, you won't be able to answer. Only the person who asked the doubt will get the information. Fine. Questions up to that point? Next, it's a quick question. Let's do it. Which two of the following statements are correct? Points received for late filing of a VAT return will expire after 2 years as long as the threshold has not been reached. True or false? Yes, that is true. Why it's true? Because once you reach the points will get expired after the next 4 returns is submitted on timely basis. So that is correct. An error of previous VAT return resulting in under declared output VAT of 10,000 can be corrected in the next return. Yes, if you miss anything, that can be corrected in the next return. That is correct. A trader who uses VAT annual accounting scheme. So annual means He's submitting only once, but he needs to make the payments after administration part. See, I discussed in the theory class as well, and I did a question also. They are VAT return and pay the VAT return VAT return and pay the VAT due within 2 months and 7 days of the annual accounting period. Is it 2 months and 7 days? No, it needs to be paid within. I'm not within 15 days. Is that? This is annual accounting scheme. Annual accounting scheme needs to be. So this is an incorrect option, but you need to know why it is incorrect. The annual VAT annual trader who uses the VAT annual accounting scheme must submit their VAT return. VAT return means a final VAT return and pay the VAT due within 2 months, not 7 days. So this is incorrect. As a result, they are informing that is VAT is due within 2 months and 7 days. There is no any 7 days. Okay. Did you understand that? That's why it is wrong. Otherwise, it's correct. Fine. Last one. This is a general question. Chapter 1. So which two of the following actions by a certified chartered accountant or chartered certified accountant would be a breach of ACCA's professional code of ethics? Providing information at the client's request to the client's wife so that she may respond to a query from HMRC. Is it something impacting the ethics? No, that is not. Providing advice to a client that you wanted to be checked by a more experienced staff member but had insufficient time to do so because of the urgency of the request. Informing a friend who has mentioned that he has about to invest in a company which it is a client of your firm, that you are aware that the company is having financial difficulties. That is a bit serious, right? So they are asking two options. C is one of the options. Refusing to alter financial statements to decrease the profits as requested by your manager because you cannot approve the reasons for the alteration. You are refusing it. So that's all good. So what else is causing the ethical disclosure? What else is causing the ethical disclosure? Which one? The B. Because you are providing advice to a client that you wanted to be checked by a more experienced staff member, but you had insufficient time to do so. So you're making an urgency request. That is not, because why? The chartered accountant needs to be responsible to the client. So you need to advise at your best. So professional competence is breached there. Your code of ethics. You need to be competent enough to make sure you advise your client. So you are providing an insufficient staff to advise since you did not have time. So that is breaching the code of ethics. You got it? So the B and C are the options in terms of ethical behavior dilemma. Okay, now that is your section A. So let's take a quick 10 minutes break. I'll meet you in 10 minutes. See, the next is also a good administrative question. So we can do that tomorrow. And, shall we discuss a section C question? and then we'll come to the other parts. So, Kai, can you drop me a message? Tomorrow we are supposed to discuss administration, parts for taxes, and inheritance tax. Okay, just drop me a message in the group. No, to me personally. Shall we do this income tax question? Question number 32. Okay. So give me 2 minutes quickly. Let's pull up some connections. Sorry. All right. So this is an income tax question, correct? Question number 32. So first of all, let's go through the question and then we'll try to determine what we are supposed to do. So in this question, calculate Sally Roberts' income tax payable or repayable for the tax year 24-25. 24-25, correct? So income tax payable, so which means you need to calculate your tax rates and things like that. Then they have given you some incomes, employment income and other income, and some other information. So you need to know to draft your computation table, the grid. So first of all, you are preparing the income tax return of whom? Sally Roberts. So for the tax year 2024-25 period. So this is the period I am preparing my income tax, correct? So I need to know my non-savings income, correct? Then I need to understand my other types of income. Let's see what are the incomes that they are giving. Okay, so it can be savings income and dividend income. So first of all, they are talking about Sally Roberts. The following information is relevant to the income tax position of Sally Roberts for the tax year 24-25. So they are talking about the employment income, correct? So employment income is going to be one of my non-savings income. So employment income. We take the employment income into your consideration. Let me also parallelly develop a working for employment income, because they are giving me 6 points. So there can be some adjustments, correct? So my working one is going to be employment income. So under the employment income, we need to understand what needs to be the total income that we have to income. So Sally Roberts is employed and paid by Pulsar Limited and paid a gross salary of 58,500 per annum. So that is his gross salary. So as an employee, I'm working and I'm making a gross salary of how much? 58,500, right? 58,500. Correct. Then she paid a payee of 18,371. What is payee? Pay as you earn. That is the taxes that has been removed or credited from her accounts on a monthly terms to the HMRC. So she, during the year, she has paid 18,371. This is important for us at the last, this information. In the tax year 24-25, she pays 5% of her gross salary into company's registered occupational pension scheme. Okay. So she is contributing her salary to occupational pension scheme, correct? So to the occupational pension scheme, how much she is contributing? Occupational pension, it is going to be 5% of her gross salary, correct? So 58,500 is her gross salary. Of that, you need to take 5%, correct? Am I correct, guys? So 58,500 into 5% is going to be 2,925. So that is the pension that you are contributing to your pension schemes, because there are two types of pension schemes: personal pension scheme, occupational pension scheme. Occupational pension schemes amount needs to be removed or needs to be deducted from the gross salary. Needs to be deducted from the gross salary, correct? Okay. Now see, I'm done with the first adjustment. So move along like that, so it's easy. Now next they're talking about the bonus. They're talking about the bonus. Now you need to remember your bonus adjustments, correct? So Sally is paid a bonus in May each year following the directors board meeting in March, at which the bonus for the previous year is decided. Sally received a bonus of 7,441 in May 2024 and 9,350 in May 2025. Okay. Now let me know how to decide this bonus. How to decide this bonus? What bonus you need to consider? My bad. What bonus you should not consider? So first of all, tell me, Ali is a director or not? Is she a director? How many of you are saying she is a director? She is not a director. in the director boards, they are making a decision. So don't be blind that to immediately decide that she's a director. So I told you to decide your bonus payment dates based on two things: your entitlement date and the payment date. So 2000, yeah, see, Sally is paid a bonus May each year, following the directors board meeting in the March, at which the bonus for the previous year is decided. Which means every month March you are deciding the previous year's what bonus, and you are paying it on May, right? So she is receiving this bonus on when? 7,441 she is receiving on May 2024, and 9,350 she is receiving in May 2025. So when it comes to bonus, I would tell to the examiner. So see my comment, I will make my comments here itself. See the way I'm approaching this question. I will tell the examiner, the bonus that you received for May 2024, I will consider as a bonus of 7,441 needs to be added to his salary, but the bonus paid on May 2025 is ignored to determining this tax employment income. Why? This is taxed with, so I would say this is taxed in following year. So to him, I don't want to explain the theoretical point, but for y'all, I'll explain the theoretical point. Okay, take a note. Take a note, everyone. Take a note. So this is a note for y'all. Otherwise, this bonus is going to be a problematic situation for you. Put the note here. Now see, the same concept was tested in our MCQ as well. Some questions will give you an initial impact. Okay, so make sure you're utilizing the correct options. Why? So should we show May as 2025 as 0 to get marks? Yes, please show it. Because why do I say? In this question they have not mentioned to make sure you are showing anything exempt to show 0, but in your final exam questions they will ask. Okay, even though they are not asking, do it. So I would always love to show my answers in that platform. Why? It will save me, it will save your life, so adapt to that. Okay, so I'm giving you the best approach to answer. Okay, Sally is not a director. So in this question itself, I'm getting it. He is not a director. So her bonus is assessed on the earlier date of payment or the date of entitlement. Payment or date of entitlement. Okay. Then I'll give you more reflection of the understanding. Since the bonus was decided on March each year, Since the bonus was decided on March each year, the entitlement date will not be immediate, and the entitlement is usually when the bonus is announced. Therefore, in such a situation where the bonus is pre-decided, the entitlement date and payment is the same.
Since the bonus was decided on March each year, is it the payment date will not be immediate?
No, that's what I'm going to say. So now, try to understand this position. Be very clear. Keep all your stationaries down. So no need to type. When it comes to bonus, look whether examiner is talking about an entitlement date. If he is not giving you an entitlement date, and if the question is silent about the entitlement date, generally the payment date is the entitlement date. Generally. Okay. Why we are assuming it? Now I'll tell you the reason. So our policy is to assess every March. So in this question I'm talking every March, even in some other exam questions as well. We are assuming the bonuses, okay, for the previous period and to be paid on May. The date is pre-decided. So which means the entitlement and the payment date is falling on the same date. So every year he is entitled to receive a payment in May, a bonus. So they are not separately talking about the entitlement.
So when they specifically mention date of entitlement,
Then you need to choose the date. So sometimes the date of entitlement may be in September. You are entitled to receive before September, but you would have paid it before.
Then we take the
Then you need to take the paid date. If the entitlement date is on September and if you are paying after September, then you need to take the September. Then that September falls to which tax period? That payment date falls to which tax period is what you need to do. Don't need to have so much confusions here.
Now in this case, they mention in each and followed the board directors meeting that it's the bonus to the previous year decided. So that doesn't mean anything related to the entitlement.
Okay, let me tell you something. Good question. But let me be more practical with you. Practically understand rather than going with the condition that I'm saying. Okay. What is bonus? It's a payment based on your performance. I can't estimate your performance at the beginning. I will realize the performance for the previous year, the following year. That needs to be the actual thing. So now this is a pre-decided date. Every year we are going to evaluate the previous year's performance. That is the date of discussion and evaluation that we are doing, practically from an organizational point of view. But we are deciding by this date we are paying. So each and every employee is entitled to receive a bonus of this much. But the payment can differ. You got it? But the problem here is we are tax accountants. For us, we need to get what is the income which is falling into the tax period. That's a problem for us. Otherwise, this is not a problem for us. So this particular employee is receiving a bonus which he's supposed to, based on his past performance. Though it's based on her past performance, it is received now. He's enjoying the income now, not before. You got it? But when it comes to directors, opposite. Directors' income, whatever the bonus that you're deciding, will be taxed immediately as it receives. Shall I give a point on directors as well? Okay. So take note. Okay. First of all, let me summarize a point. Uh, I'll give an example and then take it down. Shall draft the example as well so that I can explain. I'm just assuming a predetermined question. Okay, it's a hypothetical situation, but let's try to work it out. So first I'll teach you the rules for directors. So when it comes to director bonus, what are the rules? So that first point, the first rule that you need, the bonus paid to directors, the bonus paid to directors should be earliest of the followings. Should be earliest of the followings. So what do you mean by earliest? Whichever the date comes before out of the following situations. So situation A. The actual date. The actual date that you are paying the bonus. Okay. Then the second point is the entitlement date. Then the third point, when it is accounted, when it is accounted. The fourth situation is rather than saying the fourth situation, I give it as a sub points for point C. Okay, I'll say C1. Okay, so when it is accounted, if the bonus is determined, before the period ends, the bonus is determined before the period ends, and I would say the payment date is deemed, you know the meaning of deemed, right? Is assumed to be the period end. We'll see the understanding. Okay, take the point and I'll explain. Second point for C. If the amount is determined after period ends, and continue, the deemed payment date, the deemed payment date is when the amount is determined. So now this is a bit critical for us to determine when it comes to director's bonus. So remember these points. So what needs to be done under the director bonus? The bonus paid to director should be earliest of the followings, whichever the dates comes before. The first point, the actual date, when the actual date the bonus is being paid. Then the entitlement date, and when it is accounted. When are you going to account for this director's bonus? So when it comes to the date of accounted, if the bonus is determined before the period is ending, your performance of the director, because directors, you don't technically charge any bonuses. Directors are the people who are deciding the bonus also, and the board also will decide directors' performance is evaluated and they are going to get a package of bonus. So if their bonus is determined before the period end, the payment date is deemed to be the period end date. So then it will fall into the actual date of payment, A and B situation. Okay, so you need to decide based on the dates. Now the C1 and C2 tells us if the amount is determined after the period is ending, then the deemed payment date is when the amount is determined. Did you understand? So take an example. You can say example 1 to clarify. So this I'm talking about determined after period ends. A and B, you don't have any issues, no? That's easy to understand the dates, right? Because I'm giving an example only for the C part, to understand the C part. So then based on the C part, now this is the evaluation which is most commonly tested. Okay, so determined after the period end. For an example, let's just take the facts. The facts is I'm giving you the points. First of all, I'm telling you the financial year ends in 31st March 2023. Then the next point you can say at AG directors, you can say directors vote and fixed the bonus and giving a date that is happening on 10th of June, 10th of June 2023. The third factor, payment is due on 31st August 2023. Another piece of information I'm giving you. Okay, no, it's okay. So now, what is the date that you need to consider as the payment date of the bonus of this question? So what does it say? If the bonus is determined after the period end, then the payment date is deemed to be the period end. So what is that? So bonus is determined after the period end. Then the financial year is on 31st March 2023. So at the AGM, directors are voting and fixing the bonus. So this is happening after the year end. Correct. So that is happening on when? 10th of June 2023. But the payment due date is on 31st of August 2023. So will you consider your bonus payment to tax year 22-23 or 23-24? (23-24) correct. Why? Based on, now see, your period is ending in on 31st March 2023. However, the AGM directors are voting and fixing the bonus on 10th of June. 10th of June is falling to the tax year 23-24. So based on this evaluation, the seed might see point 1, if the bonus is determined, sorry, this point 2, if the bonus is determined after the period ends, the period is ending on 31st March 2023, the deemed payment date is when the amount is determined. So amount is determining on when? 10th of June 2023. So this 10th of June 2023 is falling to the tax year. This is falling to the tax year 23-24. Did you understand that? So that is the period it needs to be taxed. So that income is belonging to that period. Right. I'll give you another example. So this example, take it, determined before period ends. So if you are determining the things before period ends, so what needs to be the point? So if you are determining the payment before the period ends, what needs to be the rule? What needs to be the payment date? The payment is the bonus is decided. Now what happens in the determination before the period ends? The bonus is decided before the period ending, but it is not paid. Is it being paid? No. But you are determining there is a bonus. Then if the decided bonus is happening before the accounting period is ending, okay, the bonus should be treated as received at the end of the period. It needs to be considered as at the end of the period. So my C1 is telling me if the bonus is determining before the period is ending, you need to consider your payment date as the period end date. So the period end date is falling when? 31st March 2023. That is for which tax period? 22-23 tax period. Did you understand that? It falling into the tax period 22-23. So actually your payment and your AGM, you're fixing everything after that. You got what I'm trying to say? So in very simple terms, think whether the bonus is decided at the end of the period or before the end of the period. If it is happening at the end of the period, then your determination date is going to be the voting date. Okay, the deemed payment date, because you need to consider payment date. So here the A and B, the payment date is when the amount is determined. When did you determine to pay it? When are you going to fix it? Because after the year end you are discussing means you need to understand when are you going to pay. So look for that date to which tax year it is falling, then consider. But if you are deciding it before, you need to consider the payment date as the period end. So which means that particular tax year is falling when? That is the date that you need to choose. It's kind of bit confusing. Let me take you through an exam question later on directors. Okay. Then take down another example. I'll give you some examples on directors. Company's year end is on 31st March 2025. Company's year end is on when? 31st March 2025. So board meeting is on 15th of June 2025. Directors agree for a bonus of 20,000. Bonus is actually paid on 31st August 2025. So now tell me to which period it belongs to. To which period it belongs to? To which period it belongs to? Anyway. In this situation, your tax point is the board meeting is happening after the year end. The board meeting is happening after the year end, which means your determination date needs to be after the year end, and your tax point is also going to be after the year end, which is 15th of June 2025. Correct? Now this 15th of June falls on which tax year? This falls on tax year 25-26. Correct? Did you understand that? So here you are actually getting paid on 31st of August, but still you are determining the date. Now you need to choose this point based on the year end. Is this bonus is paid for that particular period after the year end or Not. So let me also give another example so that you can have a understanding. So yet again the company's year end is the same. Then bonus is decided on 15th March 2025. Correct? But the payment is made in July 25. Now tell me, what is the tax point? What's the tax point, guys? It needs to be 31st of March 2025. So which means tax year 24. Now did you understand how to consider that? Is that clear? Did you understand these 2 points? Did it go into your head? Now, let me give another situation, another example. I'm just extracting based on some examples in your questions in your past paper. Let's assume the bonus is bonus only credited in accounts. The above two are the most famous way of asking questions, okay? But this is an extra striking that I'm giving. So they can also ask in this way. So let's assume the company year end is 30th September 2025. So your year end is when? 30th September 2025. So on 30th September 2025, company accrued a bonus of £10,000. So 10,000. So accrued means it's not paid, no? Correct. Paid on 31st September. Sorry, no, not 31st September. 15th December. 15th December 2025. Now what needs to be the tax bracket? Use your knowledge. Now this is for directors I'm giving, okay? Not for others. The employees, you know the law, right? It needs to be earliest of between entitlement date and date paid, correct? Now these are the situations for a director. Okay. Now what needs to be the director's tax point? Who said 30th September? Correct. Why? Now see, my company's year end is on 30th September 2025. On that date, we are accruing a bonus of 10,000. We are not making any decision. On that day itself, you are accruing 10,000 means you need to pay. But you're actually paying on 15th December 2025. So if you have already accounted and accrued a bonus to the director, make sure your tax point is going to be on the date that you accrued. And that the date that you accrued. So that is going to be 30th September 2025. Good. I hope that information is enough. So go through these points. So I gave you particular points in terms of bonus. Okay, I hope you all took these points and make sure you revise that. Coming back, let's see the next part. What's the next part? Pulsar Limited provides a diesel powered engine, a diesel powered car with a list price of 28,050. The car has a carbon emission of 162 grams. How many grams? 162 grams. Sally contributed 5,500 towards the cost of the car when it was provided. The motor car does not meet the RDE standard. So this is what I explained you during the morning hours of discussion. So what benefit is this? Car benefit, correct? What is this benefit? Car benefit. So car benefit, how to decide the car benefit? So in this situation, the car benefit is, okay. So first you need to decide your carbon emission. So your carbon emission is how much? Your CO2 is 160 grams, because you need, why did I take it as 160 grams? You need to round it off to nearest 5. So from 160 you need to remove 55 grams. That divided by 5. Why am I doing that? To find out what is my percentage. Okay, so that's equal how much? 19, right? That is 19%. 19 or 20? 160 minus 55, that's 21. That's right. That is 21%. So you already know the total percentage, right? What's the total percentage? So for first 55 grams, yes, for first 55 grams, it is 16 plus what? Plus 55 grams, it is 16%, correct? Plus for the next 21%, that's how much in total? That's in total is how much? 30? 37. Sorry, my questions. 37 grams. Now it needs to be 37. No? So, but this, they are not meeting the RDE standard. So RDE standard not met, which means 4% surcharge needs to be given. Surcharge needs to be given. However, are you going to determine the 4% surcharge? No, because the maximum amount is restricted to 37%. So I have mentioned this grams, sorry. Is determined at 37%. But however, the total value of this car is how much? Total value of the car is 20. How much is guys? 28,050. Of the 28,050, 5,000 you contributed, right? Did you contribute 5,000? No, you are contributing 5,500. Should I take 5,500? Should I take 5,500? The next important point. Your amount of contribution is restricted to 5,000. You got it? The amount of contribution is restricted to how much? 5,000. you have contributed more, but still your amount of contribution is restricted to 5,000. So remember that point. I'll put it here. I would say, examiner, the amount of contribution by employee is restricted to 5,000. Okay, the amount of employee restricted to 5,000. So this, on this particular calculation, you need to take what is the amount, that is 23,050. Of that you need to calculate the car benefit. So the car benefit is how much? 37%. So that into 37%, that 37% is going to give you how much? Can you give me 23,000? 37% is how much? 85 to 9. I'll put it to 9. 8,529. Did you understand that? Now that is the benefit that needs to be taxable. So car benefit, which is taxable. Now let me repeat the situation. It's a very simple thing. Yeah, the car is emitting 162 grams, but I took 160 grams because we need to round it off to nearest 5. Then 160 minus 55 grams. Why are removing 55 grams? Because already we know for 55 grams the charge is 16%. So the rest only we need to find. That is divisible of 5. So you need to divide by 5 and you get the percentage. The total percentage is 21%. Okay, that plus 16 is already equating 37%. So car benefit, the maximum limit you can go is 37%. But this is a diesel powered engine. You need to add a surcharge. If you add the surcharge, it will be 41%. Can you take the 41%? No, this needs to be restricted. The maximum limit that you're going to charge as a taxable benefit is only 37%. So when you're charging the taxable benefit, now you need to take the cost of the car. But here you have to be careful how much the contribution made by the respective employee. He has contributed around 5,500, but the contributions are restricted up to 5,000. Don't forget that. Sometimes in the question they won't give the contribution, then assume it as 0. But if they're giving the contribution, make sure the maximum is 5,000. So if they're giving 4,000, how much you will take? 4,000. If they're giving 6,000, you should take 5,000. You got it? So then it is restricted to 5,000. So from your total cost of the car, you remove the 5,000 and you calculate the 37%. So that is going to give you a benefit. Now that is car benefit. So he is also receiving any other things he is receiving? So we paid the bonus. So bonus is all good. So bonus is done. We paid the salary. Pulsar provide the diesel car with the list price of the car and contribute the cost towards the other standard is done. Okay. Are they providing any fuel benefit here? In the tax year 24-25, Sally drove 12,000 miles, of which 80% were private. Pulsar Limited pays a running cost of the car, including all of the diesel used by Sally. The total cost of the diesel fuel was 2,500 and Sally pays 55 pounds per month. Okay. What is that fourth adjustment? What's that fourth adjustment? Anyone? Okay. So in the tax year 24-25, he is driving 12,000 miles, of which 80% were private. So then the company is paying all the running cost of the car, including all of the diesel. So petrol cost is also covered. Rather than saying petrol cost, it is the diesel cost. Used by Sally. The total cost for the fuel is 2,500 pounds. So total is how much? 2,500. And Sally pays 55 pounds per month towards the cost of the diesel for his private purposes. So who is Sally? The employee. He is paying 55 pounds. So what is the decision that you need to make here? Anyone? What's the decision you need to make here? You need to understand this is an important point. It's a good question, I would say. Most of you all have missed that point yet again. So let me tell what you need to do. First of all, 12,000 miles you are traveling, 80% is private. Whatever the amount that you are traveling, you also contributing 55 pounds per month. Okay, per month for the cost of the diesel for the private usage. So is that amount is reimbursed? They are not mentioning that amount is reimbursed. So which means that is not a benefit he is receiving. So I would say the fuel benefit. So under this thing, the fuel benefit. The first point under the fuel benefit, I would say the 55 pounds contribution is exempted. Why it is exempted? Because it is not reimbursed. So if the company is reimbursing the private usage, then you need to charge. Okay. So however, see the next point. Pulsar Limited pays all of the running cost of the car, including all of the diesel used by Sally. So which means the fuel benefit for the tax year 24-25 is how much? 24-25. The fuel benefit is 27,800. Correct? 27,800. Of this, where am I getting this 27,800? Go to your fact sheet, it will be given. Shall I show it? What is this? Car fuel benefit. So this benefit means if now company is paying the entire car benefit, whatever the diesel is pumping, he is paying. But this fellow is also contributing. But that contribution that he is making is not reimbursed. So it's not a benefit to him, no. So we can't tax that. Here we are finding the figure to tax him. So the taxable point is going to be whatever the amount that he is receiving as income or a benefit. So that's why I'm mentioning it as exempted, because that 55 pounds, whatever he's contributing to the company, is not returned to him. But his company is paying the fuel cost. Of that, you need to consider only 37%. That's a rule. So 27,800 into, why am I getting 37%? Because his carbon percentage is 37%. If he gets 20%, when you're calculating the car benefit, if you're getting 20%, take 20%. If it is 30%, then take 30%. In this case, it is 37%. So the 37% is going to be 10,286. Correct? 10,286. So that needs to be a benefit received by him, by the company. So a good point, good question, very good question. So this kind of a question is what I'm expecting for your exam. Because employment income version can appear. The problem here is needs to be you need to go through your basic points. If you don't remember the things that I am assuming and then I'm contributing to you, then it is not a good sign for us. Correct? Okay. So then the fourth one is okay. Fifth one, what's the rule behind? So I'll just ask those who did the mock paper, did you do these calculations? I didn't see those. One person did it. One, two. Third person, he tried his best. Two individuals did it. I was surprised and impressed because they remember the rules. But now you can't forget it. Okay, so you need to know all these adjustments. Redo this question. Okay. Point number 5.
For the total cost of the diesel for the slow flight, that is not.
That will be disregarded. Why that will be discarded? Because the total cost of the diesel was 2,500 and Sally is contributing 55 pounds per month. Okay, so over period it is not reimbursed. So they are giving more additional informations to confuse you. So the taxable point is going to be where you are receiving a benefit. So always look for the examples when you read, guys. Listen. Now this is what you need to understand. You need to understand when a benefit is received to employee, then it is taxed. Why? Now whatever the expenses I am paying, if I am getting it back, it's a benefit to me. Technically, I'm not bearing anything. I'm spending now, it is getting reimbursed back to me. So from that, we are trying to identify what is the benefit. That is what is decided as taxable benefit. Okay. So companies providing you a car, they're also pumping fuel. But the entire 28,000 is taxed. No. Is it entire 28,000 is taxed? No. They didn't tax you entire 28,000. Of that 28,000, forget about the contribution part. If you didn't have a contribution part, 37% is taxed. That is what we are considering as a taxable benefit. So that's how you are getting that 8,529. So are we getting 28,000? No. Got it. Then the fuel benefit for the period is 27,800. The maximum percentage is going to be taxed even though you receive more or less. It is going to be depending on your carbon percentage. The maximum limit you can reach is 37. You got it. So this is because this is taxed because you are releasing more carbon to the economy. So there is a cost of monitoring the carbon emissions. So that's the reason why they are charging these taxes in UK. UK is a country you have so much. If you take the comprehensive tax system is UK. So when you learn UK tax, it's easy to apply to all the other countries. Trust me. It really is. Fine. Did you understand that point? So I'll give you a small homework. Point number 5, point number 6 is also a particular working. Okay. So tomorrow in the second phase, after discussing the administration part, before I discuss the inheritance tax, we will complete this question. So before we complete this question, I want you all to do the adjustments for 5 and 6. Other informations are quick. We can do it in minutes. Because you need to know the adjustments for the 5 and 6. So if the full value is given in the exam, should be ignored. We should take the value in tax sheet. Okay. Yes, you need to take the value in tax sheet. Now, let me clarify you something. Sometimes you can claim your statutory mileage allowances. They need to mention that we are claiming the statutory mileage allowances. Okay. In this instance, so let me read it for you. See, the Pulsar Limited is giving you a car which is costing 28,000 and the carbon emission is 142. That is car benefit. Then the fourth point, in the tax year 24-25, Sally is driving 12,000 miles. So here, of which 80% is private. So 80% is private means what is 80% of this? 12,000 is 80%.
10,000.
10,000. Then, but Pulsar Limited is paying all of the running cost. So who is maintaining this car? The Pulsar, the company. That's a benefit. And they are paying all the diesel used. By whom? Sally. You got it? So at that point, you need to decide that he's getting a fuel benefit as well. The benefit he is receiving. So the fuel benefit maximum for the tax year 22-23 is 27,800. That's the statutory limit. That into whatever the carbon emission percentage is what you are going to receive. Okay. Then the total cost of diesel fuel was 2,500. That is ignored. That is ignored. And the Sally is paying 55 pounds per month towards the cost of the diesel used for the private purpose. Used for the private purpose. So here technically initially the company is paying for everything. Later employee is just paying only 55 per month. 55 per month. So let's assume 50. So over a year how much? 6,000. So 6,000 to 7,000 only is paying. But the fuel cost is not accurately given how much they are spending. But they are saying that the fuel cost is how much? 2,500. You got it? But you are paying to the company how much? 7,500. So now there is a contribution. Why? There is a contradiction. You're having a private usage. You're having a business usage. So both of those will be getting contradicted. So to avoid that situation only, they are giving a fuel. This is the amount. For that amount for the car, you need to claim the carbon percentage.
So did they mention how much the fuel benefit? In case they mention the fuel benefit, then we take that out.
If they calculate and give you the full benefit is this amount, then take it full amount. If they're not mentioning, then you need to calculate according to the percentage. That's the rule. The next point, it's a gift, a television given by the company. So there is a way to assess that point. That's why I wanted you to do the as a homework. And the last point, you are making a loan. So when you are giving a loan, so normally in the market, the interest rate is different. So when the company is giving you, they are giving you at a lower interest rate. So the difference between those two is the benefit that you are receiving. What is that benefit you are receiving is taxed. Is the sixth point. But the fifth point is important for me. I want you all to go through that. That is chapter number 4 and 5. Technically chapter number 5. That's where the adjustment is done. So I want you all to go through that. Then dividend and interest income is given. You know what is interest income and what is dividend income. We can deal in our questions. Other information is also provided to us. Child benefit is also given in this question, and a gift donation is also given in this question. I'll tell you how to adjust those things. It's a comprehensive question. It's a very good question on some employment adjustments and things. So I discussed 4 points with you. The first point I discussed is about his gross salary. But don't forget that that's a pay information. We need to reflect that in our when you are computing the final answer. And the second point, the bonus pay. So bonus is decided based on the, for employees, it is based on the employment entitlement date or the payment date, whichever is the earliest. But for directors, I gave you some notes. Make sure you go through that. What happens if it is decided before the period ends? Then the period end date needs to be the point. After period end means in deciding the voting date needs to be the date. You got it? Then we discussed about the car benefit and the fuel benefit. 4 instructions are done. So that's it from me for today. So why the 12,000 miles given? Should it be ignored? Not should it be ignored? Yes, 12,000 miles is be ignored. Here we are getting only the fuel benefit. You're not getting the mileage allowance. Company did not pay based on the mileage. Did they say for 10,000 miles they have paid this much? No. Which is not paid means, okay, let me assume that if the company has paid on the miles you have traveled, then you need to go to the statutory allowance. So statutory allowance is going to be for first 10,000, 4,500. Everything else after 10,000 is going to be at 25 cents. Get the total. Let's assume the total is 6,000 based on the statutory calculation. But the company is paying 10,000. Then 4,000 is taxable benefit. If the company is paying 5,000, zero, nothing is taxable for that period. You got it? So that's how you need to decide it. So this is why practicing questions is important. Okay. So throughout, I took you all so much of areas that you need to brush up. Okay. And I gave you some clarifications. I gave you a method how to learn and how to make sure to remember these rules, because now see, every day when you practice these 5 types of taxation, you're going to repeat all these rules again and again and again. Guys, we have to do it. Part-time students, make sure if you're going for work, within every 2 days you cover all these 5 areas. Okay. Then full-time students, every day it's a must, because the next Saturday I'm going to ask you more questions and I need your knowledge to be upgraded. Then we need to do another one. Okay, fine. So should it be either statutory mileage or fuel benefit? No, it depends. Now fuel benefit is when company is paying you fuel. Travel allowance is different. Now guys, don't confuse this. This is not travel allowance here. This is not travel allowance. This is fuel benefit. Travel means you are traveling to the business. How are you coming? How are you coming to the business? For that, they are giving an allowance. And then home to business allowance is not taxable. It is exempted. You got it? You can't consider it as a allowable expense. Can you remember that? Now you. But client place to business, it's an allowable expense. From your home to the office, now that is your usual routine domain. That is not an allowable expense. Now don't confuse these expenses. What Amra is trying to say is, she is trying to mix up the traveling part and the fuel part. Now this is fuel benefit. Petrol, diesel, company is giving you. That is the benefit here, not travel. So they have, he drove 12,000 miles. He is driving 12,000 miles. For 12,000 miles, how much is the fuel cost? So the benefit received here is not the travel, but the fuel. Okay? Clear? Makes sense? Fatima, in which batch are you in? Are you join for marathon sessions only, or you were there for theory sessions as well? Fatima, can you respond to me? Theory. Oh, what's your full name, Fatima? I didn't June full time. Kandy. Oh, okay. Hikma. Okay. Because I didn't see your name in the examination list. I'll make sure I'm including it. Okay, Hikma. No worries. I'll see you all tomorrow morning. Okay? It's 9. So sometimes I might start a bit late tomorrow around 9:30. Okay, I'll inform. If I don't inform in the group, it's fine. If I inform in the group, then come at that time. Okay. Okay. So I'm leaving today. Was the day productive to you all? Okay. Okay. So tomorrow also we have to run a session like this. You need to boost some confidence. If possible, if you have time, join on Thursday or Wednesday. I will have a revision session running for Kandy batch. Okay. Technical I'm running from 1 to 5. There I can't run after 5. That's the only issue. If you can join, I'll just share you the link as well. Then it's going to be a good revision for you. Once that is done, and we are going to meet on next Saturday also, I'll meet you. That's the last day officially I'm meeting you. Then if we need another revision date on the last week of your exams, before the exams, we'll do another testing. Okay, there are a few areas on back. Still we didn't touch back and inheritance tax. So I need to touch those and companies. Those are the areas we need to touch. So tomorrow we'll be touching inheritance tax, tax administration, and this question. So income tax will complete this question. And tomorrow we'll try to kill the company's question also. Company question is also a good question here. So we can practice that. Okay. So see you then. So can we also do section? Of course, I'll be doing section B. No worries. And also, I might be doing some section B types of questions during the next week. I will share you the links. Please join. That will be mostly the session is 1 to 5. An extra session for you. That's not physical. It's going to be online. So thank you. I'll see you. So you have to excuse me today a bit. Unfortunately, I got a bit sick last night, and I think my gastritis issue, so I could not kind of cope up. So I had to take some rest and then come. Okay, no worries. So let's kick on from where we left yesterday, as well as what we are going to discuss today. So one of the major area that I used to focus for students is now when it comes to tax administration. It's bit an crucial area. Why I would say there are some easy marks that we can claim. For that, we need to clearly understand what are these penalties means, what do you mean by these deadlines. Now that is bit critical for us to understand what happens here. So in this overall concept what we are trying to learn, so excuse me, okay, this overall concept what we are trying to learn. Now for an instance, take yourself. An individual needs to submit his income tax return. A company needs to submit its tax return. Then inheritance tax is submitted by whom? An individual yet again. So then a VAT is submitted by whom? A business, not an individual. Now we need to have that overall clarity. If you don't have their overall clarity, then that's an issue. Correct? Okay. So understanding that fact a bit. And who needs to report to CGT? It can be individuals in terms of possession of assets from individuals' perspective. It can be companies from the possession of companies' perspective. First of all, you should have this overall generic understanding behind each of these concepts. Then your decision making is easy. The next thing is you need to flex yourself when you're reading your questions, because these questions more theoretical. They will ask, okay, this person has made the payment by this date, submitted the return by this date. That itself you need to recognize correctly, because in taxation you have a submission date separately, the payment dates separately. So the penalties are also separate. Okay, so there is a structure how the penalties and the deadlines are. So that's what we are going to discuss today. So make sure you're learning this for the first and last time, and then you apply and you remember. Now these things you need to remember, because no one can change the deadline for 24-25 tax year, right? Unless HMRC, now only HMRC has the authority to change. So you're not going to do any practical stuff. You're going to work on what? The theoretical stuff, which is they are going to build upon you. Okay, Malik, if you don't mind, can you turn up this fan a bit? There's a switch here. It's too warm here with this light. Yeah, that would make it to 4, otherwise you won't be able to stay. Okay. Right. Now, first of all, let's look at some common deadlines. So when it comes to common deadlines, now I have summarized certain things. There are certain things which is falling by 31st of January 2026. By which date? Now what is our tax year? Our tax year is falling on 5th of 6th of April 2024 to 5th of April 2025. That is your tax year. So from the tax year, now there are certain deadlines which is falling on the 31st of January after the end of the tax year. For an instance, let's assume if your tax year is 24-25, so 25 April 5th, your tax year is done. What is the January that you are meeting after April? That is 31st January 2026. Now by this date you have some submissions. What are those submissions? Yesterday there was a question on this when we were practicing the MCQ. See, the payment of balance. What is payment of balance? Now if you take individuals or if you take companies particularly, there are some installment payments, right? Let's see when we are supposed to make the installment payments later. Okay, so when you're making your installment payments, you have to make sure your final payment is done on this. Okay, but these are the deadlines by when you need to meet. So the payment of income tax, the payment for what? Income tax and class 4 NIC, correct? There was an MCQ, right? True or false section, can you remember? So the payment of income tax and class 4 NIC. What is class 4 NIC? What is class 4 NIC? Guys, I need answers from you. So this, you all have to answer. What is class 4 NIC? Class 4 NIC is talking about self-employed peoples or persons. What? Contribution, pension contributions. Okay, so these two needs to be submitted by when? For if your tax year is 24-25, by 31st of January. Now register that. Your final income tax balance of payment, the installment payments. Okay, that if you are making installment payments to income tax, when you are making the installment payments, you know how to determine the installment payments. I'll discuss it in a while. Okay, so that the final balance of payment needs to be submitted by 31st of January 2026. I'm repeating it again and again because it need to register in your mind. Then when you are now, that is payment is also falling on the same date. Then a submission of electronic income tax, which means now tax returns can be filed paper based and electronic based, hard copy or soft copy. But HMRC welcomes whom? The paperless transactions. HMRC welcomes the paperless transaction, and the due dates for paperless transaction is also more. I'll show you when I'll take you all through income tax administration part again. So when I'll show it there. But what you have to do is, what is tax return? Income tax return and CGT, guys. For individuals, the income, you need to file your capital gain taxes along with your income tax return. Now submission means by when you need to report your figures, not payment. So you need to report your figures by 31st of January 2026. Now I'm speaking about some common deadlines. Now on this particular date, the things which are falling due, because examiner can ask you a question on an MCQ, what are the types of taxes which is falling due on 31st of January 2026? Or what are the common deadlines which come across on 31st of January 2026 for the tax year 24-25? So then I should be able to determine my payment of balance for income taxes and CGT falls due. Then my submission of income tax return and CGT return falls due, as well as my CGT liability also become due, which means the payment that you need to make is also becoming due. Did you understand that? So if you ask me in a closed nutshell, it's easy for us to determine the from the payment side, your income tax balance of payment, okay, your final payment, the balance of payment if you are when you're making installment payments, and your class 4 NIC and CGT liability, the payment sections are becoming due on 31st of January. And when it comes to submissions, your income tax return and CGT returns needs to be submitted. Do you know what are returns? Do you know what are returns? Okay, that's itself a question. So then I'll come from here. Okay. So this is a very good summary which I have done for you all. It will ease your understanding. It will ease your determination when it comes to income tax administration. I have shared it in the group. Okay, so you can quickly refer this and try to understand. So when you're taking the tax administration for income tax, when you're taking tax administration for income tax, so you need to do a self-assessment. What is a self-assessment? Self-assessing. You are assessing your incomes and expenses. Guys, why we are paying taxes? Why we are paying income taxes? Because you have more income. Then who need to prepare these things? You need to prepare it. Now, if you don't have the knowledge to prepare it, you get the support of whom? A certified individual and tax advisory person. That's why your yesterday 15th MCQ was that question, right? Because a certified accountant is preparing in what sort of ethics he needs to abide. You got the way the examiner links this question and links this administration part. So there will be questions like that. So we need to prepare for that, not only calculations. You observe the questions, right? Because MCQs are more critical. That's where you lose your marks. You answer one true and the other false, where it needs to be true means you get a 0. So we need to have a clear administration understanding here. Okay. So when you're trying to take this administration understanding, you have self-assessment and you have payee. What is payee? Pay as you earn. So through a self-assessment, I estimate all my incomes. For an example, let's assume I'm an individual who is working. Then I receive employment income. Then let's assume I have few properties. Then I receive property income. I have made some investments. Then I receive investment income. Okay. And let's assume I'm making invested on some companies and also receive some dividend incomes. So this will form my total income that I have. Correct? So that is your total income. Now this total income will be subjected based on an allowance. Correct? What is the allowance? Your personal allowance. If my income is more than 100,000, and you will charge that allowance. But who needs to prepare this? You need to prepare this. You need to evaluate every tax year end. An individual, now if let's assume you picture yourself here. So you are the person who is going to submit your income tax return for the tax year 24-25. So which periods, incomes and expenses you need to take? You need to consider from 6th of April 2024. From when? From 6th of April 2024 to, you need to take when? 6th of April to 5th of April 2025. These are the figures that you need to evaluate. Correct? You understood what is your self-assessment return. Then what is payee? Pay as you earn. Now payee is touched mostly with your employment income. Correct? You earn, you pay taxes. You earn, you pay taxes. There are certain transactions which is involved The tax submission date is on 31st of January 2026 for tax year 24-25. But you would have paid the taxes already. Because there are certain transactions where the tax authority is collecting the taxes before. So which means when you are preparing your liability, you show the total liability. And can you remember, the payee is an item where we removed or deducted as a tax credit later. We calculated the entire income tax liability on 37,700 this much, on 125, 140 this much. Likewise, you calculated, then you will get your overall due amount. What you will get? You will get your overall due amount. From that amount, we used to remove the payee. Which means if I am owing 100,000 to the HMRC for throughout the period, so within the period I have already paid this much. So balance only I am due. You got it? So payee is a return of tax payments while you are earning. So that's why they used to call this as taxes deducted at source. What is your source here? Employment income. When you are receiving your employment income, the tax is already deducted. That definition, the taxes deducted at source, means the taxes have been already removed from this part. Clear? Right. And I'll give you another part, another understanding. If your only income is by working, now most of the individuals' only income is employment income. They go for work, they earn money, and they run the family. So if your only income is employment income, your returns are not essential. Your returns are not essential. Why? You do not have any other income. Already your payee is submitted by your whom? By your employer. So at that point it does not becomes necessary. Okay. But there is an important factor to decide. I'll come to that point in a while. Now, when it comes to self-assessment, you need to prepare your returns. What are returns? A return is a document which shows your incomes for that particular period, your earnings for that period. From non-savings income this much, from savings income this much. Technically, you are whatever you are working on. So yesterday we started up a question, right? Sally Roberts or someone. So we were working on his income taxes. That is his return. We are preparing his return. So in return, what we did? We submitted his information. What information? His income sources. Then this return needs to be submitted on time. We'll exaggerate. This is a holistic picture. Okay. Returns needs to be submitted on time. There are specific time limits by when you need to submit this return. I can't submit 2020's return now. That needs to be submitted in 2021 January. So likewise, we have some time limit specifics, and you have some compliance checks. So what is compliance checks? Are you paying on time? Is it paid on time? So all these things are essential. All these things are necessary. Okay, you can. And this thing is not working. AC, you can reduce the temperature. The battery is not working. Okay. So when it comes to self-assessment returns, you have to prepare your own return, and you need to make sure you are submitting on time. And there are some compliance checks that you need to do. For instance, what are the compliance checks? By when you need to make the payment? Is there any interest involved? Are you informing the HMRC about any changes? Now, there are many elections to be made, especially when it comes to income taxes. If you are married, if you have a civil partner, or if you have your spouse, then you need to understand, if you're jointly owning an asset, what you need to do. If you're transferring your marriage allowances, personal allowance, can remember the personal allowance between couples that you can transfer, you need to inform HMRC. Are you meeting the compliance check? Whatever the things that has been said, are you adhering? You need to understand. Then if you do not adhere, you need to pay penalties. You got it? We need to make penalties. Did you understand the overall structure here? Then now this is your technically your submission part. You need to make your payment after that. If you are due, you need to make the payment. Now payment can be both the sides. Why do I say both sides? Because if you are owing HMRC, it's a liability to you. Sometimes you would have paid more than your liability, which means HMRC needs to pay you back. So it can be a refund situation or it can be a liability situation. Correct? Then you need to understand what are the payment due dates. For payment we have separate due dates. Submission deadlines are separate. So submission we call it as deadlines. Payments we call it as due dates. You got it? Payment needs to be done on the due date. Submission needs to be submitted by the deadline. You got it? Right. Then the payee is technically done on forms and systems. That is, your payroll system will submit everything automatically. You know what is payee, right? Pay as you earn. Your company will fill your forms. So what are the forms? Can you remember P11D? P? What are the other forms? What are the other forms, guys? Amra, what are the other forms? Through a P11D, what you submit? Do you have a form called P60? Do we have a form called P45? No. I don't know. I'm not sitting for exams now, so I don't want to know also. Shoaib? Rizkan? Now you should know what these forms are giving. What sort of information is included in that? In your P11D, your overall payroll information is informed. We did a question, okay? Don't tell I didn't do a question. I did a past paper question on this. Can you remember? When I did employment income. So there was an employee. So when he, like for an example, if you are switching your employer, that is a form to be request, or the form will be given. What is that? P60 or P45? So you need to do your homework now. That is not administration. That's part of the administration that you need to understand. All these forms, it's critically important. Now, first of all, before everything, yes, good risk. That is P45. Okay, what is P45? When you are switching your employer, the information of your last payroll will be submitted through a code, right? So that will be given to whom? To the new employer when you are moving. So don't forget these forms, informations. It's really important. Okay, guys? Fine. Coming back, when it comes to penalties, you have the penalty due dates and the when it comes to payment, you have the payment due dates and the penalties. And if you delay further, you have interest also. For payment, you have penalties and interests. But for submissions, you have only penalties. Did you understand that? So when it comes to payment, there will be an interest involved. Why interest is involved? Because time value of money. Think smartly. So you need to calculate an interest as well as you need to calculate the penalty. You got it? But when it comes to a submission delay, you have a penalty. Do you have interest there? No. For submissions, you don't have interest. Fine. Now let's what you need to do at home, or as an individual, what you need to do. That is your reflection time. So you need to reflect yourself what I need to know. By when you need to submit your returns, correct? You need to know that. By when, as an individual, I need to submit my return. By when I need to pay my taxes for individuals, correct? And what if I don't pay? You got it? What if I don't pay? Then you will be in a big trouble. If you don't pay, we are in a big trouble because government will charge heavy penalties on you. You got it? So the things that we are trying to understand here is by when to file my return, when to pay my taxes, what if I don't pay them? Okay? Fine. So now when we come to the next slide here, see, I have given a definition for returns, and also when should I notify HMRC of any chargeability. So if you have anything to be charged for that particular period, if you have anything new which is coming through, okay, through your income, if you are having a new source of income, that needs to be informed before 5th of October 2025. By when? Before 5th of October 2025 for tax year 24-25. So what is a return? It is a document that reports your incomes, your expenses and other relevant information to do what? To calculate your taxes, okay, and determine whether you owe more tax or there is a refund for you, correct? So return is a document, it's a form where you are filling your incomes and expenses for that particular period, and you are trying to estimate whether you have to pay the HMRC or whether you need to receive any refunds from HMRC, correct? Okay. Next. Now, what is this notice? So notice means who will send the notice? Who will notify you? HMRC, correct? So if my tax returns are due means HMRC needs to notify. Why? Because for HMRC we are, think from a business perspective, for HMRC we are customers. No? So only our suppliers will keep us reminding, no, give my payment. So HMRC will beg for payments. So they will send you notifications. They will send you notification. Now if you are receiving your notification, try to understand this, before 31st of July 2025 for tax year 24-25, if you are submitting your returns, you know what is a return now? Submission. This is a submission deadline. We are talking about submissions here. If you are submitting your income tax return through a hard copy, a paper based, your tax date is due on 31st of October 2025, not 31st of January. 31st of January for electronic based. So because they are welcoming and they are trying to reduce the paper transactions or hard transactions so that people will move into online filing. It's seamless, it's easy. You got it? So the return submission, return deadline for which return I'm talking about? Income tax return. An individual, I should submit my income tax return computation. My income tax return computation by 31st of January 2026 through electronic form. If not, if I'm submitting the hard copies, by 31st of October I need to send it. Did you understand that? Okay, that's the first understanding. So be aware when you're reading your MCQ, when you're reading your questions, it can be a section B also, okay? administration question can comes to section B, and he is also coming in section B quite often with all the other taxes part. Okay, right. So did you understand those two deadlines? So this happens if you are receiving a notification from whom? HMRC before which date? 31st of July. Now if you are receiving the notification between July and October, if you are receiving what? The notification between July and October. So it can be, for an instance, let's assume August. If HMRC is sending you the notification in August, then if it is paper return, we need to file the returns end of the 3 months of the following the notice. So file the return by the end of the 3 months. So end of the 3 months means, so August you are receiving, which means September, October, November. You got it? By when you need to do it? By November. That is for paper returns. If you are submitting what returns? Paper returns. But online submissions, always the deadline is same, 31st of January 2026. Even if you are being notified before 31st of July, before 31st of October, electronic basis, the same deadline, 31st of January 2026. But if it is paperless, if the notification is sent to you before 31st of July, you need to submit your submission deadline falls by 31st of October 2025. Then if they are notifying through between July and October, you can take 3 months from the end of the month. You need to take 3 months to submit your tax returns. Did you understand that? How to determine that? That is for paper. So only this paper is causing bit of a different deadlines here. So try to understand, paper has a different deadline, electronic basis constant deadline. Electronic basis, whatever the days that you are receiving the notification, HMRC will notify you are liable. You need to estimate your self-assessment tax return. You will assess your self-assessment tax return. You got it? So then if you are submitting through online method, our deadline is when? 31st of January 2026. Right. Now what if you receive the notice after October? What if you receive the notice after October? If it is paper return, yet again the same procedure. File your return by the end of the 3 months of the following notice period. Okay, which means the notice period is ending on October 2025. From there, you need to take 3 months. After the notice period sends. So for an example, let's assume if you are receiving in November. So from November, if they are end of the notice period, November only they are notifying us. End of the notice period is 30th November. From there 3 months, which means December, January, February 28th is your submission date. That is if paper. But for electronic basis also follows the same thing. So the online return by the end of 3 months of the following notice period. That is fair, right? For an example, let's assume if HMRC is sending you a notification on December 30th of 2025, you can't submit in 1 month. Unfair, no? Correct? Now for an example, Malik is notified by HMRC on 31st July. Let's assume we all submit on electronic basis. So Malik has time until when? From August, 6 months, 6 to 7 months he has time until 31st of January to submit his return. Now to Kaif they are informing, let's assume during August. So if you are getting during August, still you also have time until when? You also have time until 31st of January 2026 to submit. Are we making the payments here? No, we are just submitting the returns. Payments will come later. But let's assume for the guys who are informed after October, it is now after October means it needs to be November or December. or after that. You can't expect their returns to be filed by 31st of January. So what they do is they give you 3 months period from the end of the notice period. So if they are notifying on November, end of the notice period is 30th November, from there 3 months.
Regardless of the notification, they have to submit the return.
No, they will notify. Notification is important, because if they are not notifying, they are not responsible. Compliance. This is compliance. Now you can make your self-evaluation, contact the income tax officer and submit. That is something else. But it is their duty. No, they are not complying. No, then you got it. So when it comes to legal transactions, guys, always look for the compliance. If you are complying, no, there are no major issues for you. If you don't comply, then the issues comes. Issues will follow you. You will be in big trouble. Is that clear? Did you understand the submission deadlines? Now this is for income tax. What tax? Income tax. So income tax has different perspectives to look at. Fine. Then now penalty for late filing. Now how you will determine that you are filing late? Now if HMRC is notifying you, let's assume mostly everyone today is submitting their returns electronic based. In future they will completely erase the paper based transactions. Okay, so UK is 90 to 95% of the taxpayers are submitting online. It's easy for them. It's easy, it's convenient rather than writing on papers, So now when it comes to penalty for late filing, so that the submission date, if it is for electronic submission, 31st of January, if you are being notified before 31st of October, correct? After 31st of October means from the month end 3 months you need to determine. So the late penalty, for an instance, if you are being informed by HMRC before 31st October means my submission deadline is falling on 31st of January 2026. When is my submission date is falling? 31st of January 2026. So if I submit on 1st of February, is it late or not? Is it late? 31st of January submission date. The deadline is 31st of January. I am submitting on 1st of February. Late or not? Late. Late filing means any returns that you file after the submission date. Did you understand that? Late filing means the submissions that you are making after the deadline. Now you know the deadlines for income tax. Okay. So filed after the due date. So what was our due date? 31st of January. So even though I file on 1st of February, I have to make a penalty of £100 on top of my tax liabilities. This is additional payment. For HMRC, these are additional revenue. You got it? For HMRC, it's an additional revenue. So you need to, I have shared this document in the groups, but I'll share it to the Kandy group next week, okay? Fine. So the filed after due date means you need to have a fixed penalty of £100. So after 31st of January, whatever the returns that you submit, you need to pay how much? £100 a must, a penalty. Then you have some additional penalties. Now additional penalties means how long you are delaying this. If you are filing 3 months late, if you are taking more time to, for an example, I am submitting in April. You are supposed to submit in 31st of January 2026. If you are submitting in April, February you are delaying, March you are delaying, April 3 months, correct? So in addition to the 100, daily penalties up to 9-10 pounds per day. This is important, you need to remember. This is for what? submission, for submissions we have only penalty. So if you are late to submit, you have penalties. So if I'm submitting on April 30th of 2026, am I late? Guys, am I late? Yes, because I'm assuming that I need to file everything on 31st of January 2026. So if I'm submitting on 30th April 2026, I'm late, no. So what should be my penalty? 100 is a fixed amount. If you cross 31st of January, 100 it's a must to pay. So from then, you need to calculate £10 per day, maximum of 90 days. You got it? So filed after the due date, you get a fixed amount of 3 months. 90 days means technically 3 months. Okay. So filed taking 3 months late, you get, let's assume this plus 90 into 10. So how much is here? 900, correct? 900 plus 100 is £1,000, guys. So £1,000 in Sri Lankan rupees, 400. How much? 4 lakhs. 4 lakhs. So now see, are you motivated to pay on time? Everyone submits on time. Whether you are incomplete, still you submit it. Because you can do the amendments now. You have 12 months to do the amendments. You got it? So that submission is important. It's critically important. Likewise, what happens if you are filing taking more than 6 months? Then in addition to the penalties to the above, 5% of the tax due, minimum amount is £300. So what they are trying to say is, in addition, now the first thing is, now if you are filing after 6 months, okay, then you have your initial 100, then you have your 90 days into 10 plus, now there is another decision to be made. You need to make 5% of the tax due. For an example, let's assume for this particular period, for 24-25 period, I need to pay taxes of 100,000. Okay, what is 5% of this? 5,000. So they are telling us the tax due or minimum 300. Sorry, so minimum is 300, but this time you need to pay 5,000. So which means you will take 5,000 here. Now for an example, let's assume if your tax liability for 24-25 is only 1,000. So then what is 5% of this? So not 1,000, take 500. What is 5% of this? 25 pounds. So now 25 pounds is the due, but will you take 25 here? No, you need to take 300. You got it? So what they are trying to say is your penalty will be minimum 300. Then you need, in addition to the penalties above, 5% of the tax due. That 5% of the tax due should be 300 or more. If it is less, you need to take 300. Did you understand that? If it is more, take the more figure, the increasing figure. Now that's the penalty, because you are submitting too late. So don't ask me, sir, is it fair? Of course it's fair. So due dates changes as per notice received time. Yes, that depends on the time, but for electronic submission, if you are receiving your notification before 31st of July or 31st of October, the submission date is same. After 31st of October only your submission falls after the end. So that you need to pay attention in the exam. Correct? So based on that only we need to decide this. So if you are filing 12 months after the filing date, you are taking 1 year to submit. Okay? Where the withholding information was in addition to the above penalties. Now if it is not deliberate, you are not doing it purposely, due to some circumstances you had to. Okay? So that is reasonable. Then you go another 5% on the tax due, plus minimum amount needs to be 300. You got it, the same rule I told you. But deliberate no concealment means 70% you need to pay. 70% of the, if you are purposely delaying it. If you are purposely delaying it, you need to pay 70% of the tax. Deliberate with concealment, you need to pay 100% of the tax due, which means if I am owing 100,000, another 100,000 plus all those penalties, 100 fixed plus 90 days, and all the other tax dues will combine. So which means a penalty is a suffer. It's a burden to the taxpayer. So taxpayer should always try to avoid this. But in the examination question, they will give you, okay, this particular person should pay a penalty of this much. So calculate that. That you need to calculate. So how to decide? Now these are what penalties? Don't confuse penalties between your payments and submissions. Submission penalties are different. So submissions for individuals is based on the notification. So if it is paperless transactions, which is electronic based, means by 31st of January, it can be before 31st of July a notification received, or after before 31st of October, both the days same deadline, 31st of January 2026. But paper means it differs. Okay, so 31st of July means by October you need to submit, correct? See, I'm talking about this. By October 2025 you need to submit. But if you are receiving the notification between after July or before October, you take the notice period, end of the month, 3 months. Okay. Then for both, if you are receiving the notification after October, you need to take the notice period, end of the month, from there 3 months. Okay.
So, for example, let's say if he gets late 95 days, so it's into 95, 10 or
90 days. 90, and from there onwards you will get the next 5%. Okay, can you try this question? Now read this question. Think that you are getting this question for your exam. Now this is a past paper question. Okay, so you need to read the question clearly and evaluate and let me know the answer. Don't be hurried. So who can give me the answers? Shall we do it together? Okay. So, few are giving me the answers as 1, 2, and 4. Anyone else? Any other answers? Any other options? You got an option for me? 1, 2, and 5. Anyone else? Any other answers? Amra? Malik? Kaif? 1, 2, 5. You? 1, 2, 4. Malik? 2, 4. Okay. Shade 1, 2, 4. Amra is 1, 2, 5. Okay. Let's see. Now it's a good question for us to understand how things will be asked. And this thing they are asking us, Hassan filed his self-assessment tax return for the tax year 22-23. So you didn't ask me another question, sir. Is it paper or is it electronic? By default, it is electronic. If it is paper, they will mention. Okay? If it is paper means they need to mention. If not, you take the electronic deadline. Okay? Right. For 22-23 tax year, you need to submit your returns by when? 31st of January 2023 or 4? 24. So if your period is ending in 23 means your submission needs to be after this year, no man. Have a checkpoint like that. So it is 24. Then, but he is submitting his return when? 31st of August 2024. Is he late? Is he late? He is late. So now I am determining he is late. Now how late he is? February, March, April, May, June, July, August. How many months he is late? He is late by 7 months. He is late by 7 months. Correct? Correct me if I am wrong. The return showed a tax liability of 6,200. So by this date, he needs to pay 6,200. That is his liability. But he is submitting the 6,200 on 31st of August actually, which Hassan paid full on 31st of August 2024. So he is paying on time. So on the date that he is submitting. Okay. So payment deadlines will come later. At the moment, think that he is paying on time. Okay. Example. So they are asking which 3 of the following penalties could Hassan be charged in respect of late filing of his self-assessment tax return. So first of all, he needs to submit by this date. I told you a fixed penalty of 100 is a must. So your answer should have 1, I'm happy. A fixed penalty. Anyways, he is late. Then you need to calculate what you need to calculate. Daily penalties. Now this is a fixed penalty, and then you are supposed to make a daily penalty also. What is the daily penalty? Because you are taking 7 months to pay. So if you are delaying more than 3 months, daily you need to make how much? After 3 months, every day you need to pay £10 per day. For how many days? 90 days you need to pay. So which means, so if you are taking more than 3 months to pay. So for an instance, let's assume 31st of January 2024, February you are not paying. March you are not paying. April you are not paying. From there onwards, for next 90 days, daily you need to pay a penalty. So that will contribute how much? £900. So as of daily penalties, you should have how much? 900 pounds. Right. So now here 3 months, here 3 months, 6 months. Correct? Did you pay? Still you didn't pay. You're making the payment, you're making the submission on 7th month, which means there is one more month, there is an additional taxes to be charged. So how to charge? On this 6,200, on top of these things, you need to charge another 5%. On tax due amount, 5%. This needs to be greater of 300. So 6,200, 5% is how much? 310. 310. Now this is greater than 300. If I were the examiner, I would have given the 300 amount as well there. Okay. So what's the figure that you need to choose? You need to choose 310. So it needs to be 310. So 1, 2 and 4 is the correct answer. 5, 620, you got 10%? Deadline. But did you understand now? Did you all understand this? How to work it out? Makes sense now? So for an example, let's assume this answer is 290. Will you choose your option as 290? If you choose your option as 290, your final answer is incorrect. You need to choose 300. So minimum needs to be 300. Minimum 300 means whatever the answer you are getting above is your answer. If it is less than 300 means you can't choose, it needs to be 300. Did you understand that? Does it make sense? Okay. This is all about submissions. Submissions, do you have penalties? Yes. Do you have interests? Though we calculate a percentage here, it is not interest, okay? It is a penalty. Okay? Penalty on your tax due amount. So did you understand by when you need to submit, from when you need to calculate your late submission penalties? Is that clear? Have this clear approach in your final exams as well. Read your question, draft your answer. Take your time. Take your time, because you are going to get 2 marks here. Otherwise, you are going to lose 2 marks here. I know that it is not an 1.8 minute question. Correct? You might take 2 to 3 minutes. Spend 3 minutes. Get your 2 marks there. Because these are the things that you already know if you know the factors. You can absolutely get now itself. One or two got it wrong. That's fine. But still the majority got it correct, right? But those who got wrong also, now you will not make the mistake in your final exams. You understood where you went wrong. Correct? Make sense? Fine. Then the next part. Okay. The next reflection thought that I'm going to take you all through. When should I file? Okay. Is it paper or is it online? So when did HMRC, when did you get notified by HMRC? You need to think, right? So I'm just giving you the reflection time again. The things I'm repeating it the same thing again. And you need to consider online means by, let's assume, if you are submitting, if the notification that you are receiving on 31st November 2025, which means you can, that's the thing I have put it for yourself. So you need to submit on 28th of February 2026. Is that correct? I have given to you some self notes there. If you are receiving the notification by 31st of November 2025, so you need to submit your return by 3 months end, which is December, January, February. So February 28th you need to submit. Correct? Now, now you are submitting your return. No? If you are notified before 31st of October, we need to submit by 31st of January. Now let's assume we are submitting by 31st of January. But there are some mistakes, it's incomplete. Can you amend this? Can you do an amendment? Yes or no? Yes. Can you do amendments to your tax returns? Answer is a yes. But before when or by when is the next question. So, amend tax returns can be done by HMRC and it can be done by the taxpayer. Okay. A taxpayer can amend his return within 12 months after due date of filing. How many months he can take? 12 months. So if my due date of filing is 31st of January 2026, I have the flexibility to amend my figures until 31st of January 2027 for tax year 24-25. Did you understand that? Make sense? Okay. But HMRC, if they are doing any changes, who is HMRC? The tax authority. If tax authority is doing any changes to your return, they need to do within 9 months. Within how many months? 9 months. For instance, let's assume if it is 31st January 2026, 9 months from there is when? February, March, April, May, June, July, August, September, October. By October 31st, they need to make the changes. If not, if they are giving you changes after that date from your filing date, let's assume HMR is taking 10 months, you can appeal. You can appeal to them. You know what is appealing? Filing a case against them. They can't change after that. You got it? Okay. But if there is a deliberate mistake, they might. Okay. So in which situation the deliberate of 5% applies? The deliberate of 5% applies risk on if you are taking more than 12 months. Then they will assess why you are delaying this return. Okay, from the submission date now of 24-25, you need to submit by 26 January. They will give you time until 31st of January 2027. After that only they will check on you. They will come and investigate you, what you have done. Why are you not submitting? Then if it is something reasonable, 5%. If something deliberate, then if it's not major issues means they will charge 70%. But something very suspicious and deliberate means they will charge 100%. That's a bigger penalty. I'll show you those penalty rates later. That chart will be given to you in the final exams. You need to evaluate the situation. You need to evaluate the situation. Okay?
For taxpayers, it's 12 months after the new filing date.
Yeah.
And for HMRC, after the actual filing date. 9 months after.
So, why they are saying so? Because if HMRC notifies after October, which means this tax return for the taxpayer, he can't make it on 31st of December 27. No. So let's assume if I'm supposed to submit on February, from February to next year February, I have time to change. That 12 months period should be given to me. But HMRC by 31st October, they need to get it done. Whatever said, done. You got it? So they don't have that flexibility because it is not our delay. No, that's their delay in compliance. So for their delay in compliance, we are not responsible. Good question. Right. Now, so all these applies for income tax or including corporate tax and CGT. Okay. Your income tax and class 4 NIC and CGT for individuals is submitted this way. Okay. In the next chart, I will show you the deadlines. That's why I didn't take you in whole format. Otherwise, you might not know what needs to be done. Then from here, I'll take you for VAT. What are the things that you need to note? And for corporation tax, the things that you need to note. Then you compare it. Don't go for a comparison now. Okay? Because there are similar things and there are other things. So when it comes to penalties of submissions, it's pretty much similar. But few changes are there. I'll show you later. At the moment, I'm deliberately talking about income tax. When you ask me this deliberate mistake, this part which I'm showing on the screen now is same for both companies and income tax returns. Okay. Penalties for errors and standard penalties. Now when it comes to these penalties, okay, I need you to have a good understanding about these penalties. It depends on the taxpayer's behavior. Now I told you after 12 months, government will, or the not government, I would say HMRC will observe the behavior of the taxpayer. Behavior of whom? The taxpayer. Why they will observe the behavior of the taxpayer? To understand, does he makes any deliberate mistake? Is it deliberate but not concealed? Or is it his careless mistake? Based on that, they will charge heavy penalties based on the taxpayer's behavior. If you are purposely hiding tax, then you are deliberately hiding taxes. One reason you don't want to show your income, that income can be earned through any illegal activity. Illegal activities, you will never report income tax returns. For an example, let's assume we are dealing drugs. So it's easy to make money by selling drugs, right? In the market, if you want to be rich, do illegal business. So if anyone becoming rich in your area, have a suspicion. Be very careful to deal with them. If it is genuine resource, fine. But overnight, if he changes, means then there is something suspicious. There is something concealed, correct? So if such things happens, HMRC will try to track all their income sources. Can HMRC track their income sources? Do you think that government doesn't know your incomes? Where do you keep your money? Bank. Under whose regulations banks are? Central bank. Under whose regulation central bank is? They will get your information. You are buying a property. Do you need to register? Where do you do the registration? With the government authorities. Do they have access to your information? Yes. Whether you sell, whether you buy, everything is notified. So likewise, whatever the transaction that you're doing, they can track you. You got it? So now this part of the penalty is depend on the taxpayer's behavior. So how to assess this? How to identify this in my question? That's the biggest task. So when you are trying to determine this, Shoaib, you are correct. Okay, so Shoaib is saying, so if it's more than 1 year, that fixed 100 plus 900 plus that 5% again, yes, correct. Or 70%, that depends on the behavior of the taxpayer. That depends on, now that's why they, okay, let me quickly show that part. Now here also they're talking about if it is not deliberate, means 5%. Sometimes HMRC can excuse also, okay. For an example, during COVID, people did not make money, everyone was suffering, they could not make anything, okay. So all the manufacturing businesses was down, unless the service industries, correct. For service industries, HMRC won't excuse. Manufacturing industry, they would have excused. No extra penalties, because obviously they can't file their returns. No. because they don't even make money to pay taxes, or even to claim the taxes they could not prepare it. There were some other issues and problems which is ongoing. So if such situation, let's assume it's a big war, so wartime you need to give a holiday period for taxes. You can't charge penalty now. During this period you didn't pay taxes. Can you charge that? Then no one will pay taxes. People will leave all the business and incomes and migrate to another country. Happens, no? Will you stay in a country where there is war? No. Now, can you remember there in 2017, 18, 19 period, Sri Lanka continuously had problems. Every year there is a problem, especially for Hindus and Muslims, correct? So one of my friend's family, 15, 16, 17 they observed, and then they shifted. They sold their entire property for a very low cost. They shifted with their entire family now. But in the other country, it's a Middle East country, they don't give the citizenship there, right? They are just living as a resident there. Got it? Now they have increased the residency period, I guess, 15 to 20 or some other day. Yes, every year they need to make visa payments. So they are citizens here, but still they don't want to come back now. They're settled. But I'm trying to say, now Sri Lankan government is losing the taxes from them, because they are not going to come back here again. Everything is earned and spent there. Only a visit they might come. That's VAT no they are going to pay. End of the day, you can't collect income tax from them. No. You need to stay here for more than how many days? 180? 88. In Sri Lanka, 183 days. Correct. Okay, fine. So that is there. Now when it comes to this, this part of your penalty is charged based on the behavior of the taxpayer. So if you are doing a deliberate and concealed mistake, maximum you can go to 100%. Who can charge this? That is HMRC's concealment. And minimum penalty for any unprompt disclosure. What is unprompt disclosure? Disclosure at a time when there is no reason to suppose HMRC have discovered or about to discover the error. So HMRC is about to discover the error. They also know that they will come. So before that you go and submit it. You got it? So you know that now government is giving you a headlines. Those who did not pay your income tax returns, they will come after you. You got it? So once you get that, and if you are deliberate and concealed, you try to do some sort of a disclosure, and there will be a minimum penalty when you are late. So that will go up to 30%. So how to fall in this grid? You have to be very careful with the wordings. No. These are isolated figures. Maximum it can be charged 100%, maximum, not 150%. Minimum they can go 30% if the disclosures are unprompted. So in the exam you need to look for the word unprompted. If these are prompted disclosures, they will charge 50% after HMRC discovers. Now this percentage is heavily depending on HMRC. So they will give you clues. They will give you hints. Otherwise you can't just assume and charge penalties here. So you need to understand if the penalty is deliberate. Okay, then how you need to determine. So what you have to do is, they will take the penalties in consideration of the percentage is given, right? And the PLR. What is the potential lost revenue? Potential lost revenue for HMRC. For an example, let's assume you have not paid tax for last 5 years. So for last 5 years, the total they will take, and of that, let's assume if you are charging 50%, last 5 years tax into 50% will be your penalty charges. Now these are the penalties for errors, and the standard rates if you are purposely doing something. Deliberate means what? You are purposely doing something. Sometimes you don't. Now you are submitting, but you don't disclose all the information. You show your employment income and you show your property income, but you don't show your other incomes. You got it? People used to do that. So if HMRCs have a suspicious about your other activities, and if you are not reporting, if they are coming after, they will do an audit, they will charge on you. Okay. So what is PLR? Potential lost revenue. So that unpaid tax as a result of error, that is what we call it as PLR. I told you for last 5 years you did not pay. What are the amounts that you did not pay for last 5 years? Of that they will charge you the penalty. Then the percentage is depending on the taxpayer's behavior, and the penalties can be reduced for the disclosure by the taxpayer. So this penalty can be reduced based on your behavior. You got it? So if you are deliberately doing the things, but if it is not concealed, the maximum penalty is going to be 70%. But in the exam question, if they are not talking about this unprompt disclosure, and when you are reading it, you are not getting any lines saying that unprompted disclosure, then go for the maximum penalty rates. 100, you see, deliberate and conceal means 100%. Deliberate and not conceal means 70%. Careless errors means maximum they can go to 30. Sometimes they can excuse also. What is the period that they can excuse? If it is unprompted. So before you did a careless error, for an example, let's assume your total property income, you have 4 properties. You disclosed 3 properties. When you are dragging your Excel equation, you missed to include 1 property. That's an error, no man. Error is different, fraud is different. Error is unintentional, fraud is intentional. That's why they are looking for the behavior. You got it? So if I did an unintentional error, now let's assume before the HMRC discovers, before the unprompted disclosure means before they come after me, I go and report to HMRC, hey, look at the last return I filed, I get the total of only 3 properties, 1 property is missed. Then HMRC can decide, okay, he is submitting late, but is it his careless mistakes? So they will excuse, sometimes 0%. But if it is a prompted disclosure, they can charge up to 15%. Or else, if they decide it is something serious that we are really missing it, then they can go up to 30%, not more than that. If you are being careless, they can charge you more than 30%. Now, this is a technical understanding, I would say. It involves a bit of theoretical understanding, the real aspect of understanding. You need to be the HMRC and assess the situation. So, that is where you are going to advise your clients. Correct? Okay. Give me a moment. Right. Is that clear? What do you mean by concealed? You are not disclosing it. For example, as I told you, errorly, if I did not disclose my property, that is not concealed. Okay? But purposely, I am not including means that is deliberate and concealed. You got it? Now, there can be situation you are deliberate, but it is not concealed as well. Okay? You didn't know that you need to submit this information. Cryptocurrencies. You are not aware. There's a new rules coming into market. So you are not aware that you need to submit those informations as well. That's not incorrect. That is your unawareness. Okay, that's why they say if you don't know to prepare your returns, if you can't self-assess your returns, get an advisor. You got it? You need to get a tax advisor. So which means in future when you are trying to be accountant, I would say at the moment tax accountant's position is good, but AI is coming, evaluating situations, but the advisory role won't be taken away. Correct? Because everyone is not from finance background, right? Those who know finance will use finance AI tools, but those who don't know, it's a bigger market is there. You got it? So try to focus your career on certain aspects, because the basic accounting, the data entry is being overstated or subsidized or replaced by whom? The AI tools. It's very easy. You can prepare your tax returns from your mobile also. You know that? They have separate tools for that. It's a method of identifying that, understanding the tools, how to operate the tools. That configuration part is critically important. So focus your career there. It's important. In future, financial modeling is one of the good area that you can focus. Okay, and one of the area that I used to focus is marketing. So I did a PhD in management, strategic management and leadership and marketing. That helped me a lot, that postgraduate. Okay, so I got a level 7 qualification there. I did in UK university. So that helped me a lot in achieving. Parallel to ACCA. ACCA is of course recognized, that's something else. But I'm saying that it is helping me a lot. So when you're focusing your career, now most of the students, now I shouldn't say this, but I'm saying this. Okay, if I were you, if I do ACCA, it's a finance qualification. That is a professional qualification. For an academic qualification, I will never choose a finance degree again. A management degree is fine, not a finance degree, because already I have the finance qualification. So it's like you are eating dal and you are having some spiced dal on top. That's all. Better to have some dal and meat, no? So diverse your skills. Important. Trust me. See, I'm a finance guy, but I have marketing PhD. You got it? Now I'm focusing on financial modeling. My MBA, I'm focusing on a different area, IT. IT with AI. You know, that is next is AI, of course. I need to know about technology. So try to choose things wise after your exams. First finish your skills. It's important. Then choose your career, your choices correctly. A small tip for you, I just wanted to say the other day. So because most of you are in middle of something. Do that, or do this. Okay. But if something good offered, for instance, let's assume a good university is offering you a degree, world-class university is giving you a finance degree, means if you're getting for a good rate, go for it. That is also a recognition at the end of the day. Okay, so it depends on your choice, because you need to eat when you feel hungry. I can't eat when you feel hungry. You got it? When you're not hungry, no point you're eating it. Get it? Okay. Fine. I got some questions. Why last 5 years? Why last 5 years? I just gave you an example, okay? So he's asking that last 5 years. Because last 5 years I was deliberately hiding this information. I am just concealing this information. I'm not revealing this. Okay? Fine. Next, what is this 300 pounds penalty per tax year? For what? Now, yesterday, record keeping. What is record keeping? Keeping your what? Keeping your what? Keeping your records, your source documents. Okay? So, when you're preparing your tax returns, you need to have your source documents. So, those source documents, you need to keep it for 5 years following from when? From 31st of January following the end of the tax year. So, which means for 24-25, it is not 2030. Can you remember? Yesterday the answer they mentioned as 2030. It needs to be 2031 for our tax year. How they are calculating 5 years? 31st January 2026, which means from there January 2027 is that 28, 29, 30, 31. That's how they are getting that 5 years. So you need to keep your records for next 5 years. It's important. So record keeping employed means what? Self-employed means what? You are having your own business. Because income tax returns can be now. I can work for a company, I can do my own business. Correct? I can run my own business, right? I don't want to go for a company, work for a company. It's not a must for me to work. So if you are being employed, if you are working for someone, 1 year only you need to keep. 1 year from 31st of January following the end of tax year, which is until 31st of January 2027. Because your pay slips, you need to keep. Now see, whenever you go to obtain a bank loan, they will ask your recent pay slips for last 6 months. They will not ask for last 5 years. They don't want the pay slips for last 5 years. HMRC request your pay slips for 1 year. Keep your records for 1 year. Because already your payee information is submitted to HMRC. So they don't want you to keep your records forever. Because all the old data is already filed and it is with them. But when it comes to self-employed people, they need to keep their track records up until 5 years after the end of tax period. If you do not keep, how much they will charge? How much they will charge? 3,000 pounds per tax year. So if you are missing 5 years information, 15,000 pounds. Out of 5 years, if you are missing 2 years information, 6,000 pounds. Did you understand that? So why they are checking? Because if you have some deliberate mistakes, then only they will come after your records. No? When you will investigate, if you are concealed, if you are concealing your assets, if you are concealing your properties, okay, and if you are being deliberately doing mistakes and not submitting the deadlines, means they will come and they will ask for your records. If you don't have records, they will seize. You got it? Got the understanding? This administration part is important. So try to keep absorbed in your mind. Okay, fine. Then, now I'm going to come to the payment section. Why Malik sleeping? So I gave good chance to sleep. So I watched Kohli yesterday. So it was an unplanned Kohli thing. And I ate out. In the morning I was having a nice time. Okay, so I thought that I won't be able to come. I was like throwing up a bit. But fortunately I was a bit okay by 9:30, but still I stayed for an hour, rested a bit more and came. Because you can never judge, no, when something goes wrong with your stomach, isn't it? Right. So you don't watch, okay? If you want to know the movie, ask from me. Because that 3 to 4 hours will be a waste for you. Trust me. Fine. Coming back. Now all these time we was talking about what? Submissions. So if I ask income tax submissions, can you close your eyes and tell me your answers? You can, no? Okay, fine. Now the payment. So always tax involves submission deadlines, payment due dates. When you are not paying on time, two things that you need to suffer: a penalty and a interest. Interest for time value of money, penalty for not complying. Correct? Right. Now payment of income taxes and CGT. What is CGT? Capital gain tax. For individuals, their CGT and your income taxes needs to be paid together. You need to calculate your capital gain taxes and you need to calculate your income taxes together. You need to submit. So they are letting us know any income tax and class 4 NICs not collected at source. What do you mean by not collected at source? If you did not pay, for an instance, let's assume normally your trading profits. In the trading profits, there are no very rare situation that you are paying taxes at source. Employment income, you pay at source. Correct? So likewise, there are certain properties or certain incomes where you would pay your taxes before it becomes due. Correct? So what they are trying to say is any income tax and class 4 NICs, class 4 NICs for self-employed people, okay, are not collected at source, are payable on a POA. What is a POA? What is a POA? Payment on accounts. Can you remember this payment on account? Can you remember this payment on account? Did we do questions on this payment on account? How to determine this payment on account? How to determine this? Now, this is not the first time you are learning. Don't watch these summaries which I have given. That's an additional note which is given for you. But how to determine this POA? Based on the last year's tax liability, correct? Can you remember that? Because I'm going to give you a homework on that. Fine. First of all, we'll try to understand the due date. So when it comes to payment of income taxes and capital gain taxes, okay, the due dates, the first payment on account is falling on 31st of January 2020. 25. Why 25? Before your tax is becoming due, you need to estimate your taxes. So when you are estimating your taxes, there is a method to estimate your taxes. Who remembers that method? That's my question. There is a method to estimate your payments for taxes. When? There were two things that you need to check. When Malik? If your tax liability for the last year is less than 1,000 pounds, very good. If you are now, by when you need to make the payment on account is the question. So payment on account means you are going to pay your taxes on installment basis. What basis? Installment basis. When you need to pay installment basis, why you need to pay installment basis? The first thing that you need to consider your last year tax. What is your last year tax? So our tax year is 24-25, which means 23-24 period. If your tax liability is less than 1,000, if it is your tax liability is less than £1,000, should you pay on POA? No. If it is more than 1,000, a yes. More than 1,000 means a yes. Then next, the second point. What's the second point? For last year, if your income taxes, okay, you're paying through payee. What? Pay as you earn. Most of your tax liabilities is paid through payee, which is if your 80% of your taxes have been paid through payee at the source, means you are not eligible for installment basis. So to consider that you are eligible for installment basis, a taxpayer's payee you need to consider. Payee means, now an employee, if my only income source is employment income, I told you, right? If my only income source is employment income, most of my taxes will be contributed to the tax authority every month when I make the salary. So my final tax liability I am determining, let's assume my final tax liability is 50,000. Of that, 45,000 is already paid to the tax authority. So already paid means through payee. So for an individual like that, should he pay income tax in the following tax year on a monthly basis? No. So if your tax payments is heavily paid through payee, then you are not going to qualify for installment basis. You need to pay at last. You got it? You need to pay at last. You don't want to go for installment basis. If it is not, then you need to submit your payments on a monthly basis. That's one condition. The second condition you need to look at, if your last year's tax liability is less than £1,000, then you are not supposed to make on monthly basis this year. You can wait to pay the tax at the end. So these two things. Now the next question is how to estimate. Now for tax year 24-25, the first payment is due on 31st of, the first installment date is when? 31st of January 2025. Are you done with the tax year? No, you are in the middle of the tax year. Correct? You are in the middle of the tax year. So when you are in the middle of the tax year, you don't know how much of taxes that you are going to make. No. So then you need to estimate what is the amount that you need to pay. What is the amount that you need to pay? How to estimate that? Now, the conditions I told you. Estimation 50% of previous year's tax liability. 50% of previous year's tax liability. You got it? So in the first installment you will pay 50% of previous year's tax liability. Now there is a special thing that you need to remember, especially for 31st of January 2025. Now this 31st of January 2025 is the last payment for 23-24 tax year, the first installment date for 24-25 tax year. Did you understand that? So 1 year's tax payment is becoming due on 31st of January 2025, which is your previous year. Another birth, the new taxes becoming liable for the existing period is all, first installment is also falling on 31st of January 2025. So when exam is asking you what is your total payment liabilities due on 31st of January 2025, look for information what he has provided, which means you need to include your first installment of the current tax period, that is 50% of the last year, plus the last year's BOP, balance of payment, last year's final amount, that is your total due. So he can ask you questions, what is the first installment for this year means give only that installment, the 50% of the last year thing. You got it? But if he's asking the total overall liability on this date means you need to consider the final payment of the previous year, first installment of the current year. This 31st of January is a critical date. The next due date is falling on 31st of July. The second installment date is falling on, see, the second PO is falling on when? 31st of July 2025. 50% you paid now, the next 50% you pay there. Then the final you estimate, have you paid more or have you paid less? If you have paid more during the installments for the particular tax year, then tax authority will refund you. If you have paid less, the balance is what you are going to pay on 31st of January 2026. So now let me ask you a question. I'll come to your question. Right? By 31st of January 2026, what are the tax payments will due? 24-25 final payment, 24-25 final payment, 25-26 first installment. Now in the exam question they won't give you the details of 25-26. Can you find it? You can find it because the total tax liability of 24-25's 50% is the first installment for 25-26 tax year. Am I confusing you? Right. Be very careful there. It's really important. Do the activities I did in the theory session. That's more than enough. The theory classes, I did some activities. Try to do that, you will automatically understand what I just told you. Okay? Apply those conditions first and try to calculate them. Okay, coming back. So last year tax liability is more than 1000 is before or after deduction of payee. That total liability means before deduction. Okay, good question. Now what she's asking, we need to take that 1000. No? The total liability is we are speaking. Total liability before any deductions. Okay, not after deduction. That's why we have a condition to estimate payee separately. Did you get number? Now her question is, so now last year's 50% no you need to take. Is it the total liability after deducting payee? No. Before. Cross. Okay. So that's what now I'm going to talk. Now, sorry guys. What is the third POA? Final payment to settle the remaining liability due on 31st of January in the following tax year, that is 31st of January 2026. So what are your installment payments? Your installment payments, you got 3 installments to pay. 31st of January 2025 for the tax year 24-25. Guys, generally examiner will give you this tax year 24-25. That's is known to us. But be careful just in case if he asks 23-24. Normally, very 95% I'm sure that he will come 24-25 as your dates in your final paper. But still be careful a bit. So if assuming that this is 24-25, so he can ask you this is your first installment date. This is your first installment. The second installment is falling on 31st of July 2025. This is for the tax year 24-25, our period. The final payment is on 31st of January 2026. Now see here. When is your submission date? 31st of January 2026 if it is paper based. Don't confuse that. Payment dates different. The final payment due date and the submission date is falling on the same day for the existing tax year. Did you understand that? The day you submit, the day you need to pay. From there onwards, the penalties will be calculated. Right. Now let's understand how this each payment installment is calculated. I already told you the way. Now this is calculated based on the 50% of the previous year's relevant amount. So what is that relevant amount? I told you the relevant amount. 50% you need to get. So example, the PAOs for tax year 24-25 are based on the tax returns or the tax liabilities of 23 and 24. So the relevant amount is including the total income tax. Total income tax. So the total income tax for the tax year 23-24 will be your income tax. Now what are the things that you need to take? Income tax liability. Is it after deduction payee? No. Class 4 NIC. Then incomes deducted at source. After getting this only, you need to remove the incomes deducted at source. So that is your pay. First get the total here, then get the taxes here of the previous year. From this, once you get this figure, of this 50% is your first installment. You got it? Of this 50% will become your first installment. So did you understand the components to consider your total income? So total income for the tax year 23-24, because you need to do an estimate. No? That estimation needs to have the total of your income tax, class 4 NIC for tax year 24-25, then 23-24, and your income tax at source, the pay. Okay, so that will be your relevant amount to consider your installment payments. Okay. Now previously, just 3 minutes before, when Amra asked the question, I mentioned you it shouldn't be. Reason I said because do this calculation separately. Okay, because deduction at sources, that 80% figure can be given. Sometimes that gross is given, so you need to read for information what they are giving. Okay, so make sure you are now end of the day, income tax minus source is going to be your net figure. Okay, and plus class 4 NIC is going to be a total figure. That's the answer. But still reflect your answers in this pattern. When you're showing the answers to the examiner, this is the way you need to show the answer. Don't net it and show it. Okay, especially for section C. So they can ask you in section C also. Section C, when you do an income tax computation, you calculate your liabilities. They will ask by when you need to pay, by first installment how much you paid, advise how much you would have paid. They can ask you. You got it? Then no POAs are required. No PA requires for whom? Capital gain tax and class 2 NICs. Because obviously we are not going to make the payment for CGT. Now in my total, did I include any CGT? No. Did I include any class 2 NICs? What is class 2 NIC? What is class 2 NIC? Chapter number 10, no? National Insurance Contributions. What is class 2 NIC? Class 1 is the contribution made by the employer to the employee. Class 1 got primary and secondary. Fine. Class 4, you know, self-employed. Class 2? So you didn't teach something called class 2, no? What is class 2? Rizkan? Shoaib? Kaif? Because it's an important thing, because the their due date is a bit different. What is class 2? Now without knowing this, how confidently I can send you to the exams? I'm not confident now. What is class 2? What is class 2 NIC? Quickly, refresh. Class 2 is calculated for whom? I need to say something. The UK government, they abolished this class 2 NIC payments on whom? Now I gave you a hint. Employed or self-employed? Self-employed. Very good. It's on self-employed people. Okay. Take a note on class 2 NIC. Self-employed individuals, class 2 NIC, okay? Self-employed individuals with profits above the small profits threshold profits above the small profit threshold. So take a next point and say for tax year 24-25 small profits threshold is 6,725. Now this is bit unlikely to test, but still they can. £6,725. Put another note. I'm just giving it for a reason. Okay, sometimes you see 98% from the syllabus, but they can ask you some other things also. So take a point, because class 2. What did I say first? I said it is charged on self-employed individuals whose profits are above the threshold. The threshold is 6,725. Okay. Then you can say the purpose of class 2 NIC. The purpose, I'll give you the purpose. It creates entitlement to the state pension and certain benefits like maternity allowance. Let's take an example. A self-employed person earns £8,000 what does it say? A self-employed person earns £8,000 of profits in the tax year 24-25. sorry, 23-24. The tax year 23-24. Now take it down. Take down. What's the tax year? Is it making a profits of 8,000, right? I did 8,000, more than 6,725, right? Okay, fine. He's making 8,000 worth of profits for tax year. Okay. What is the class 2 NIC liability? What is the class 2 NIC liability? For 23-24 tax year. For 23-24 tax year. And what is the class 2 NIC liability for 24-25 tax year? 23-24 and 24-25. Right. Why do I give this? Because I'll tell you after giving the answers. Then automatically will reflect why. Examiner might not test you, but still I have a doubt. Okay, fine. So to determine your class 2 for 23-24 period, per week it needs to be 3.45 pounds. You would have not learned this. Per week it's how much? 3.45. This is for period 23-24. So per week how much you need to pay? 3.45. In a year how many weeks are there? 52 weeks. So you need to contribute to class 2 NIC 3.45 into 52 weeks is how much? $179. Okay. But in 24-25 period, this is not applicable. Okay. You don't want to calculate anything. They can ask you a question just in case, because they did not exclude it from. Now the reason I'm saying is no POAs are required for capital gain tax or class 2 NICs. They are mentioning the class 2 NICs, and the class 2 NIC is nil. It's nothing for tax year 24-25. So let me give a note there. So we can, sometimes it can appear in your exam paper, correct? So I would say for the same individual during the, or rather saying during, for the tax year, for the tax year 24-25, no class 2 NICs, no class 2 NICs applicable. No class 2 NICs is applicable. Clear? So in your final paper they won't ask you calculations, but there can be an MCQ. What is the class 2 NIC for the tax year 24-25? Your answer needs to be 0. They can give you they can calculate 3.45 into 52 weeks and give you a figure, and nil figure and few other figures. He does it. Or else he can give you a fill in the blank question. How much? Your answer needs to be what? 0. In the section C means you need to tell class 2 NIC is not applicable in tax year 24-25. But if he is asked for 23-24 by any chance, 3.45 per week into 52 weeks. Okay? Right. So if he is starting the business for 6 months, then it needs to be 52 into half, because 52 is for a year, no? But they won't ask that calculation, but still I gave you an understanding there, because there can be an MCQ. It won't be a part 2, it can be a section A. So let's expect that part, but it's very rare, okay? It's a rare occasion. Then, no POAs are required for capital gain taxes. Capital gain taxes, do you need to pay installment basis? No. But when the capital gain taxes becomes due, how many months after the disposal? Residential property and others. For residential property, see, very bad. For residential property, 6 months from the date of disposal, and everything else by 31st of January 2026. Where is that? So the CGT liability becomes due on 31st of January 2026, but for residential property is not 31st January 2026. You have to be careful there. Can you remember? We discussed some examples when to utilize your unused annual exempt amount. Which property is the best situation? Which property is not best? Those things are important, guys. Those are decision making points. Go through those examples. It's not hitting your questions, exam kit. Nothing exam kit will give you. Exam kit will give you only 30 to 40% of your working, because don't 100% believe there unless you know this. From there you can reflect, okay, I am missing this to understand, missing this part to understand. Okay, so make sure you note down those points, it's important. So let me quickly finish the next part. So these are paid on 31st of January following the end of the tax year concerned. So 31st of January when? For tax year 24-25, it's going to be on 31st January 2026. But when you are estimating the previous year's relevant earnings or relevant amount, how to calculate? You need to take the total income tax liability, class 2 or class 4, class 4 NIC, will you take class 1? No. Then you need to remove your payee. Technically your payee is your class, a portion of class 1. Correct? Class 1 is distributed into 2, primary and secondary. Is it primary or secondary? Your payee is primary. Because class 1, you need to contribute some pensions. Company also needs to contribute on behalf of you. Is that clear? Guys, is that clear? Okay, take your points. So what are the contributions that you have? Guys, technically, if you have doubts, right, in your exams I'm talking, okay? Now when you have confusions between this in your exams, I'll give you a technique, okay? The technique is, right? So when you go here, you can find your contributions. Okay, so they will clearly tell you what are the contributions that you have. See, so what are the contributions relevant to you? Class 1, class 1A, class 4. Okay, class 1, you know that. What is class 1? Now, class 1 employee, class 1 employer. Employee is you, employer is the company. So if you ask your company to contribute, so this is what we call it as your occupational, what? Occupational pension scheme. So if you are an employee who is making a revenue of, let's assume, if your income is 100,000, you're making how much? 100,000. This is for an annual, okay? So you are in UK, you are making how much? 100,000 pounds. So this is your annual income. If I ask you to calculate your class 1 NIC, how you need to determine your class 1 NIC? How you need to determine your class 1 NIC? Now you should ask, class 1 NIC is determined between employee and employer. Both needs to contribute. Okay. Employee, from your salary, from your gross salary, for an example, you are receiving 100,000, right? From your 100,000, your part of the contribution will be reduced and they will make the net pay. But when employee is contributing on behalf of you, will that amount be reduced from your salary? No. Correct? So, to calculate that, up to 50,270, you need to pay 8%. That is employee. You need to contribute how much? 8%. So, from 50,270, if you remove 12,570 and you need to determine 8%. Okay. My total income is 100,000. Up to 50,270, I have contributed 8%. Anything beyond this, you need to pay how many percent? 2%. This percentage is given to you in the exam. Understood? So in this list, have they given class 2? They have not given class 2 because class 2 has nil, nothing to do. But I gave you because sometimes there can be an MCQ. Now in your previous batch students, if you have set for your exams in last year, then you would have read class 2 also. You had to do class 2. You got it? But for your batch, it is not there. So now what happens? Yes, Rizkan. Now he's asking, will the annual allowance, pension allowance will impact here? Yes. Okay. So 8% of this is how much? Can you calculate? And 2% of this is how much? Do that. Now this is what you need to do at the final exams. How much is the 8%? Three 8016 3016 in pounds. And from 100,000, if you remove 50,270 into 2%, 995. This total is how much? 110 10 means 0 4011, correct? Now from your salary, they will reduce 411. This is going to whose contribution? Let's assume this is Hazan's NIC. So from my salary, they will reduce 411 and they will put to my national insurance contribution account. To my account it will go 411 from my salary. Now on top of this, my employer will also contribute. My employer will contribute for first from 9,000, he is also having 50,270, sorry. From 100,000, for first 9,100 he don't want to pay anything. Everything else he will contribute at 13.8%. Is that? Am I correct? He will contribute at 13.8%. That's how much? $12,544. Now this is another amount which is going to my contribution for the employee. I am the employee here. So this is from my account, and this, the 12,544 is given by the company. You got it? This is what we call it as primary, class 1 primary, and this is secondary, class 1 secondary. Did you understand that? Class 1 primary and secondary, how to determine it? So will you remove this 12,544 from your salary? No. That is given by the company to us. No. So that is not reduced from this. So from 100,000, our salary will be reduced by this 4,011. So your take home pay is what you are going to get here. Did you understand that? Fine. Then what is this class 1A? What is class 1A? Who needs to pay class 1A? On what you need to pay class 1A? Who can tell me? Who remembers that? Kaif? Class 1A on what? Very good. This is paid by employers. Paid by whom? Employers on taxable benefits. This is a tax which is paid by the employers on the taxable benefits provided to that individual. So what is that percentage? That is 13.8%. So shall I give you an example? Shall we do an example? Okay. Now let's assume for class 1A, I'm talking about class 1A now. Example, take it down. So class 1A is charged on taxable benefits. Okay. So take down. Yusuf Limited provides following benefits to their employees. During the tax year 24-25. During the tax year when 24-25. So let's see what are the benefits that Yusuf is providing. So there, let's assume private medical insurance, let's assume you are giving around £1,200. Then you are giving some car benefits. You know what are car benefits, right? Yesterday we did an adjustment. Car benefits. Let's assume you're paying 4,800 and okay, that's enough. So what's the total benefits? It's going to be 6,000, right? Correct. Now who needs to pay class 1A contributions? Who needs to pay class 1A contributions? The company needs to pay. Company is providing me benefits. On this 6,000, they need to calculate 13.8%. That is how much? 10 is 600, 800. 828. So who needs to contribute? This needs to be contributed by employer. So employer pays 828 on the taxable benefits he has provided to us as class 1A NIC. Okay. What is that employment allowance 5,000? Who can remember that? If your class 1 contribution is, the class 1 contribution for the first 5,000 is exempted for employers to pay, meaning with some conditions. Did we learn those? I gave you specific summarized points. For employers, always remember, employers will receive, now if let's assume the total contributions company needs to transfer to contribute national insurance is 4,000, means should company pay that? No. That is a relief for the company. But will the employees get that contribution? Yes, HMRC will give that 4,000 to the employees. For employees, no any impact. But for businesses, it is a relief. It's an allowance. Allowance is a relief for them. You got it? How car benefit is tax exempt? Car benefit is not tax exempted. How can you say car benefit is tax exempted? Okay, so car benefit is taxable. That's why we calculated, right? So yesterday we did a question also. So it depends on the type of the engine, which fuel it is being powered with. Correct? Then, sir, for annual employment allowance, we can get our both employer and employee class 1 total contribution is 5,000 or less, and we can get the allowance for class 1 employer contribution. Right. So who finally pays these contributions? Both employees and employers. Contribution is remitted by employer. During the class 1, though you calculate 4,011 needs to be removed from the employee, and the 12,554, this total, out of this total is paid by whom? This total is paid by whom? The company. Company is paying to HMRC. So that's the total you need to get, the 5,000. So
It's like EPF.
not like EPF, exactly EPF. We call it as EPF. Okay. Shall I give an explanation on employment allowance as well? Take a note. I literally feel that I'm sitting in a theory class. It's okay. So when it comes to employment allowance, okay. Now, first of all, the employment allowance is how much? Is 5,000. Correct? Who can claim this? Is my question. Who can claim? Who are eligible to claim this 5%? 5,000. This is claimed by the eligible employers. Whom? By eligible employers with, what's the condition? Do you remember, anyone? Anyways, the allowance is given for the eligible employers. Do you recall what we studied? Anyone? Less than? Very good. Very good. That's the point I was looking for. Very good, Malik. Okay. So take a note. The eligible employers whose employers, this is employers, okay, whose employers NIC liability, who is employers NIC liability less than or equal to 100,000 in previous tax year. Where you need to consider which tax year? The previous tax year. If your previous tax year's total employers NIC liability, now this is to check the eligibility, okay? Can you get this allowance or not? So who will get this allowance? If your liability for the last year, employer's liability, your employer's class 1 secondary liability is 100,000 or less, okay, in the previous tax year, they will qualify for this allowance. And also include this allowance is not determined for employees' contribution. Not determined for employees' contribution, which is your class 1 primary. Then also I'll give you another important point. Who are not eligible So the employers, if you are an employer with only one employee, employers with one employee earning above the threshold, and who is also a director. So for them, can you get this allowance? You can't get it. So if you are the only employee, because you can start a private limited with single person, right? You will be director, you will be the shareholder itself. So shall I give you an example, a question, and you do the question and let me know the answer. So I'll give you an example. Say ABC Limited. ABC Limited information for the tax year 24-25 is provided. So I would say the secondary class 1 NIC. If I say secondary class and NIC, is that correct? Correct, no? NIC is 6,000. Okay. Or let's say, yeah, take 6,000. It's fine. Okay. Now, my question is: will this, or is this company eligible for the employment allowance? Is this company eligible for employment allowance? Yes or no? How to decide? You need to estimate the previous year. The previous year information is not given here. So which means you assume that they are qualified. You got it? So now I would say they are eligible for EA. What is EA? Employment allowance. So since they are eligible for employment allowance, their class 1 is 6,000. Employment allowance is how much? 5,000. So their liability is how much? Their NIC payable is going to be 1,000. So which means the employment allowance is given to employers only. Now, for an instance, let's assume your class for NIC is 4,000. Then how much is the allowance you are eligible? Only up to 4,000. Did you understand that? And your net liability is going to be nil. Now you have a balance of 1,000. No? Can you carry forward? Can't. Can't carry forward. Remember that point, because some students, they will carry for this last year they took only 4,000, 1,000 is remaining, so the next year they are calculating another 6,000. So can you do that? You can't do that. So shall we take a break? So now it's around 2:10. I'll meet you around 2:45. Okay. Quick lunch break and we'll be back. Then we were discussing about the income tax administration, the payment. So once we are back, we'll discuss about the interest paid on the how to calculate the interest payments. Okay. Right. So now we are going to determine how to calculate the interest paid on when you are delaying your payments. Okay, so when you are delaying your income tax payments, no, delaying means by 31st of January your first installment is due. After that you need to make the, anyways you will make the payment. For an example, let's assume you are paying it on February. So you are delaying by 1 month. So is it a late month charge? You have a penalty and a interest. Now this interest will be given to you in the exam. Okay, the official interest rate is 2.25%, and then when you go to the tax allowance rates, where I'll show you the interest figures. See, the official interest rate is how much? 2.25. Rate of interest underpaid taxes means they will charge 7.75, because there is an estimation where sometimes you might be thinking that in the next upcoming year you won't be able to make whatever you have made last year. Last year it was a season. This year your product sales is getting low, your product is getting died, it is getting diluted in the market. So which means when your product is getting diluted in the market, you can expect a lower sales for that unless you move to a new product. You got it? So then rather than anticipating your taxes to be same as the previous year, you can anticipate lesser than that. But once you anticipate lesser than that, and your final payment, when you are estimating, if it is more than what you should have, that difference they will charge an interest, because you need to make your payments. The rule of the HMRC is 50% of the last year's tax. No, so 50% of the last year tax is, let's assume 20,000. If you pay 20,000, no issues. What if you pay 10,000? That's an issue. No? Can you pay 10,000? Yes, you can pay 10,000, proving that your total liability will be reduced in the particular period, current tax period. So proving that period, you can assume and pay less. And then once you're finally analyzing the final payment on the following 31st of January 2026, then let's assume your total liability is exceeding the previous year's estimation. So on an installment basis, you have underpaid the tax office. Then they will come after you 7.75% for the difference that we have underpaid. So difference in my example was 10,000. For that 10,000, they will charge 7.75%. If you have overpaid, they will charge 4.25%. Okay, so the estimation needs to be more often than not similar, not same, similar. Okay, so from any payment due date, okay, from the due date to the payment date, the relevant interest rate is going to be, in our exam for the underpaid taxes, is going to be 7.75%. So the repayment interest, so how we are going to determine the repayment interest? Now the repayment interest is going to be the later of the due date and the date HMRC received the tax to the date of repayment, and the relevant interest rate in our exams is this 4.25%. So this 7.75% is in determination of the underpaid, and this is determination of overpaid taxes. Okay, so these are the interest rate which will be charged accordingly. So what I would advise for you from this point is to make sure all those activities which I did in chapter number 11 to go through once again. So you can do this tomorrow. So then put all the income tax understandings into one nutshell and make sure you are trying to get the answers. For those questions I have given the answers already. Read those questions and try to get those answers so that it will register in your mind. Now let's understand how this penalty is being charged on the late payment of tax. So on or before the penalty date, so that the penalty date means is the 30 days after the due date of the tax, no penalty arises if the tax is paid within 30 days of the due date. So what they are trying to say is, if I am supposed to pay on 31st of January 2026 and I am making the payment on within 30 days, so I am making the payment on 28th of Feb, should I pay interest? Zero interest. I don't want to pay interest again. So which means another 1 month they are extending. They are giving you another 1 month without any interest charged for you to settle your dues. But if I pay on 4th of March, then I will be subjected for interest. I will be subjected for late payment of taxes. So this interest penalty is charged for the late payment that you are making. Okay. So on or before the penalty date, so we understood what is the penalty date. Penalty date is going to be 30 days after the due date. Okay. For that particular period, you don't want to pay any taxes. For first 1 month, next 1 month or 30 days, 0%. Then not more than 5 months after the penalty date, you need to pay 5% of unpaid tax. What is the late payment charges? You need to pay 5% of unpaid tax. This penalty is for payment, okay? This is not submission. This is for payments. Then between 5 months and 11 months after the penalty date, it is going to be 10% of the unpaid tax. Then more than 11 months after the penalty date means you need to pay 15%. So this is the late payment penalty. This is what you have to charge as a late payment penalty. Okay. So your payment deadline is on 31st January and you got 31st July, correct? And you got 31st January again. So this will be qualified on installment basis. So who will qualify to pay installment basis? Who are the taxpayers who will qualify for on income tax basis? Where your total liability after. How to decide that 1,000? Total liability after pay? No. When you're deciding the 1,000, it needs to be total liability. Okay. But when you're deciding the second option, the payee for the last tax year is, let's assume, 80%. So let me do a question with you. Let me show the so So I need you all to try this activity. Now say this activity. So they are giving the self-assessment. Okay. For 23, 24, 24, 25 is given. They are asking calculating the BOP, the balancing payment for the tax year 24, 25 due on 31st of January 2026, and explain the consequences if the tax paid under payee for the tax year 23, 24 was 8,455 and the total tax payable for the tax period 24, 25 is expected to be 8,000. Okay. So can you try the first one? See the information provided to you, what you need to do there. What you are trying to do, you are trying to understand what you need to make the payment on 31st of January. So what are becoming due on 31st of January? Your first installment for 24, 25 and the final installment for what? 23, 24. Can you do that? Try this. It's not the first time. Same activity I am repeating. Then I will explain the theory along with this question so that it registers in your mind. First give a try based on whatever the things that you have in your mind. Are you done? Shall we discuss? So first of all, in 2023-24 tax year, you have a total tax payable of how much? 9,500. And you have paid taxes at source is 5,510. Likewise, in 24-25 period, your total tax liability is 10,500, and under the source you have paid 5,880. Now the question is, for the tax year 24-25, what is the amount of taxes which is due to be paid? So as of 31st January 2026, during this period, this date will be the first installment date correct? First installment date for the tax year 24-25, and this will be the last balance of payment for the tax year 23-24. So on this date I need to find both the payments, correct? So first of all, determining the first installment date which you need to pay. So how to get that amount? The first installment date payment. So how to calculate the first installment payment? How to calculate the first installment payment? Anyone? What you need to do? What are the next steps that you need to follow? The next steps you need to follow is your condition, correct? What are the conditions? See the condition. So your income tax for class, your class 4 NIC, liability for the period 23-24 tax year exceeds 1000. It should be more than 1000. So you need to check the point, is your last year's income tax liability, so which is which year? 23-24. Is it more than 1000? Is it more than 1000? Your liability was 9500. So it is more than 1000. So it is a yes. Then only you can make the installment payments. No. Otherwise, installment payment does not becomes due. That is your first checkpoint you need to do. Second checkpoint is what? Second checkpoint is your payee, the 80% of your total tax liability that you have collected at source through payee means it needs to be less than 80%. Okay, so your total liability which you have collected needs to be less than 80% of the payee. So how to calculate this 80% of pay as you earn? So you know that your total tax liability is 9500. Your total tax liability is 9500. Now this is, I'm taking 23-24 period. Of this 9500, I am collecting 5510 at source. So what is that percentage? So what is that percentage you are getting here? Anyone? 58%. Now 58% of your taxes is collected out of this 9500 is through payee, which means you will qualify to make payments on installments. If it is more than 80% is collected, means you will not qualify. You got it? You will qualify for installment payment. So now this is the eligibility. I didn't calculate the installment payment yet. This installment payment I am determining for tax year. When guys? Tax year 24-25. In order to calculate my first installment payment, this is the first installment payment, right? This is the first installment payment. For 24-25, is it the first installment payment? You are calculating the taxes for 31st January 2026. Is it the first installment payment for 24-25? Simple question. So the eligibility criteria I checked is correct or incorrect? My eligibility criteria needs to pay attention to 31st of January 2025. If it is for 2025, whatever this eligibility I did is correct, which means the amounts I used is correct. But they are asking me the results for when? 31st of January 2026. Last payment for tax year 24-25. which means first installment of not 24, 25. I'm wrong. I was wrong. See, you're not paying attention. It should be 25, 26 tax years first installment, 24, 25 last payment. Because what is this date, guys? 31st of January 2026. That is your submission date for tax year 24, 25. That is your last payment date for 24, 25. Don't confuse this. That date is important. Examiner can give you 23, 24 results, 24, 25 results. No matter, because we need to answer a few other questions, other parts. But we need to estimate the liability for these two. So first of all, if you go wrong at this point, your entire answer is wrong. Now determining the eligibility, the criteria we used is correct. The figures that we used is incorrect. So this 1000 I need to cross check with not 2024's result. I need to cross check with 24, 25 figures. So when you go to your answers, this is the period you need to check. The total tax payable is more than 1000. Yes, because it is 10,500. Total tax payable is 10,500. So are you qualifying to make your payments on installments? Yes. And you need to check what is the percentage of your total tax that you have collected through payee. Is it more than 80% or less than 80%? How to determine that? Under payee we have paid 5,880. The total amount of tax payable is 10,500. So what is that percentage? That's how much? 56%. Now in both the instances it's a yes to pay taxes on installments. Now only you need to calculate what is the amount. Okay. So now you are going to determine the amount payable. Correct? So how to determine the amount payable? So this is going your so when it comes to your final payment, so first of all you need for 24, 25 it's going to be your final payment. So we call it as balance of payment, BOP. So the final payment is your total tax liability is 10,500. Correct? So through payee you have paid how much? 5,880. So your liability is how much? 4,620. I'll come back to the positions. At this point, that needs to be your final liability. Okay. Then your payments on account you need to consider. So how to determine the payments on account? The payments on account you would have paid on 31st of January 2025 is the first payment. The last payment for 24-25 tax year is on 31st of January 2026. The first payment is going to be on 31st of January 2025. Now my question is, how much is that figure? That needs to be the 50% off. That needs to be the 50% off 23-24. So the first on 31st of July 2025 and 31st of January 2025 needs to be the 50% of 23-24 figures. It needs to be the results of 23-24 figures. If you actually find out for one, it's easy for us to determine for the next. Okay. So the payments account for 24-25, it's going to be how much? The last year's tax liability is how much? 9,500. Then you need to remove your pay, 5,510. What is the remaining? 3,990. Of this you need to pay 50%. What is that 50%? So 1,995 you would have paid on 31st of January 2025, and another 1,995 you would have paid on 31st of July 2025. This is the final settlement on 31st of January 2026. So technically, from 4,620, you have paid 1,995 on 31st of January 2025, and July you have paid another 1,995. Is it an amount payable or receivable? Amount payable or receivable? From 4,620, if you remove this, how much? 630. 630 I'm still owing to HMRC. 630 I'm still owing to HMRC. Correct? Now, is it your final answer? No. I'm determining what needs to be paid on 31st of January 2026. Just now I determined what is my last payment for the tax year 24-25. Then the first installment date, there is another payment that you need to, that also falls due, right? So the first installment of 2025-26 tax years payment is going to be 50% of 2024-25. Correct? So that you need to consider from this 10,500. If you remove 5,880, so what is the amount you are getting there? What's the amount you are getting there? 4,620 into 50% is how much? 2,310. So my total payment needs to be how much? 2,940. The final payment for the tax year 24-25 is how much? 630, and the first installment payment for 25-26 is going to be 2,310. Now this is important to understand. Yes, Amra, you need to see both the conditions are met. Only and, they are using the word and, yes. So you need to check both the conditions are met. Then only you are going to make your payments on an installment basis. So if you technically check, obviously they would have met in this question, because that's why the section B is asked. Now I want you all to try the section B of this question. Guys, it is not difficult. Try to understand the procedure. The procedure is, you need to understand by which date what you need to pay. Correct? And how to test what taxes needs to be paid on which particular date. Is it confusing? Kinda. Okay? So to relieve that confusion, I want you all to try the same question with the implication of part B. Let's do a test now. So this is a revision class, right? So in this revision class, I need answers from everyone of you. So now they are telling us, I need your answers for the part B. explain the consequences if alternatively you do the calculation. Okay, the tax paid under payee for the tax year 23-24 is 8455. They are telling that instead of 5510, if it was 8455 here, and instead of 5880, if it is 8000 here, what is your tax liability that you need to pay? Okay, so tell me the tax liability for 31st of January 2026. I need the tax due on this date. Okay, what you need to pay if the situation is this. So there are two things that you need to calculate. Did you understand the question? Kaif, Yusuf, Malik, Amra, Shoaib, Mohammed, Rizkan. Amra, your question will be answered when we practice the answer for the second one. Total tax payable, no? Okay, sorry. It's not pay, no? Okay, yeah. That is 8,000, right? Thank you, Malik. Okay, calculate the situation on 31st of January 2025 as well. Okay, so situation 1 and situation 2. If you got your figures? January 2026 you did. Okay, those who got the figures for January 2026 can share with me. 25 we'll do it together. Okay. Give me a moment. So let me quickly get the figures. Total tax payable. I hate this. Total tax payable TTP for tax year 23 24 and 24 25. Then the payee. So the assumption for us is 9,500 and here 8,455. Then again the liability is going to be 8,000. Then it's going to be 5,880. Okay, done. So this is the situation, right? So we need to understand this is your tax year. Fine. Now the first requirement is, what is the payment due? Payment due on 31st of January 2026. Correct? That's the first question. So what is the payment due as of 31st of January 2026? So first of all, to decide what you need to pay on this date, you need to understand, you need to make the first installments. Hate this. First installment of 2025-26 is becoming due, correct? Then the balance of payment for 2024-25 becomes due, correct? So this is happening, the payment on 31st of January 2026. First of all, let's quickly decide what are we supposed to make the payment on as a balance of payment due for 2024-25. So to check that, I need to see the eligibility criteria, right? So first checkpoint, your first step Your first checkpoint is that you need to check your eligibility criteria. You need to check your eligibility. How to check the eligibility? How to check the eligibility? You need to understand, is your TTP is more than £1,000 for the tax year when 23-24. Correct? You need to understand, is that correct I am trying to do? No, I'm not correct. Should you see the eligibility there? Or not correct? Amra, should I check the eligibility or not? Should I check the eligibility or not? I should check the eligibility. I'll tell you why. Let's check the eligibility and then we'll find the reason why. And I'll tell you, if this is the situation, what you have to do. If this is the situation, what you have to do. First of all, check your eligibility. Don't have confusions there. So, is the TTP is more than £1,000 in tax year 23-24? The total taxable payment is how much? 9,500. Is it more? Yes. That is a yes. Correct? So, are you qualified? Are you qualified? At the moment, yes. Then you need to see the payee collected should be less than 80%. Correct? It should be less than 80%. Am I correct, guys? Am I correct? Yes. For which period? Which period? That is also yet again for 23-24. So how to calculate that? So you need to check. You have 8,455 collected by payee during the tax year 23-24. Okay, which is 9,500 is the total amount of tax that you need to receive. So what is the percentage? That is 89%. How much is that? 89%. Now my question is, are we qualifying to pay? Are we qualifying to pay the taxes on a POA basis, on an installment basis? Are we qualifying to pay? No. Now see, if you don't do this checkpoint, you will get caught. So I would say, for the tax year, now this is my conclusion. Did you all did this? My conclusion is that for the tax year 2024-25 installment or POA basis of payment is not necessary. Correct? Am I correct to say that? So which means your balance of payment due on 24-25 is going to be from this 9,500 Whatever you have paid already is 8,455, only 1,045. Have you paid anything else before? Did you pay installment 1, 31st of January 2025? Did you pay anything? No. 31st of July 2025, did you pay anything? No. Did you understand that? Likewise, I need to estimate the first installment for 25-26. For that also I need to check the eligibility, correct? Because if you are not eligible, then you don't want to pay taxes on installments, no? Did you understand that? If you are not eligible, you don't want to pay taxes on installments. So now I will cross check my determination. Now this I did for 24-25 tax period. Now I am checking my eligibility for 25-26 tax period. Does it making sense? Now first of all, what is the first point? What is the first point? Is your total tax liabilities more than 1,000? Yes. Okay. Payee collected should be less than 80%. So let's check. Is it 80% or not? So 5,880 divided by 8,000 into 100%. Now it is 73 point how much? 5%. So during the tax year 25-26, should you pay installments? Should you make payments on installment? Yes. Why? You are getting qualified. Your payment, the payee that you have collected is less than 80%. That's the reason why you need to calculate the installment. So I would say for the tax year 2025-26 period, POA is essential. POA is essential. Did you understand that? Did you understand that point? Why POA is essential? Because you are meeting the criteria. And now how to determine the first installment? The first installment due for 25-26 tax year, it needs to be how much? From 8,000 you need to remove 5,880, correct? Then of that you need to take how much? 50%. So that's going to be 1,060. That's going to be 1,060. So this is the payment which you are supposed to pay by 31st of January 2026. How much? Around 2,115. Right. 1,000? That is 24-25. Alright, okay. So that needs to be, balance of payment needs to be this. Sorry, my bad. Yes, correct. You guys are correct. Balance of payment needs to be calculated from 8,000 minus 5,880. 2,120. Correct. Your answers are correct. Did you understand that? Did you understand how did I arrive at 1,060? Did you understand the rules behind that now? So that checkpoint is important. Okay, to decide factors. Alright. So shouldn't the value be 4,620? for 10,500 minus 880, which is 10,500. There is no 10,500.
Talking about the previous question.
The previous question. Okay, this is done. Okay, sorry. Then I would have taken the wrong amount there.
No, the amounts changed here.
Here amounts got changed now. Yeah. Here the amounts are getting changed. Okay. So based on this situation, this is what you need to do. Now this is not about the figures here. What I am trying to say is, you need to understand the method, the mechanism. That is important. Okay. Fine. Are you confused? Or now is that bit clear? But you need to practice. Okay. Is that clear, everyone? Fine. Then so now it's easy for you to understand what is meant by these dates now. So as of 31st of January, there are some common deadlines and submission dates. So the payment of income tax and class 4 NIC becomes liable by 31st of January 2026 or 31st of January each year. Did you understand that? So submission date is also becomes liable for income tax and capital gain taxes. You know the submission deadlines, right? If the notification is received before 31st of July or before 31st of October, your submission date for electronic submission is 31st of January 2026. Don't forget that. Then your capital gain tax liability also becomes due by that date. Likewise, when you see some other common deadlines, 12 months from 31st of January after the end of tax year. After the end of tax year means what is your current tax year? Your current tax year is 24, 25. This is the end of tax year. From there, the January is 31st of January 2026. The things which is becoming due by 31st of January 2027. Can you remember anything? Amendment for tax returns made for 24-25. Whose amendment? Taxpayers' amendment. But if the taxpayers' amendment, the notice is received after 31st of October, then the amendment date will change from the due date 12 months. For an instance, because the due date will fall 3 months. Now, if HMRC is informing you that you need to make your tax returns in November, so which means this is after 31st of October. So you have to make sure you are submitting your results by December, January, February, 3 months. You take 3 months. So your 12 months is going to follow not on 31st of January 27, it's going to be 38th of February 27. Between that date you need to make the changes. But any amendments to be done by HMRC will fall by 31st of October 2026. Okay. Then all the loss reliefs, technically the trading loss current year and prior year, trading loss earlier years relief back, and business asset disposal reliefs, taxpayers right to amend the tax return, and also to keep the tax record, keep the personal tax records of payee. Can you remember? Payee. Under the payee, you need to keep your records only 1 year. Okay, from the end of the tax year, another 1 year. Only you need to keep. So these are the deadlines which is falling on 31st of January 2027 for your tax period. Okay, so whatever the area that you are going to focus on, that deadlines is falling into this period. So these are some common deadlines that you can remember. So it's a summarized version I have attached here. Then the common deadlines for 4 years after the end of tax year. So there are certain areas we learned. 4 years after the end of tax year is when? So 24-25 is your tax year. 4 years after means 25-26, 26-27, 27-28, then 28-29, 5th of April 2029. What are those? The gift holdover relief, you need to make sure you are getting your relief before that. Carried forward trading losses, you need to relieve before that. Rollover reliefs, you need to relieve before that. Any terminal loss relief claims, you need to make it before that. And claims of overpayment relief, you need to claim that. So these are some common deadlines for 4 years after end of tax year. These are the areas. Okay. Let me also tell something. Can you remember something called transitional profits? Now, what is this transitional profits? I'm expecting a question from that particular perspective as well. Kaif, what is transitional profits? Malik? Risk on? Yeah, the tax rules changes. Fine. What we need to do then? Very good. Others? Do you remember where did we study this? Where did we study this? Partnerships under income tax. Now, from 23-24 tax period to 24-25 tax period, our period to calculate income taxes varied. You got it? So from current year basis to tax year basis, it's changed. So during that transition period, the change is what we call it as during that transition period, there were certain profits which are not taxed. That particular profit amount or that particular amount will be informed to you or will be provided to you in the exam. When you calculate estimating the liability for each individuals or respective incomes for each individuals, you need to top up that 20% each year. That 20% can be taken over for 5 years. That 5 years is starting from 23-24, 24-25. Your exam period is the second installment. So which means there will be a balance brought forward which has been utilized. So be careful. And how long you need to apply? Until 2029. See, 23-24, 24-25, 26-27, 27-28, then 28-29. That also falls into this 5th of April 2029 deadline. I would give another period as your transitional profits. The other thing is what? Your transitional profits. Every year you need to claim 20%, which means if your total transitional profits for the 5 years is 100,000, let's assume Hassan's income tax for the period 24-25 is, let's assume, 300,000. From this 100,000, I need to take 20% for this particular year, which is 20,000. So my reporting tax liability or taxable income is going to be 320,000. Did you understand that? You need to do that. So make sure you don't forget these things. These are examinable points. Why do I say these are examinable points? These are the changes, the latest changes. So the latest changes, it will be examinable. Yesterday we spoke about ECA. What is ECA? Enhanced Capital Allowances. So you know the rules of enhanced capital allowances, right? Do you? We did capital allowance questions. Make sure you note down these areas. Go through your notes. Try to grab the theoretical understanding. Practice question. The areas that I am saying, you don't have past paper questions. You got it? You will get the questions in your paper. So be very careful. Did you go across and check the super deduction yesterday? So what was the date? Huh? 1st of April 2023 onwards, your super deduction for main pool is 100%. Before that, 130%. Good. Then for special rate, it was 50% before and after also 50%. No change there. I don't see that you guys are studying. Oh, it is not enough. We need to remember the rules now. Okay? Are you all stressed? Kind of. So I was saying what stress. Okay. Before I move to the other parts, are you all really getting what we are trying to do here? This part you read at home for that. Okay. Can you do this question? I'll tell you a problem, okay? The problem that I see with you all, you try to answer your questions from your mind. The theory questions from your mind. Correct? You can't do that if you want to be accurate. Unless you are an expert in this area. First of all, try to understand what is your deadline. Correct? Is there any late submission? How long you are delaying? All these points you need to understand. Otherwise, it will be hard for you to answer the question. And what due date they are asking, what time limit they are asking is what you need to understand. It's one of your past paper question. right? Andrea is employed in tax year 23-24. What is the tax period we are looking for? Sorry, 23-24. She also received property income from an investment property that she held for many years. So she is receiving property income as well. On 20th September 2024, Andrea submitted her self-assessment tax return for 23-24. So 23-24, by when you need to submit? By when you need to submit? By 31st January 25. But when are you submitting? 20th September 2024. Are you late? No, you're paying payment, you're submitting. Your submission is on time. Is there any delay? No. So the question is, they can't ask you the submission thing here. Let's see the requirement, okay? And on 31st of December 2024, Andrea found an error in her return. So in 2024, she's coming across a problem in return, which means by December, after submitting. After submission, she is finding an error. Can she amend it? Theoretically say, can she amend it? Yes. By when she needs to amend it? She will get from the end of tax year 12 months. Correct? So which is going to be 31st January 2026. So my time limit to correct is going to be 31st January 2026, which means it can't be option B. It can't be option D. Am I correct? Now you are left with 50-50. Now you need to look for your payment due date. What payment due date? What is the due date of the payment of the balance on tax due for tax return 23-24, that is falling on 31st of January 2025. Your balance of payment for 23-24 needs to be settled by 31st of January 2025. Now it's an easy question. Correct? They are asking the due date, payment due date, and the time limit for correction. Now if you don't have the principles in your mind, is it an easy question? No. Now did you understand how to answer this? For this you need to clearly write down your dates. You can't like mind map it. So most of you are staying at the screen and mind mapping it. No, just write on your scratch pads. You're getting 2 marks, no? Why do you want to waste these 2 marks? In vain. I don't want you to waste these marks. Correct? Fine. Then also, okay. So the late payment penalties, these are payment penalties, okay? Common penalties for late payment. So which is, if you are more than 1 month late, you need to pay 5% extra. 6 months late means additional 5. Another 12 months late means you will pay another additional 5%. Now, it's not matter of only summarizing this. Application is important. Now today you need to go home and take your exam kit. Practice all the administration questions. Okay. Do you have administration questions? Yes. Right. So this I did discuss before. I'm not going to repeat it again. Okay. Right. Inheritance tax. I'll come to inheritance tax last, because we'll check some other examples and come. Right. VAT. What is VAT? What is VAT? Value added tax. Okay, by when you need to submit VAT? Monthly or quarterly? Generally, it's quarterly. So, what are the quarters? March, June, September, December. A quarter concerns with 3 months. So, January to March, April to June, July to October or September, then October to December. Correct? Right. So, first of all, you need to understand the deadlines which is falling within 30 days. So can you all remember we learned something called, now before I come to this particular point, BTP. What is BTP? What is BTP, guys? Basic tax point. What is ATP? Actual tax point. Who can explain me this concept? How many of you all tried or revised this part? Guys, did you revise? Sir, revised, but I can't remember. Correct? Malik? Same. Yusuf? Somewhat. Amra? Shwed? And Rizkan? So can remember but don't know to explain. Beautiful and brilliant. Now, when you are learning value added tax questions, there are some principles that you need to remember. This basic tax point and actual tax point will be an MCQ. It can be your section A and it can be your section B. You got it? They can ask you in both the places. So technically it's going to be an MCQ. You need to understand how to decide your basic tax point. For goods, how long? What is the basic tax point? When you need to consider your basic tax point? Once it is get delivered. For services, once it get performed or completed. Now if I say these two words, it is not sufficient, which means this is an area I'm saying it's critical. You will get an MCQ from that. So take a note in your revising list or the gray areas. You need to go through the BTP points. Go to my theory. Exactly what is there will reflect in your exams. Okay? BTP and ATP. What is BTP? What is ATP? It's not a theory session. I can't keep on explaining things here. Okay? But I will explain for the ones who are revising it. Once you revise it, if you did not understand, drop me a message. I'll individually explain to you. Okay? Did you understand that? Make sense? In which chapter? Chapter number 22. Value added tax. Okay. So page number around 10 or 11, if I am not wrong. You got the tutes, everyone? You got the tutes, right? Fine. So, to register for tax, what is the threshold for VAT? I'm talking about this VAT. What is the threshold? It needs to be 90,000 It needs to be how much? 90,000 pounds for last 12 months based on historic test. If not, if you are anticipating, it needs to be futuristic test. Can you remember? There are two types of tests to check. You need to monitor what is the immediate 12 months, preceding immediate 12 months total, is it exceeding 90,000? If it is exceeding 90,000, you need to get registered for VAT. If it is not, you don't want to get registered. But if you want to get registered voluntarily, can you? Yes. Do you got a deregistration limit? Yes. What is the deregistration limit? 88,000. Not 5, 88,000. Okay. Next. So technically, this is what you need to notify HMRC. Now here it becomes notification. You need to inform HMRC that you are qualifying for VAT registration or deregistration. You got it? You need to inform the VAT authority. Then by when you need to make your VAT returns? By when you need to file or submit? By when you need to submit your VAT returns? So VAT returns needs to be prepared quarterly on general. Correct? So which means you will prepare for March, June, likewise. Every quarter you will prepare. Quarter means 3 months. So January to March. So your January to March return needs to be submitted by when? 1 month and 7 days. What's the due date? 1 month and 7 days. So January to March quarters VAT return needs to be submitted by 7th of May. Correct? You need to file your return on or before 7th of May. Did you understand that? Okay. Now, the substantial traders whose VAT liability is more than 2.3 million pounds, they need to submit their returns on or making monthly payments on account. So if your VAT liability is becoming more than VAT liability, okay, if your VAT liability is becoming more than 2.3 million, okay, you need to make your payments monthly. You need to make your payments monthly from the second month. So which means the payments due at the end of month 2 and 3 every quarter. Because first month is going to be January. You need to make the January payment in February. February payments in March. Then the quarter payment will be again on May 7th. Did you understand that? Because you are preparing your returns on quarterly. So, and you need to retain your VAT records for 6 years. How many years? 6 years. It's important. Okay. So this is the submission, and you need to know this threshold so that your life is becoming easy. Okay. Next. VAT penalties are charged based on the points system. Okay. So for an instance, let's assume late filing return and late payment of VAT is different. So late filing return, So each and every late return you are earning one penalty point. One penalty point. So as soon as you earn one penalty point, do you need to make the penalties? No. When you reach 4 penalty points, which means last 4 submissions is delay. Late means, for an instance, March quarter you need to submit by 7th of May, you are not submitting. June you need to submit by August 7th, you are not submitting on time. Then September you need to submit by November 7th, you are not submitting on 10th. So December you need to submit by February 7th, you are not submitting, which means you are collecting 4 penalty points. Once you reach this 4th penalty point, they will immediately charge £200 penalty for each late return from then onwards. Once you reach these 4 points, you are supposed to make penalties from there onwards. Okay, so the penalty points is going to be how much? £200. The first. The points will become 0. It's a point based system. Okay, the points will become 0. You need to make sure the following year's tax returns, the next 4 tax returns, you need to submit on time. Only if next 4 returns if you submit on time, then it becomes to 0. For an example, let's assume in the next 4 return, first one you submit on time, which means May 7th you submit on time, the March. Then June 1 you need to submit by August 7th, no, that also you submit on time. September 1 you need to submit on November 7th, you are not submitting it on time. Will your point set to 0? No, still it will be 4 points. So whenever you have 4 points in your card, you need to pay £200, a penalty. Which means you need to have timely submission. So guys, if you are submitting late, you will pay also late, no? You got it? Unless you are paying monthly. Monthly will become liable for you if your total VAT liability is more than 2.3 million. You got it? Only if you submit, you are becoming due to pay, right? So if the payment is late by 15 days or less, you don't want to make any late payment of penalties. No, any late payment penalties are charged. But between 16 to 30 days, 2% that you need to pay extra penalty. 31 days or more, extra 2% plus additional 4% daily penalty. So from 31 days or more, daily 4%, every day 4% will be charged. Did you understand that? Now for an instance, let's assume for first I'm supposed to pay 20,000 to HMRC. This is the liability for March quarter. So March quarter, the submission date is when? When is the submission date? Submission date is falling on 7th of May. So if I pay by 7th of May, fine. If I submit by 7th of May is fine. But let's assume I'm submitting it, I'm not paying, I'm submitting on the same day. So no late filing return is not charged. I'm not making 1 point here. No, 0 points. That's I'm excused. But you need to make the payment also, no guys. So I need to pay this 20,000 to HMRC, no. On 7th of May, I'm not paying. So 15 days from 7th of May is when? 22nd. Until 22nd of May, they will excuse me. I don't want to pay any penalties, 0%. But let's assume I am making the payment on 30th of May. So how many days I am late? Up to 22nd, 0 penalties. After between 16 to 30 days, between 16 to 30 days, I need to pay additional 2%. Additional 2%. So 30th May means from 7th of May, how? 30 minus 7 is how much? 23 days. You are paying it late by 23 days. This 23 days is falling between 16 to 30 days. No? If it is falling between 16 to 30 days, I need to pay an additional 2%. How that 2%? On 20,000 plus 20,000 into 2%. You got it? What is 20,000 2%? 400. 400. So I need to pay 20,400. That if I am paying on 30th of May. Now let's assume I am making the payment on 15th of June. When I am making the payment? 15th of June for March quarter. Which means how many days I am late? How many days I am late? So from 7th of May to, calculate like this guys, you are making the payment on 15th of June and your submission date is 7th of May. May is 5. So 6 minus 5 is how much? 30 days, 1 month. So let me take 1 month there. 1 month. From 15, if you minus 7, how many days? 15 minus 8 days. So which means in 1 month you got 30 days plus this 8. You are paying after 38 days. Which means if you are making the payment on 15th of June, the first of all you need to understand, you need to pay this 20,000. When you are late by 16 to 30 days, 30 days, right? 16 to 30 days, how many days are there? 16, 17, 18, 19, 20. Then 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. How many days? 15 days. For this 15 days, you will charge only 2% if you are delayed. On this 20,000, you will charge 2%. That is 400. Beyond this, how many days you are late by? 8 days. Each day 4%. So 20,000 into 4% into 8 days. That's how much? 20,000 4% is going to be 800. 800 into 8 is 6,400. I need to pay 6,400. So if I'm making the payment on 15th of June, I need to pay this 20,000 and this penalty plus this penalty. So in total I need to pay 26,800. Did you understand that? So that's how you need to calculate your liability when it comes to VAT. So that depends on VAT system. So for each late submission, so let's assume if you are submitting now, at this point you are submitting on 7th on the correct date. If you are submitting on 8th, it's a late submission. You are making 1 point. Is there any penalty for that? No. So second one you are making late. Is there any penalty? No. But you are making 2 points. Third one on time. Are you making any penalties? No. Still your penalty is at 2. Fourth one on time. Are you making any penalties? No. Still your penalty points is at 2. Fifth one late. You accrue 3 points. Sixth one on time. Still you are accruing 3. Seventh one late. Now you are accruing 4. 200 pounds you need to pay. Now from there onwards, next 4 installments, now it will be set at 4. The following month you are paying on time. Okay. But still your penalty points is at 4. You need to pay 200. 7th month you are paying. Okay, on time. Still your penalty point is at 4. You need to pay 400. Third month you are submitting on, third means the third quarter. Okay. You are submitting on time. Still you need to pay that 200 pounds. Fourth month you are submitting on time, your points is reset to 0, you don't want to pay. Because once you make that 4 penalty points, that 4 penalty points will be keep on at that same level until it gets reset while you are making your submissions on time for next 4 returns. The next 4 immediate returns needs to be on time, then only it resets to 0. That's a system. For VAT, that is the way that they are charging the submission penalty, late submission penalty. But in the income tax, it's different. You got it? So for VAT, it is different. That you need to understand. But VAT, you need to understand the late payment penalties separately. Submission is on a point based system. Then VAT interest is based on whether you are underpaying or overpaying of the taxes, unless otherwise told. So underpaying interest is how much? 4.45%. Overpaying is 7.75%. That will be given. Can you try this? Interest is annual. That interest rate that they are charging 2.25, 7.75, that is annual. So you need to prorate as appropriate. Good question, Rizka. What's the answer? So Emerald commenced a business as a sole trader on 1st of March 2024, making only taxable supplies. So what are taxable supplies? Your zero rated items, standard rated items, and reduced rate items. Exempt can't be. Exempt products is not taxable supply. Okay, reduced rate, standard rate, and zero rated supplies is what we consider as taxable supplies. Correct? Okay. However, her turnover in the first 15 months of the trade is given. So they have given the turnover, the sales figures for the quarters and the first few months they have given. By what date should Emerald have notified? Notify means what? Inform HMRC that she is supposed to get registered for VAT. So by when you need to, by when you are meeting the deadline or your registration threshold, by when you are meeting the threshold, from March to September you are making 7,500. So how many months? March, April, May, June, July, August, September. 7 months. 7 months. Each month you are making 7,500. How much is that? How much? 52,500. So are you meeting the 90,000 mark? No. So then from March, when you calculated, you are not making, to September. From October to November, 10,500 per month. Correct? So October to November, how many months? October and November. 2 months, no? 2 months into 10,500. That's the total is how much? How much? 20,000? 20? 21,000. Then from December onwards, 22,000 per month. Okay. So technically you need to see last 12 months total sales needs to be reaching this 90,000. So December 2024 you are making 22,000, correct? Last 2 months, which is October and November, you are making 20,000, correct? Sorry, 21,000. So you need to make sure this is 90,000 in the previous 12 months. So 1, 2, 3 months is covered. So the previous 9 months is what you need to consider. So before you are considering the previous 9 months, you got 7 months before. 7 months total is how much? 50 to 500. So once you get this total, are you exceeding this 90,000? 50, 70, 90. Correct? By December 31st December 2024, you are meeting the threshold. Correct? You are meeting the threshold. By when you need to get registered? From the day that you are meeting after, within 30 days. How many days? Within 30 days. So within 30 days means from 31st of December, within 30 days is going to be 30th January 2025. So Emerald should get registered for VAT on 30th January 2025. Did you understand that? Make sense? Fine. Right. Corporation tax. So when it comes to corporation tax, I have given the common deadlines that falls within 2 years at the end of the accounting period, because corporation tax we judge everything based on what period? Accounting period. So if when there is a loss which is carried forward, that needs to be relieved within 2 years. So current year or carry back close trading, terminal loss reliefs, all your group reliefs and transfers in companies needs to be fall within 2 years end of the accounting period. You need to claim those things within 2 years end of the accounting period. So you need to brush up these areas. If there are any due dates is asked, that's the period that you need to give. Then corporation tax deadlines. So deadlines is for particularly for your submissions. So the you need to submit your return 12 months from the end of the accounting period. Was the date? 12 months from the end of the accounting period. So if your accounting period is ending on 31st December 2025, you need to submit it by 2026 December. Correct? Or 3 months from the issue of notice to complete the return if later. So if you are receiving a notifications within 3 months, who will notify? HMRC. If it is not notified, from your accounting period within 12 months you need to submit. That is your submission deadline. You got it? Payment is different. Payment deadlines different. For companies, how do you pay? If it is a small and medium company, 9 months and 1 day after the accounting period. So if your accounting period is 31st January 2025, 9 months is September 30th, it needs to be 1st of October 2026. Payment. That's for small companies. But large companies, from the 7th month, every quarter you need to pay. So which means for 31st of December 2025 accounting period, for large companies, 7th month is when? July. 14th of July. 14th of July is the first payment. Then after that, you need to take 3 months, which is going to be the 10th month, which is October. 14th of October, the second payment. Then 3 months after that, it's going to be the 13th month. It's going to be 14th of January, the third payment. And the last payment is the 16th month. It's going to be April. It's going to be April, right? February, March, April, yeah. 14th of April. So these are the payment dates for companies. Individuals separately, that is 31st of January, July, 31st of January, payment on accounts. Here for large companies, from the 7th month you need to pay. So first installment is due on 7th month, 14th day. Then after that, every 3 months you need to make the payments. So here the BOP falls on, in this case, 14th of April. You got it? Here the BOP, the balance of payment, the final payment is made on when? 14th of April. Then how long you need to keep records? Yet again 6 years. That also 6 years. Corporation tax also 6 years. Income tax 5 years. But payee 1 year. Now, corporation tax deadlines, HMRC inquiry into return. So HMRC has 12 months from the submission date to open an inquiry if the return is submitted on time. So they can inquire your records, right? So how long they can take? 12 months. But for individuals, 9 months. So if the return submitted late, HMRC has 12 months from 31st of January, 12 months from 30th of April, or 31st of July, or 31st of October, that follows actual submission late. So based on the actual submissions, 12 months. But in the income tax, October, whether late or before, HMRC needs to make inquiries by October. You got it? Did you understand that? Here based on, they will take 12 months. Their taxpayer can make any amendments for 12 months. Correct? Okay. Then HMRC's discovery. What is discovery assessment? If tax authority feels that now if you are not submitting your returns, then they will do a discovery assessment. They will prepare a return on behalf of you. So that is going to be encountering 4 years after the accounting period in general, but they will go back for 60 years if they found any careless mistakes, and if there are many deliberate mistakes, they can even inspect 20 years behind and charge penalties on. Got it? So discovery assessment is danger. Why danger? HMRC is doing an audit on you. When HMRC comes after an audit, it will be a criminal issue. You got it? It's not good for your company. It's not good for your marketing. Now let's assume if tax authority goes behind dialogue, which means dialogue is not complying. So the customers of dialogue is at risk now. You don't know when dialogue will go out of the market. But for the other competitors, it's a opportunity. Did you all learn Porter's 5 module? Have you learned Porter's 5? Not yet, no? Business studies you might have, no? Business and technology paper? Have you? And market entry threats and all the opportunity, all those things? Okay, fine. So those things will come into play in your other papers, SBL especially, and performance management. Okay, fine. Right. Corporation tax penalties. If you are filing your return late, up to 3 months they will charge £100. But if you are consistently paying late, means first month they will charge £500 up to 3 months. Okay. Between 3 to 6 months late, additional 100. So this 100 plus another 100, so 200. Between 6 to 12 months, 10% of the tax due and the 6 months date, which means 200 plus this 10%. Then 12 months late means more than 12 months, 10% of the tax due at the 12 months date, which means this 200 plus the 10% that you calculated for 6 months plus another 10% on the months that you are delaying. That's how they are going to charge the taxes. So I have sent these documents for your reference. You can go across and practice some questions and try to apply this knowledge. Okay? I mean your exam kit questions I'm talking about. The notes as well. I think I can send. Wait, we have few things to go now. Okay. Now this common penalties is same as the genuine mistake, means no charges. Deliberate careless, those 70, 130 is the same thing, which we studied for income tax. That this grid will be given in your tax rates and allowances. See, this grid will be given in the tax rates and allowances. That depends on the taxpayer's behavior, they will charge taxes. So that will be given to you. So no need to memorize that. Then so that the same thing, it's repeated for inheritance tax apart. Okay, fine. Okay, let me check if I can send it to you. Yes, I can. Sure. Hold on. Where's the share option? Yes. So give me a moment. Can share it to your WhatsApp group. That's your April batch, no? You guys are.
I'm not in that group.
You're
In the chat.
Gen group and yeah, to Riskan also. This Riskan will also fight with me. Riskan. Riskan, I'll send it to you later, okay? I can find your name. Right, it's sent from my records, okay. Now, before we wind up for today, now shall we quickly pray and come? I didn't pray it yet. Okay, so have you visited your practice platforms? Okay, so I need to assign. Select the variant needs to be United Kingdom, okay? Type past exams, assignments. Whatever. Text. So for an instance 24, 25. Let me assign this 24, 25. Assign this. Okay. I'm just wanted to show you the platform. Is it loading? I hate sometimes. Promise 25 is there. Fine. Yeah. So please don't close the exam. I wish to continue exam. Okay. Just wait for some time. It's not loading. I don't know why it's loading. Any idea about it? This is syllabus. I was able to open the other day. Please wish to confirm yes. Why is taking so much of time? Please do not close the window if you wish to continue the exam offline. Okay, give me a moment. I don't know whether it will run. It's okay. Till it runs. So I want to discuss a bit about inheritance tax. So when it comes to inheritance tax, so this is a type of tax which is charged on gifts transferred by individuals, correct? So it can be during the lifetime and or at death. Okay. So when it comes to inheritance tax, a person can transfer his wealth or the estate. Either a person can transfer his estate to an individual or to a trust. He can transfer his estate to whom? To an individual or to a trust. So the transfers which are made to individuals, we consider or we call it as PETs, potential exempt transfers. The transfers that you are making to trust is what we call it as CLTs, chargeable lifetime transfers. Okay. So now you need to understand this inheritance tax is having 3 stages. How many stages? 3 stages, which is stage 1, stage 2 and stage 3. In the stage 1, only CLTs are taxed. In stage 1, who is taxed? Only CLTs are taxed. In the stage 2, so stage 1 is generally during your lifetime. So whose lifetime? The person who gifted transfers lifetime. So transferor is still alive. So he has given a gift to a trust. As soon as he is giving a gift to a trust, during his lifetime, this becomes taxable. During this lifetime, this becomes taxable. Now, during this lifetime, you need to make a choice who pays the tax. Who pays the tax? Is it the trust is bearing the tax, or is it the transferor? Is it the transferor who is bearing the tax? If the trust is bearing the tax, they will pay only 20% during the lifetime of the gift. If the transferor is bearing the tax, he will pay 25%. Now, during the lifetime, you need to determine your gross chargeable amount. You need to determine what? Gross chargeable amount. So when you are determining your gross chargeable amount, to determine your gross chargeable amount, first of all, you need to take the value of the gift. Correct? So value of the gift. So let's assume x. Then is there any exemptions available? If there are any exemptions, so what are the exemptions that is available? Spouse exemption, marriage exemption, okay, gift out of income, annual exemption, then small gift deductions. These are the 5 exemptions available. These are the 5 exemptions available. So you need to understand, does it qualify for this? Now, for a CLT, I'm talking about a chargeable lifetime transfer. Will you apply small gift deductions? Will it apply? No. That is for individuals. Only for PETs it is relevant. Sorry. Then, marriage exemption, can you give to CLTs? No. Spouse exemption, can you give to CLTs? No. So, common sense. Gift out of income, will it be applied? Considerable. Okay. Then, annual exemptions, will it apply? Yes. Annual exemptions will be applied. Then after this, you determine your transferable or chargeable amount, I would say. You determine your chargeable amount. So the exemptions applicable to them is mostly your annual exemption. Mostly it is going to be your annual exemptions. Then you determine your nil rate band. So I will talk about this nil rate band in a while. Once you are determining that, now only you need to decide what is your gross chargeable transfer. What is your gross chargeable transfer? So I will call this as GCA. So when you are determining your GCA, okay, if trust is paying the tax, who is paying the tax? If trust is paying the tax, so at this point during the lifetime, if the trust is paying the tax, then if I say this as A, the gross chargeable amount as A, the final gross chargeable amount is also going to be A. Okay, this is the figure you need to consider. If the gross chargeable amount is paid by the transferor, then your gross chargeable amount is going to be the 25% of the tax which is paid by the trust. So if I say it is B, so A plus B is going to be your gross chargeable amount. The gross chargeable amount is going to be what? A plus B. The gross chargeable amount you need to determine each and every transfer. After each and every gift, when you are determining your lifetime. So that is your stage 1 calculations. So in the stage 1, technically you are going to pay only 50% of your inheritance tax, because you are paying 20%. If trust is paying, they are paying 20%. The other thing, if the transfer is paying, means he is bearing 25%. Later that is topped up to gross chargeable amount. That chargeable amount will be paid in the second stage. So when you are moving to the second stage is concerned after death. Second stage is concerned after death. So in this situation, in your second situation, CLTs also become taxed. PETs also will become taxed. Both of them will be taxed. So this is the first time the PET is getting taxed. Okay. However, PET can utilize the annual exemptions during the lifetime. PET can utilize the annual exemptions during the lifetime. So I want you all to go through all the activities I did with you. Then during your stage 2, you have the same point. You have your gift, the value of the gift. Let's assume it is 100,000 example. And you will have your annual exemption. Let's assume this is gift to a trust, it's a CLT. So annual exemptions, let's assume we are claiming 6,000. So your gross chargeable, your chargeable amount is how much? 94,000. And you have a nil rate ban. Now I am going to talk about the nil rate ban. Stage 1 also this is applying. Now this nil rate ban, there is a rule called 7-year rule. What rule? 7-year rule. Now first of all, this 7-year rule applies to nil rate ban, as well as there is another 7-year rule which will be applied after the person is dead. So this 7-year rule is applying. Now for an instance, let's assume if I am making a gift in 2015. So your nil rate ban at this period is 325,000. So during 2015, out of this nil rate ban, let's assume you have utilized 25,000. So your available balance is how much? 300,000. So right after this, in 2020, I am making another gift. That is this gift of 100,000. Let's assume. So which means the total nil rate ban at this point is 325,000. So you need to check, have you used anything 7 years before? Anything that you have used 7 years before from this date of the gift. So this date of the gift was 2017. Have you used it? Yes. 7 years before. Now this 2017 is falling under 7 years. Correct? So sorry, 2020 to 2015, it's falling under 7 years. What if it is happening in 2012? Will you consider? No. You will have a fresh 325,000. Every 7 years, this is resetting to 325,000. Every 7 years. What is resetting to 325,000? Nil rate ban. So this nil rate ban resets every 7 years, but at the moment only 300,000 is available. So in the past 7 years we have utilized 25,000. At the moment it is only available how much? 300,000, but I don't want 300,000. I need only 94,000. So when I utilize this 94,000, nothing is taxable. So even the CLT doesn't become taxable since you are using the nil rate ban. However, you can't leave that. You need to find your gross chargeable amount. So what is the gross chargeable amount? the gross chargeable amount is going to be this 94,000. How much? This 94,000. Will I take that 25,000 which I balance brought forward? That will get expired because 7-year rule will take off that. Okay. So now this gross chargeable amount is why 94,000, because no one is supposed to pay taxes for this, because the taxable amount is 0. Even the trust doesn't want to pay taxes, or the transfer if he is willing to pay taxes, no one needs to pay taxes. Okay. Now let's assume this is 2020. In 2023, you are giving a gift to PET. Okay, and let's assume in 2023 the person is dead, because the pet will become liable in 2023, correct? So you are giving to a pet, let's assume 400,000. How much you are giving? 400,000 worth of pet is there. Potential exempt transfer. So this potential exempt transfer, you will claim annual exemption. How much? 6,000 you can claim by current year plus the previous year, unused previous year. So this will be 394,000. So can they use nil rate bands? They also can utilize the nil rate bands. So nil rate band is 325,000. So which means you need to see last 7 years have you used anything. Last 23, last 7 year is also falling under 2020. So which means the gross chargeable amount is 94,000, correct? From 325, if you remove 94,000 is how much? How much is that? 325 minus 94. Can you give me the figure? 232. 31. So this time I have only 231 worth of nil rate band to utilize. So from the gross chargeable amount, the chargeable amount of 394,000, if you remove 231, what's the figure? What's the figure? 163. Now this 163,000 needs to be taxed, correct? So this is the taxable amount. So this taxable amount, who will pay taxes at this point? The person, the pet. This, let's assume this is son. So son needs to pay the taxes, correct? Because the person who gave the gift is dead, no? Can he pay? He can't. Then son needs to pay. This time what is the tax? Inheritance tax becomes liable on this 163,000 is 40%. How much? 40%. Right. What is that 40% of this? What is that 40% of this? 65? 200. Now after that you have something called taper relief. You have something called taper relief. Now the taper relief is calculated based on the number of years that you are old of the gift. That is decided from the date of death. So this person is dying in 2023. So any gifts before 3 years old will be subjected to taper relief. How am I deciding that? Taper relief will be given to you in the exam. Tax rates and allowances. Now see, if your gift is given more than 3 years but less than 4 years means you get a reduction of 20%. In my example, this person is passed away on the same period, correct? Which means, where did I put that? Was it in this? This one, okay. Now, in this question, he is dying on the same year. So, from the date of death, how old is the gift is given? The same year. If it is more than 3 years old, then you get 3 to 4 years means you get a relief of 20%. From this 65 200 you calculate 20%, or sometimes it will be 40%, 60%, depends on the number of years it is old. Now in this stage nothing. So the IST liable is how much? 65 200 at this stage. Inheritance tax liability is how much? 65 200 at this stage. Okay. So if the gift was given in 2018, then what would be the nil rate band? Okay, good. So now let's assume, let's go to some practical examples and we'll do a question. So then you also determine that what's happening. You understood the concept now? Stage 1 and stage 2. Stage 3 is different. Stage 3, once the person, that's also death, after death only. Now at that point, now for an instance, let's assume you are not making any chargeable lifetime transfers or PETs. You would have been made, but still there will be some estate left, right? Now your main residence, to whom it belongs to. If you are giving to your spouse, it is exempted. You got it? If you are not giving to your house, you can claim residence nil rate ban. Because already spouse is utilizing the exemption, means you don't want to claim it. Now these rules we discussed. So make sure you are doing all the activities now from this. It's important. Finding the activities, make it on Tuesday. Do the activities in inheritance tax. Go to the past paper question. Then read. Now you will get lost in certain areas. Then try to ask me. You got what I am trying to say? Okay. So let me quickly browse a example for you. Do you see chapter number 21? Yes. Okay. So let me take you through. Okay, so let me do the activity 4 with you all. Now see, Mr. Rich is a married man whose wife is still alive, made the following gifts during his lifetime. The nil rate band they are giving, it's 325 since April 2009. Calculate the inheritance tax on the chargeable lifetime transfers. So this person is still alive, he is not dead. So he is making transfers to a trust. Now this is a CLT. So therefore Mr. Rich is paying the inheritance tax. Then in 2018, this is happening in 2012. This is happening in 2018. He is transferring to a trust again, a CLT amount. So then he is transferring 150,000 to his son. That is a PET. Then in 2024, he is transferring to a chargeable lifetime transfer. So now we need to prepare the inheritance tax that we need to pay during the lifetime, which is stage 1. Okay, so let me help you to determine. See, at this point, so first of all, make sure you are taking the date. It's very important. So first gift is given to trust in January 2012. So in January 2012, you're making a CLT worth of how much? 335,000, correct? 335,000. So will you have any exemptions? Now this is 2012. So you will have annual exemption. So annual exemption, you need to use the current year first, which is 3,000 and the previous year which is unused. So previous year is going to be 2011 period. So that is unused, another 3000. That's how we are claiming 6000. Okay. So now if you reduce this, this is going to be your chargeable amount. So that's how much? 335 minus is 329,000. Now you need to determine your nil rate band, correct? So nil rate band available is 325,000. So have you used anything before 7 years? So 7 years prior, have you used anything? So 2012, this is the first gift, no? So before this, they haven't given any information. So which means you have not used anything. So entire 325 is available. So I'm going to use entire 325,000 here. Correct? So which means my taxable amount is how much? Only 4,000. It's how much? Only 4,000. Now tell me, who is paying the tax? That is given. Mr. Rich is paying the tax. So Mr. Rich is the transferor. So if during the lifetime, if transferor is paying, he'll pay how much? 25%. So the IHT is paid at 25% because Mr. Rich is paying. Correct? So since Mr. Rich is paying, 25% of this 4,000 is going to be 1,000. Correct? Right. Now this is the first gift. After the end, you need to find what is the gross chargeable amount. Gross chargeable amount. So how to find the gross chargeable amount? This 329 plus who paid this tax? Mr. Rich, the transferor. So which means this 329 plus this 1,000. So it is going to be 330,000. I'll tell you why. So this is the gross chargeable amount as of 2012. Correct? Now I'll tell you the benefit of calculating this. Now when you are making the second gift, you are making the second gift in 2018 August. So 1st of August 2018. So in August 2018, you are making another transfer to a CLT. So CLT, in lifetime you need to pay taxes. So how much you are transferring? 250,000. So this time you are transferring 250,000. Do you have annual exemptions? Current year 3,000 is there. This is 2018. In 2017, have you given any gifts? No. So which means previous year is unused. Another 3,000 is there for me. So this will be 244,000. This is my chargeable amount. Now Amra, your question doubt will be answered. Okay. Now what happens? You need to calculate your nil rate band. So nil rate band available is normally 325,000. Now you need to check, have you used 7 years prior? Have you used anything 7 years prior? Have you used it? Yes. So 2018, 7 years prior, 2012 will be falling, isn't it? Because that's 6 years before. So the chargeable amount is 330,000. Now see, I have already utilized this. So this time I don't have any nil rate band to utilize because we have utilized it full. So this 244,000 becomes the taxable amount. Is 244,000 becomes the taxable amount. So now what happens at this situation? What is your inheritance tax that you need to pay? Now this is lifetime inheritance tax. You need to see who pays tax. This time trustee is paying the tax. So if trustee is paying, you need to charge at 20%. So 244's 20% is how much? 48,800. 48,800. 48,800. 800. So if you're charging tax of 20% means 48,800. So now who can tell me what is the gross chargeable amount? The gross chargeable amount is going to be 244,000 itself. Is it going to be 48,800? No. Will I add this 48,800? Why? This tax is paid by the trust, not the transferor. If transferor is paying, add it. If trust is paying, don't add it. This is for the stage 1 during the lifetime. Okay? Even in the stage 2, same principle. You need to decide who pays the tax. You got it? Now, the next point, so there is another gift, right? So let me also show that to you all. So the next gift is made in 2023. So in 2023, you're making a gift to whom? Son, 150,000. Okay, now this is a PET. Do you have any annual exemption to use? Yes. 2022 and 2023. So 3,000 here and 3,000 here. So which means 144,000 is the chargeable amount. But do you need to pay taxes during the lifetime? So no need to calculate the nil rate band, okay? So no need to calculate the nil rate band here, because no taxes for PET during lifetime. So 0, tax is 0. Okay, did you understand that? Make sense? Okay, fine. Now, so what? Why we have to take gross chargeable amount for nil rate band, not chargeable amount? No, technically we are trying to identify the gross chargeable amount to determine how much nil rate band is available for us. Okay, so that's the reason why we are getting. Yes, that's correct. Now before I give you more concepts and ideas, what I want you all to do is you have to go through the theories again. This is not the time to learn the theory. This is the time to learn the techniques. So tonight you are going to work out administration questions. Tomorrow also you can work out administration questions. Then Tuesday go through inheritance tax questions. So I'll meet you again on Saturday. Saturday 9 o'clock I'll meet you. So during that period I'll be discussing a past paper question on inheritance tax, companies tax and value added tax, especially 3 past paper questions. Okay.
No paper due for lifetime.
No, tapered relief is calculated not in the stage 1. Tapered relief is arriving in the stage 2 once the person is dead. Okay, that's right. That's the problem. Now see, the theoretical aspect is not there. I can teach you that now. Now it's going to be a theory class. Then I can't do questions. You got it? It's okay. Now you are going to revise it. You know where you are weak. So your gray areas is identified. Now if you don't study by Tuesday, then it's a loss for you. I can't help from there. Because Saturday I'm going to talk techniques. I can't speak theory. No point of speaking theory. Because once you go to the exams, they won't test you like this. Trust me. Now I'm doing an activity here, no. So they won't test you like this in the activity. You need to have more implications there. So they are going to ask you a question from overall. So what you need to do at home, practice all these activities and understand the concepts. Why we are using this here, why we are using this here. That homework you need to do it. You got it? Go through it. You might find difficult. I know that it's not easy. There can be certain areas that you need to refer to me. That point I'll give you a detailed answering. Okay? So make sure you are trying to kill the inheritance tax by Tuesday, and administration part tonight, and tomorrow you are done. So you are ready for exams. From there onwards, I told you the way to practice, right? 5 questions thing. That needs to happen every day. Starting from better tonight. If you are tired, go through administration part today. From tomorrow, full-time students, 5. The 5 techniques I told you. What you need to do first? All types of taxes, section A and C mixed. ABC. Then every day, all types of taxes you need to do. You will come out with so much of doubts if you do not have proper theory. So which means this whole week, theory plus questions, theory plus questions, theory plus questions. Next week only questions. You got it? If you do not utilize in that way, you don't have time to revise your theory. It will be too much heavy to your final exams because we got only 2 weeks. Leaving next week, we got only 1 more week to go. So that week you need to practice more and more and more. Okay? Fine. Understood the plan? Please work to the plan so that we can get through this paper quick. Because I know that for tax paper, see, so much of things to remember, so much of calculations to remember, so much of implications to remember, so much of efforts is needed. That effort is important because it's, see guys, if we fail this paper by any chance, no one should be in that stage, but I'm saying that 2 sides of the coin, right? We need to repeat this again, such it again, correct? Fact, no man. If I were you, I will also face the same thing only. Doing the exams and studying tax paper again means it's a disaster. It's kind of a overloaded thing. Remembering that this, now what happens after September 2nd, you will nicely chill. Right, before that, guys, we need to organize a tour. After your exams, I'll drop a message in the council, like everyone respond, and we'll organize a tour and go. PPIM tour, an excursion. Okay, so for that I need everyone's support. So let you finish your exams first. That's why I didn't do anything. So once your exam is done, I'm also free in September. So let's go some. I also need some relief. Okay, fine. So not only your batch but entire everyone. Okay, so tell your friends as well to kill the paper quick, and we'll make a tour soon. Yeah. You will need my help, and you guys are my priority. No worries. Keep sending your queries. For the queries whose questions were not answered, right away just drop me a message. So you are supposed to reply to this. Okay? Because on the way, today I'm traveling back, so I can see some of your questions and answer. Okay? So all the best then. I'll see you on next Saturday. This part. Request my Kandy recordings. The latest batch I did Kandy recordings, inheritance tax. Request that and see the calculations there. So you can forward and see the activities, then you can get an understanding. Request that now so that they will give the access tomorrow to the support thing. Access it. If not, give them a call and tell that I wanted you all to get access to inheritance tax Kandy recordings.
If I just WhatsApp them.
See, if they do today, they won't respond because everyone is on leave. But by tomorrow, if they are not responding, call them, and if they say something, just let me know. Okay. Sorry. Because Yusuf came in March. No, you didn't sit in March. March we did the March we did the same. Fine. March exam or January you joined?
June exam
Rates are changed. Personal allowances.
June is supposed to be for
June. Okay, fine. The other disaster is that
Yes.
the rate changes. Not only rate, rules changes is rate is okay. The percentage no only changes. Rules changes. Now see this transactional profits and then ECA things. These things you don't have a past paper question. How they can come after you? Through activities only we need to understand. We should have the conceptual knowledge to apply. So it will consume bit of time in your exams also, because you need to read, understand what needs to be done. Quickly you can't evaluate things unless we are strong in that area. So that's why I love the administration part. You know that if you are strong now, you have to be very smart to score yourself. Administration they can't change no. As it is, they have to give it. Unless they are making the changes to the tax, they won't change those things. It's a disaster for them also. Okay, so make sure you are good on those areas. Sorry guys. Okay, I'll send it to you. Okay.